Good morning, everyone, and welcome to the Battery and Critical Metals Day of the event, sponsored by Kinterra Capital. Once again, I would like to thank all of our new and returning sponsors for their support of the event. Remember that this evening we will be returning to the Diamante Lounge for our fabulous sponsor and cocktail Korshak event. And then please join us for cocktails from 9 to midnight for the After Dark event this evening. And now, it is my great pleasure and honor to introduce Pierre Fitzgibbon, the Quebec Minister of Economy, Innovation, and Energy. Please help me welcome the Minister.
Bonjour tout le monde, bon matin. Madame Jobin, qui est la fondatrice et l'organisatrice du Mining Investment Event of the North. Alors, distingués invités, je vais parler en anglais et en français, si vous me permettez. Alors, ça me fait plaisir d'être ici avec vous aujourd'hui. Je tiens à souligner d'emblée le travail de toute l'équipe derrière l'organisation de cet événement. I'm very happy to be with you this morning for the opening of this day dedicated to critical and strategic minerals. As the energy transition and the electrification of transportation accelerates globally, the demand for minerals is, of course, very strong. In Quebec, we're privileged to have all the critical and strategic minerals necessary for battery production that will contribute to electrify our economy. Pour que l'exploitation de ces ressources soit viable, profitable et responsable, on a mis en place le plan québécois pour la valorisation des minéraux critiques et stratégiques 2020-2025. C'est un plan qui prévoit des investissements de plus de 100 millions de dollars. Le but, c'est littéralement de faire du Québec un leader de la production, de la transformation et du recyclage de ces minéraux. On veut être attractif pour nos ressources et pour la façon dont elles sont exploitées. C'est un objectif qui est ambitieux et qui occupe ma collègue et ministre des Ressources naturelles et des Forêts, Mme Maïté Blanchette-Vézina. De mon côté, comme ministre de l'Économie, de l'Innovation et de l'Énergie, mon objectif est de m'assurer que l'exploitation de nos ressources crée de la richesse collective tout en décarbonant le Québec. On doit utiliser nos ressources de manière intelligente et responsable pour créer de la valeur ajoutée. Au Québec, l'industrie minière représente environ 30 000 emplois et contribue à la hauteur de 8 milliards de dollars au PIB. C'est essentiel de soutenir la croissance du secteur. Our vision is clear. We want Quebec to be carbon neutral by 2050. It's very ambitious. And in order to achieve that goal, we need to drive innovation. Developing our strategic sectors, like the battery industry, is essential for decarbonizing our economy. It's also essential if we want to catch up to our neighbors in terms of our GDP per capita. Mines are a crucial and strategic sector for Quebec's future. It's generating significant economic benefit for local and Indigenous communities. Our soil is rich with minerals such as lithium, nickel, graphite, phosphate, high-purity iron, among others. With our strategy for the battery sector, we want to extract and transform our minerals for use in a comprehensive and complete supply chain. We also aim to increase the production of commercial electric vehicles and develop battery recycling through innovative technologies. We have been successful so far to attract global players such as GM, Ford, EcoPro, POSCO, Volta, and Nordvolt, among others. I also made this week an announcement at Lithium Technology for the first commercial recycling plant to produce black mass out of electric batteries. We will continue to work to attract other major players to Quebec and enhance our value chain. We are building a sector that will ensure our competitiveness and stimulate our economy in the long term. We will manufacture in Quebec the greenest and cleanest battery in the world, and I'm truly proud of that. Pour que le secteur minier alimente efficacement la décarbonation et nos secteurs stratégiques, il reste du travail à faire. Du côté du gouvernement, on doit être plus efficace en ce qui concerne l'encadrement et l'exploitation de nos ressources naturelles. On doit revoir nos processus d'approbation et réduire les délais pour être plus compétitifs. À ce sujet, on s'est déjà engagé à réduire la paperasse et la bureaucratie. On dépose d'ailleurs un projet de loi chaque année à ce sujet. Récemment, avec le projet de loi de mon collègue Christopher Skeet, on a adopté 41 mesures sous la responsabilité de 8 ministères. Ça touche, entre autres, le secteur minier. Ces mesures permettront à plus de milliers d'entreprises de profiter d'une économie annuelle de millions de dollars. On doit continuer d'être efficace. On doit maintenir notre réputation de partenaire fiable, éthique et durable. Ça passe par un encadrement rigoureux pour l'exploitation de nos ressources minières. Mais on veut aussi appuyer les entreprises minières à intégrer des technologies novatrices dans leurs pratiques. De plus en plus d'entreprises minières utilisent l'automatisation dans leur processus. On voit maintenant des camions autonomes qui transportent le minerai. C'est encore nouveau. Les entreprises prennent le temps de bien tester cette technologie d'avenir. Mais le potentiel est là et je suis convaincu que l'automatisation va prendre une place croissante dans l'industrie minière. L'innovation technologique, c'est la clé pour l'avenir de l'industrie. Récemment, j'ai participé à l'inauguration des nouvelles installations de MSA Labs à Val-d'Or. C'est un bel exemple d'innovation technologique. Ce laboratoire va permettre aux entreprises d'exploration minière d'avoir un accès plus rapide à l'analyse d'échantillons miniers. La technologie d'analyse n'émettra aucun GES et éliminera le plomb du processus. Notre gouvernement a à cœur d'encourager des projets qui réduisent l'empreinte environnementale de l'industrie. Je pense à notre soutien pour la production de boulettes à réduction directe qui contribue à bâtir une filière de fer plus verte. C'est une méthode de production moins polluante pour les aciéries qui permet de produire de l'acier sans émission de GES lorsqu'on utilise de l'hydrogène vert. Au Québec, on est bien positionné pour contribuer à ce virage avec l'usine d'ArcelorMittal à Port-Cartier qui va produire uniquement des boulettes à réduction directe dès 2026. On doit multiplier ce type de projets qui font croître l'industrie minière tout en décarbonant notre économie. En combinant notre énergie renouvelable et nos minéraux critiques, on peut structurer des filières clés de la décarbonation comme celle de la batterie. D'ici la fin 2024, on souhaite dépasser les 20 milliards de dollars d'investissement dans la filière batterie au Québec. Notre écosystème d'innovation continue également de se solidifier avec notre zone d'innovation de la vallée de la transition énergétique en Mauricie et au centre du Québec. Avec cette zone, le Québec va consolider sa place de leader pour stimuler l'innovation de la filière batterie et l'électrification des transports. Et il va y en avoir d'autres. L'écosystème minier de Rouyn-Noranda se mobilise autour d'un projet d'innovation axé sur l'exploitation responsable des minéraux critiques et stratégiques. Le projet se développe et est en cours d'analyse. On a le potentiel, les ressources, le savoir-faire et surtout de grandes ambitions. Je me suis fait reprocher de ne pas avoir encore reconnu ce projet comme une zone d'innovation, mais mes équipes et moi, on estime qu'il reste du travail à faire pour solidifier des partenariats privés pour en faire une vraie zone d'innovation de calibre mondial. Avant de m'arrêter, je tiens à vous redire qu'on a besoin de vous pour valoriser et exploiter durablement ces minéraux qui font la fierté de tout le Québec. L'industrie minière est un partenaire essentiel d'un des plus grands défis de notre génération. Thank you for being here et bonne conférence. Merci.
Merci, beaucoup, Monsieur le Ministre, pour vos propos toujours pertinents. We're running a bit ahead of time here, guys, so we'll take a short break. Everyone can refill their coffee, and we'll be back on schedule at 8:30. Thanks. Bonjour à tous. Good morning, everyone. Nice to be with you here today. My name is Thomas Bachand. I'm a Managing Director in Investment Banking at National Bank Financial. I'll be acting as your host for this morning's session. So without further ado, and to kick things off, I'm pleased to welcome Jeff Smith, Vice President, Corporate Development and Commercial of Denison Mines. Dennis.
Thank you, Tomas, and thank you to our hosts at the Mining Investment Event of the North. Denison is certainly situated in the north. Our primary asset base is in northern Saskatchewan, and we actually have 70 years of uranium mining. So operating in the north is what we know and what we've known for a long time. And okay, certainly today we'll be making forward-looking statements. Just caution you to advise and review the advisories. What I think is particularly exciting about our asset base, and it's not an asset, it really is a portfolio, is we offer, in our opinion, superior and really the best leverage to uranium within the Athabasca Basin. I don't have the details exactly, but this morning we're happy to see that the Mining Journal actually identified our flagship Wheeler River project as the #1 development stage project in the world. And so while we think it's certainly spectacular, it was certainly encouraging that others had recognized that as well. With the Wheeler River project, this is the largest undeveloped project in the infrastructure-rich eastern portion of the Athabasca Basin. For those that aren't familiar with uranium, Athabasca is a long-time established mining camp in northern Saskatchewan and really the preeminent global basin for uranium mining. The Wheeler River project is one that we've been advancing for many years. It consists of 2 distinct deposits. The first, Phoenix, which is called the flagship among the flagship assets, is a in-situ recovery. So ISR is really a known and proven mining method, but one that nobody else has brought to Athabasca before. So certainly we're innovating from that perspective. Our second deposit at Wheeler, Griffin, that's a traditional underground drill and blast operation. So at Phoenix, we've been de-risking the ISR as the first ones to bring ISR to Athabasca really for the last 6 years through progressive studies. We had a successful field test in 2023 where we recovered uranium from ISR mining for the first time in Athabasca. We followed that up with a feasibility study in 23. We've started long lead procurement, advancing on project financing. Detailed design was initiated this year, and really are moving this project forward to make a final investment decision in mid-25. We have a 2-year build, so we're targeting first production late 27 into 28. The next asset in operation I want to talk about, the McLean Lake mine and mill. And this is a mill that's certainly well known within the mining space. It produces 11% of global uranium. Importantly and notably, Cameco Cigar Lake operations, all of its feed goes through there. This mill is the only one that processes third-party ore within the basin. So when we think about having strategic infrastructure, this really is a strategic infrastructure asset and one that we think is going to be important for unlocking value through the rest of our portfolio. We did surprise the market a bit this year, and we're happy to do so when we announced the restart of mining. At the McLean Lake operations, there actually are unmined deposits. Mining took place between 96 and 2008. When the market turned, there were some smaller deposits were shut down. That really didn't make sense with conventional mining methods. So over a number of years and at great expense, Denison, along with our partner Rana, which is the French nuclear giant, we developed the proprietary SABRE resource extraction method, which is really effectively water jets from surface and cutting up rock and then sucking it back up specialized pipes. And so that's been de-risked and brought forward to a certain level that we're confident in restarting operations next year. While the production is small, 100% of operations being 800,000, we certainly think it's indicative of the value that we can create with assets that others may have overlooked or not been able to realize value from. And so with the first two operations we're talking about so far, each of those would be unique tools within the toolkit, both ISR and SABRE, to really develop uranium assets in the basin. Waterbury Lake, this is the second project that's had a successful ISR field test in the Athabasca Basin, Phoenix being the first. And again, it shows how we're trying to use proprietary and new novel thinking to develop resources that others may have passed or not been able to fully realize the value from. Beyond those three, we have a large portfolio, over 385,000 hectares within the basin, including notable projects like Midwest and Millennium. So where do these assets fit globally on a cost curve? We're happy to be able to show 3 Denison operated projects that would all be considered tier 1 assets from a global perspective. I mean, Phoenix at Wheeler River at $16 all-in costs, and all-in being initial CapEx, sustaining CapEx, OpEx, closure. If we put that in context of a $90 uranium price, certainly that's significant margin potential. And then if we look at the other projects that surround it on the lowest portion of that cost curve, you'll see the 3 gray bars all being ISR. So in situ recovery is the lowest cost form of uranium mining, and certainly having the lowest cost non-Kazakh asset, we think probably contributes to one of the reasons the Mining Journal identified us as a top development asset globally across mining commodities. But also our Wheeler River project, while it's not ISR, as an underground operation, it compares very favorably with world-class assets. The light green arrow, that's NextGen's project. It's a phenomenal deposit, as are the other 2 green bars, Cameco's McArthur River and Cigar Lake. So we really see us having the platform to create a multi-asset, low-cost intermediate producer. So one might ask, how does a development stage company take on an ambitious task of developing multiple assets? Well, we're very comfortable that we have the financial firepower to do so. Our balance sheet is over $400 million, consisting of cash, working capital, notably physical uranium and investments, and importantly, 0 debt. The largest piece of this balance sheet is our physical uranium. In 2021, at $29.66, the company acquired 2.5 million pounds of uranium. That's tripled in value to where we are today, and really has significantly reduced any financing needs we have going forward. That, combined with $120 million of cash on the balance sheet, really have allowed us to advance into the early production procurement phase, continue de-risking, and give us a great degree of balance sheet strength and confidence as we move these projects forward. So now just drilling in a little bit more into Phoenix and perhaps why it was identified as such a top project. Recall we said ISR is the lowest cost mining method for uranium. Traditionally, when ISR is utilized, it's at very low grades, sometimes call it 0.05% uranium. Well, Phoenix has ultra high grades at 46%, within our high grade area, which is the majority of our deposit. So we're talking about, 500 to 1,000 times the grade profile of a lot of other ISR operations globally. So when you have a low-cost method with ultra-high grades, and we all know grade is king, you get superior economics. So we're proud that we have $1.5 billion NPV, and that's done at a much lower uranium price than we are today. A 90% ISR, and importantly, call it capital efficiency with a 3.7 to 1 NPV to CapEx ratio. And for context, again, $16 all-in costs, $6 cash costs, and that's even lower in the early years. So when you have a $6 all-in cash costs, production that quickly ramps up to 9 million pounds a year, you can see how there's significant cash flow generation potential. And so based on our feasibility study, and again, lower prices than we are today, 100% of the CapEx is paid back in 10 months. We are not going to borrow 100% of our CapEx. We've borrowed none so far. So when we think about how long we may be paying back any debt or repaying the capital, we're talking a matter of months after we start production. So really that positions us uniquely to be able to build those subsequent assets and having that capital available. The next in queue, 3 kilometers away, also at the Wheeler River property, is the Griffin deposit. this is certainly a distinct operation, conventional underground. The picture you see here is the McLean Lake Mill. And so while 1.7% grades is in itself high grade, it obviously is not 46% we have at Phoenix. But when you have an infrastructure-rich location with road and power already running parallel to site, there's going to be a camp and other infrastructure we're bringing to Wheeler through our Phoenix development, a mill that exists in place in which we have an ownership stake. You start to really chisel away at that CapEx number, and it becomes a very attractive operation and really synergistic, and that's how we view our portfolio. And at $25 all-in costs, again, one that we can make significant returns on. I'm going to talk about one more asset today, and this is our Midwest project. It really is a sleeper within the portfolio. It's a 25% owned joint venture, again with Orano, and so this is a similar ownership split that we have with Orano at the mill. It's located 25 kilometers away from the mill, so certainly the ability to have this ore processed at the mill is how this would be envisioned. And why I want to bring it up, on Monday we announced the third successful ISR test on a project within the Athabasca Basin, which confirmed hydrologic connectivity within the basin. Also some permeability enhancement tools that we've explored have shown success. And what that really has led us and our partner Orano to do is to support continued evaluation of ISR at Midwest, and we'll be advancing towards a PEA, and excited to be able to show the market some of the economics that we think are really going to be more attractive than how one may traditionally view a pre-production resource from, call it a dollar per pound resource perspective. In terms of the uranium market, for those that aren't familiar, I'll just be really brief. We exited a period, or exiting a period post-Fukushima, where there was significant glut of inventory, and really the marginal cost of production was not in any way connected to price. If you're living on excess inventory, that can only be something that exists for so long. The uranium market is operating in a significant deficit. It's a 30% supply deficit. And so every year that inventory continues to be drawn down, and that's really what we're seeing driving this big price inflection as we're starting to move closer to how traditional commodities are priced, which is a reflection of long-term cost of supply and demand, and how much supply do you need to bring on, and what's that marginal cost to incentivize new supply. And given a long period of underinvestment, we certainly think that incentive price is quite high and will continue to support robust markets moving forward. I'm just going to leave this slide up and pause. I don't know if anyone has any questions, but I'd certainly be happy to take any from the audience.
Thank you. What would the correct incentive price for you, like if you were to think about it and put it dynamically, maybe going the chart over, if you can, just your thought on, sorry.
Yeah.
Or, yeah.
Oh, I'll go back. Yeah. So,
but if you can answer that question, so where you believe, the market should be clearing, and that it'll balance the market.
Yeah, well, this chart is certainly instructive to know, ballpark where you should be thinking. If you look at the bars to the right side, all those assets, Immerern, and even on the top, that's supply that's needed. That's in Niger. A lot of the other orange bars, all Africa. You have high-cost African assets that are, costed on a pre-inflationary environment, and that does not include any incentive price. Frankly, we need projects that are higher costs that aren't on this chart to really balance the market. So is there a price? I mean, it's certainly 60 plus incentive plus new projects that are higher cost. We think it's going to be continually well supported. I can tell you I just came from a utility conference on the nuclear space earlier this week, and the big concern is where are the mines coming from? And it's all over the world. You're going to have to take on geopolitical risk. There's going to be higher risk assets. I don't think we've truly tested what the true incentive price is, because I'm not aware of a project that isn't that's identified, that's real from a technical perspective, that's been annexed because of cost. Okay. Well, thank you very much.
Thank you, Jeff. It's now my pleasure to welcome Keith Phillips, President and CEO of Piedmont Lithium. Piedmont is a global US-based lithium company advancing a multi-asset business to become a leading vertically integrated producer of lithium hydroxide. Keith? Michael, rather.
Bonjour. Unfortunately, that is the extent of the French native language I'm going to try today. So, and also, I'm Michael White. Our CEO could not be here today. I am our Executive Vice President and Chief Financial Officer. And so we'll review some key things about Piedmont Lithium and then open it up to any questions that anyone may have at the end. Same thing. The disclaimers we need to go through on forward-looking statements, those are on our website, so we won't go through any of those and bore you. Piedmont Lithium has been in business since 2016 and has been accumulating assets primarily in the North Carolina, US region. And we are a lithium producer, and so that comes in two components. One is in spodumene concentrate, which we mine spodumene through our joint venture partner today through an operating asset, which we are actually mining and selling that asset today and recognizing revenue and profit from, and that's out of Quebec in the Val-d'Or area. And separately within our portfolio, we have developing assets primarily in the United States and in Ghana, and as well as a planned lithium hydroxide plant in Tennessee in the US. And so I mentioned two components, first being spodumene concentrate that we mine and then sell, and then secondly as we advance toward the development of lithium hydroxide where we'll actually process that for the EV market. Again, Piedmont Lithium being a US-based company on the NASDAQ, also on the Australian Stock Exchange, having multiple assets. It's important to note that Quebec is the key location where we are operating and selling. Canada is one of the most mining-friendly countries in the world, and we very much embrace that relationship. We have a partner with Sayona Mining who is based here, and so our asset interest in North American Lithium here in Quebec is again 25%, but our economics of that is 50%, the greater of 50%, or 113,000 tons per year of spodumene concentrate. I'll move on from here. I talked about our 4 projects. I'll move to Carolina for a moment. That is where Piedmont Lithium started, and an interesting factoid, pretty much almost all of the world's lithium from the 1950s to the 1980s came from the North Carolina region. A very large company, Albemarle, is based there, and they have assets there as well as in Australia. And I note that because Piedmont is was uniquely founded with the strategic mindset of location. And I'm going to move to that quickly because location does matter. Within the mining industry, as you know, where it's mined, you usually have a concentrator, but where it actually gets processed is very different. It usually has to travel very far. Not always the case in Canada, but for assets in other places in the world, such as Australia, which today is where the majority of the world's lithium comes from for the EV and battery storage industry, just about all of that goes to China to be produced. And so if you think about North America, our asset based in Val-d'Or is the largest spodumene hard rock producing mine in North America. And today, a lot of that does go to China because that's where it's getting processed. But in conjunction with our partner, with the Canadian government, with the US government, we are looking to expand and actually keep those resources here in North America so that we can process that spodumene concentrate, turn it into lithium hydroxide, and keep those economics local. That is very important to us. Today, those capabilities for processing lithium hydroxide does not exist in a large capacity today in North America. So we are very focused on getting that capacity localized. And so when you think about other factors of why location matters, also think about cost to transport. Another is the national security of having those assets for the EV market. And then thirdly, cost. As we all know in mining, it's all about the transportation costs. Costs from mine to a port, to a rail car, to where it's going to get processed, ultimately to, in our case, a battery manufacturer, and then ultimately the OEM to put it in a car and sell it to a consumer. So lithium, it's interesting. Back when I think, I've been with Piedmont for 3 years, and when I think about lithium prices 3 years ago, it was in a trough, and it started moving at a very fast clip. And I think back to 2020 and early 2021, lithium prices were on a tear. In fact, it was one of the, if not the strongest element in terms of price from, I want to say commodity, but lithium is really not technically a commodity yet. There's very different grades of lithium, and so that market is evolving, and quite honestly, the Chinese markets really dominate the pricing, and it's very open to manipulation. That's another big reason from a national security perspective that it's important to bring this supply chain local. But when I think about lithium prices and how they were on a tear, I think back to, there's two key things here. One, I mentioned spodumene concentrate, and the second, lithium hydroxide. So spodumene concentrate about 3 years ago was about $700 a ton, and hydroxide was about $10,000 to $12,000 a ton. And then if you go back to the beginning of 2021, spodumene concentrate had gone from $700 to $800 a ton up to about $8,000 a ton. Huge margin. And then hydroxide had gone from about $12,000 up to about $80,000. You had people saying that hydroxide was going to continue going from $80,000 up to $120,000 a ton. You had some people saying it would crash. I have people asking me every time I have a conversation, where is it going? And I never know. No one ever knows. But that equilibrium of supply and demand is very important. And I'll move to that. And before I do, though, one thing to note, one good thing is from a pricing perspective, prices have rebounded. We have seen a marked decline of about 80% from mid last year to, I would say, about January of this year. A lot of rhetoric about where are EVs going, what's happening. Was it a bubble that burst? And so I want to talk about that here briefly. But the last point I want to make here is that from mid-January of this year to today, lithium prices have rebounded about 25%, give or take. So EVs, are we moving to it? What's happening? A lot of that really depends on where you're at in the world. If you're an American, you're seeing a slow growth, but if you're in Europe or in China, the growth is astronomical. I believe that the Chinese market is, from an EV perspective, they're selling 1 million EVs a month, and the growth continues on a very rapid pace. I remember back a couple of years ago, Mercedes came out and said that they were going to all of the cars that they were going to make for consumers would be electric vehicles by the year 2030. And then early last year, they came out and said, well, we're having a lot of trouble with our supply chain and getting the resources at a price that they could actually sell a car to a consumer and make money. There are labor unions who are pushing back on the move to EVs. If you think about an electric vehicle from a component perspective, the components within an electric vehicle compared to a gas combustible engine is a fraction. I believe it might be 20%, give or take, of the number of components that go into a gas car, and that could ultimately go wrong. And so driving an electric vehicle, until you drive one, you really don't know what's all the talk about. Why is it so great to have an electric vehicle? And so I'm not here to sell electric vehicles, but I am here from, if you're considering Piedmont, if you're looking at the growth of minerals for the electric vehicle and battery supply chain, then it's important to understand, well, where is that demand? And is that rhetoric, is it real or not? Because everything I read says that EVs have burst, that bubble is gone, and the world is changing in that regard, and it's actually quite the opposite. In fact, I don't know if it's on here. It is. I didn't know if we had replaced that or not, but look at the first one. Ford Motor Company reported sales of 8,000 electric vehicles in April of 2024, a 129% increase from April 2023. What's not here is that they actually had a decrease in sales for the gas engines in the same time frame. And so EVs are still on the rise. They're still moving. Whether we are an EV car buyer or not, it's still the push. And so that really transitions to the thesis for Piedmont Lithium. And when the downturn hit in the second half of last year, there was a lot of talk about, okay, are the mining companies within the lithium space, are they going to put their mines in care and maintenance? And quite a few did. We went through a process with our joint venture partner, Sayona, which is based here in Quebec. Public company, the corporate is in Australia, but the actual operations are here, local. And we went through a very rigorous process with our partner to determine whether or not we should put the mine in Val-d'Or in care and maintenance, and we decided not to. We decided that it is very important to stay the course and to bring our costs down. And so that's the number one focus that we have right now, is to continue mining efficiently and improve our production and utilization. But we very much believe in the trend that is occurring, even though that's not what I'm seeing in the headlines. But if you look at what the OEMs and the data that's coming out, the data absolutely supports the strong double-digit continued growth in the electric vehicle market. Here is a US-focused map, but want to highlight here that the energy transformation is very much focused on the east part, the blue area. It's a vertical blue area here on the right, and all the way down to what we see as the southeastern corner of the United States. So Piedmont has two main customers. One is Tesla, and the other is LG Chem. LG, you know Tesla. LG Chem, if you don't know, is the second largest battery maker in the world. And so we have offtake agreements with both of those companies for the asset actually coming local out of Val-d'Or. And so we ship to both of those customers as well as on the spot market from time to time. But you can see that all of the OEMs, battery makers, are very much focused on expanding their presence on not only the battery side, the cathode side, but also on the OEM manufacturing side, that it is very much coming to North America. There's very much a focus on bringing that national security, whether it's a Canadian national security, the US national security, but really that partnership between Canada and the US, and making sure that we keep those assets local. It's very important. And so really, one more thing to note here, from an economics perspective, I'd mentioned that most of the world's lithium comes from Australia, secondly from South America. Again, all of that goes pretty much to China. And if you think about the logistics cost and the timing, it's quite high. And so localizing that brings the cost tremendously down. We spoke about lithium prices. This is kind of a fun little page. Not so much in 2023 because lithium is down. But you can see that lithium, for some reason, seems to take the extremes. And it really is that case of where are electric vehicles going? How much lithium is needed? And it's not that the world doesn't have enough lithium. As miners, as we know, it's logistically, can we get there? Can we actually create, can we get transportation, electricity, camps for people to mine? Can it actually get out to a port or a rail car? And some of the large deposits of lithium in the world have been found in very remote places, and some places that are not friendly necessarily to Western economies. And so finding that local is important, but if history is any indicator of the future, as they say, I'm hoping in 2024, we've already had a 25% increase. If you're looking to get in the lithium market, I hope this is an indicator of the future, and hopefully this continues and stays on the up. Lastly, catalysts. One important thing to note, I mentioned North Carolina being where the world's lithium came from in the 50s to the 80s. We recently received our mining permit in North Carolina, which was a huge, huge win. We received that last month, and that had been years in the works. So we're very pleased for that, and we expect to continue on that path of growing that project, again in the development stage. But we'll not only mine, but we'll also produce lithium hydroxide on site in North Carolina. I believe my time is up. I appreciate your time. I don't see anyone at the podium for questions, so I'm going to adjourn given the time, and I appreciate everyone's attention this morning.
Thank you, Michael. Next up, I'd like to welcome our next presenter, Ken Brinsden, CEO of Patriot Battery Metals. Patriot is a hard rock lithium exploration company focused on advancing its large-scale discovery at the company's Corvette property in the James Bay region, and the company recently completed a $75 million equity raise. Yeah.
Bonjour, Mesdames et Messieurs, je prends le français, but it's fair to say that's about all you're going to get out of me, and you'll have to suffer through not only my Australian accent, but also my very poor French. But ladies and gentlemen, it's very nice to be with you. Thank you for your attention, and I'm looking forward to sharing a few high-level thoughts about where the lithium raw materials industry is headed, the important part that Quebec has to play in the growth of the industry, but in particular in support of North American and European growth, and also, of course, the important part that we think our Corvette discovery has to play in the future of the industry through North America and Europe. And given that there's not much time, I will keep it to a very, very high level. I think most people would understand now that the last decade was all about China and the growth that happened there. A really remarkable story about their investment in new energy, but in particular, the co-commitment that's represented by e-mobility, EVs, e-transport, and the batteries that are a co-commitment to that outcome. But what's important to understand is that as much as the last decade was all about China, it's fair to say that this decade is so much more about North America and Europe. And here we've chosen to show a really simple diagram about what's going on with respect to gigafactories that are either already in operation, under construction today, or planned, approved, and soon to be constructed. And the capacity that's being built out is really, really significant from a lithium raw materials demand point of view. That's just North America. But a similar phenomenon is unfolding through Europe as well. And an obvious question to ask yourself is, well, if the battery making capacity is already underway, then where is the lithium raw material going to come from? And this is where the challenge for the West becomes a lot more serious, because China's dominance of the industry today is, in effect, all-encompassing. If you're building gigafactories today in North America or in Europe, there is probably a better than 85% chance that the raw materials or the value-added raw materials are coming from China. So clearly that has to change. And this is where Quebec has an amazing opportunity, a combination of incredible endowment, a really solid mining jurisdiction, right up there with the best in the world. A framework that facilitates the development of mines of scale that are going to ultimately support domestication of the lithium raw materials and the value-added products that are required to backfill that capacity. And the good news is that it's all there, it's on display. So Corvette just being, I think, one example, but an important one. Corvette's a significant discovery in the hard rock lithium world. It's already the largest in the Americas. But I can assure you, as long as we keep drilling, the mineralisation envelope will continue to grow, because it's an incredible piece of geology. And that's what's inspired me to come, halfway around the world from Western Australia to be a part of the development of this new supply chain. It really is a phenomenal opportunity. And as I said, Corvette's going to sit right at the heart of it, because it has all the hallmarks of being one of the great ones. As I said, it's already big, but it's going to get bigger. And subsets of it are incredibly high grade. In the hard rock world, there's not many mines where you can go and mine blocks of 4-5% lithium. But our expectation is that that's exactly what's going to unfold at Corvette. It has some very, very high-grade zones. Most notable historical reference here to the Nouveau zone in our CV5 deposit. It's about 25 million tonnes at about 2.5% lithium. There's not many mines that can achieve those sorts of grades globally. So I think it's fair to say it's one of the good ones, and there's going to be more to come. When you think about what's required to develop a mine, you need infrastructure. And as much as a lot of the James Bay region is remote, at least remote from communities, it's not remote from infrastructure. In the case of the Corvette discovery, as the crow flies, we're about 40 kilometres away from the significant LG4 dam as part of the Hydro-Quebec scheme. We're only 13 kilometres from the Trans-Taiga Road. There's an airport, complementary power infrastructure, power lines, no problems with respect to processed water supply, I can assure you of that. And all of that's available at our doorstep. So really, really important elements that ultimately contribute to the future success in a mining operation. When you think about what it takes to operate a hard rock mine, the way the mineral presents in the ground is equally important as the scale. And I can assure you that not all pegmatites and not all presentation of spodumene, being the key lithium mineral, present the same way. But at Corvette, you have a confluence of scale, of course, scale in terms of total tonnes, but also scale in the pegmatite that you're actually mining to minimise dilution. So in the case of Corvette, it's not unusual to see widths in the range of sort of 30 to even up to 100 metres width. Clearly that's helpful for your mining enterprise. But the spodumene itself presents as very, very large crystals, really large crystal structure, and it's an unusual phenomenon. The conditions were perfect for the formation of very, very large crystals. The combination of temperature and pressure, absolutely ideal to contribute to large crystal growth, which in turn means it's easier to recover the spodumene. So for all the test work that we've done to date at Corvette, it's demonstrable that you only need dense media separation. You don't need flotation. And if you've ever, for those of you that have ever operated a hard rock lithium mine, you'll appreciate that flotation is hard. It's hard, and it's hard to achieve a decent recovery rate. It's expensive, and if you could avoid it, you would avoid it every day of the week. So to just have dense media separation for the purpose of recovery, it's a really important value add for the future delivery of a hard rock mine at Corvette. The other benefit, of course, is relatively low cost of power. And again, this is another key thing that Quebec can capitalise on. To show you just how stark that is, from where I come from, in the Pilbara region of Western Australia, power industrial users, power cost is about 40 cents per kilowatt hour. That's the Australian dollar version. As I understand it, Quebec power, industrial scale, typically less than 5 cents per kilowatt hour. So you can appreciate just how significant that competitive advantage is in respect of Quebec's position globally as to how you could compete on a global stage, and power being a key component to a future success. So we're deep into the development story now. As much as Corvette, it has still some amazing exploration potential, and that there will be a lot more discoveries there. We're into the development process at CV5. So in parallel to future exploration, future likely, I would say, future exploration success, we're now into the development cycle. With having presented our environmental approvals documentation late last year, with an expectation that as we sensibly progress our project, and especially in partnership with the Cree, we will be able to present our ESIA in the September quarter next year. In parallel with the feasibility study, there'll be about 2 years worth of assessment, and our expectation is that then you commence construction in the latter part of 2027, with production from the latter part of 2028. Now, an obvious question, and this is a particularly important point for the future of the industry in Quebec, is that there is interconnection between the combination of a hard rock mine producing concentrate and the chemical facilities that are going to value add that product so that it can make its way into a battery. Being conscious of this point, we are deeply engaged with the chemical industry and key players downstream to use if you like, the power in the Corvette discovery, massive scale, high production rates over multiple decades, as a key tool to underwrite future chemical development. So those conversations are a really important part of our future, but equally an important part of the future of Quebec's industry as a whole, because it's one thing to have domestic raw material supply, another thing to have the value-added chemicals that come off the back of that raw material supply. Now, the good news is, the really good news is, that the industry downstream is deeply engaged in that conversation, and they understand the significance of the Corvette discovery and its ability to underwrite future chemical facilities. So I can't help but note that Quebec is really well placed to be a key contributor to the future of the industry here in North America and in Europe. It's going to be a defining feature for industry here, mining, but also the value-added chemicals industry. So from here, what do we do? Well, we obviously focus on the development sequence at CV5. That's really, really important to us, and the team is working really hard to make sure that that happens, and within the timeframes that we've set ourselves. But CV5 is just the beginning. There's already been other significant discoveries at Corvette. CV13 is now notable, and that's an area that we'll be going back to drill because we've found another high-grade zone there. But really, there's more, because there's about 45 kilometres of key geology that was secured by the team back in the day when nobody was really interested in the lithium world. So it shouldn't be a surprise that the best geology was captured in that package of ground. Patriot was the first mover. They were able to select the best ground because nobody else was looking at it at the time. So it should not be a surprise that there will be more discoveries, and we're looking forward to demonstrating the potential in that ground. In parallel, we're deep into engagement with the local community, and the Cree are going to be a really important partner to the development of our project. We already have very, very high levels of employment at site in our exploration and civil and construction works that are underway at site, and we look forward to continuing to grow that relationship over time. That's all I have for you today, ladies and gentlemen. Thank you very much for your time. Really appreciate it.
Thank you very much, Ken. Next up, we've got a fireside chat panel here with NiVolt Technologies. So help me welcome François Vizsla, COO of Nion Nickel, Corey Kaczynski, VP Projects and Evaluation of NiVolt Technologies. And the fireside chat will be moderated by Laura Fernandez, Principal Regulatory Affairs and Sustainability for Kinterra Capital.
Bonjour tout le monde. My name is Laura Fernandez, and I'm the Principal of Sustainability at Kinterra Capital. Kinterra Capital is a private equity fund, proudly Canadian, with investors, institutional investors from the United States. We currently manage $800 million in AUM, and our mission is simple but very important. We are here to invest in the critical minerals and the critical mineral infrastructure necessary to propel the energy transition. With this mission, we are also trying to get private capital and capital from the OEMs and PCAM producers to come to Canada in our projects. We are invested in Australia and the United States, but most importantly, today we are going to talk about our Canadian investments, which are in Quebec and we're extremely proud of. With me, I have François Vizsla and Corey Kaczynski. These two gentlemen lead our two portfolio companies. One is Dumont and one is NiVolt. The purpose here is to create a vertically integrated project that takes the feed from Dumont and processes it to an MHP product, mixed hydroxide precipitate, for the battery industry. So without further ado, I would love to pass it on to my colleague François so that he can tell us why Dumont.
Thank you, Laura. When I started being approached by Kinterra, I was with another group, a mining group. I've been there for 15 years, and I was excited of the approach of Kinterra. I was fortunate enough to build, some of you would say crazy enough, to build several mines. I've built 5 mines before starting this project. I've been with the Kinterra group for the last 3 months. And what attracted me to the Kinterra group is the Dumont project. In the mining world, I'm sure in the years of experience I've gained, 25 years, a couple findings that I learned is mining is tough. I think everybody here that has really done, start of a project from, the exploration phase to, permitting, design, construction, and ramp up to operation will agree with that. If somebody says, no, my project is going to be easy, he doesn't know anything about mining. That's completely absurd. So mining is tough, and it's getting more and more complex with the years, with the permitting, the social acceptance. We're having now, I would call it evolution now, also with the nations that are getting more involved in the project. Second thing is, even if you have a great deposit, it doesn't guarantee that you're going to have success with your project. Third, and not the least, is mining in today's world is a list of ingredients. To be successful, it's like doing a recipe. You need a list of good ingredients, and that's what excited me about the Dumont project. This is a mature project. It's been known since 2012. And the deposit is a huge deposit, an open pit, low-grade nickel and cobalt. It had a bit of platinum group. It was, designed at the early stage for the stainless steel market. The deposit in today has more than 1 billion tons in reserve. Out of that, there's 25% that are going to be measured resources right now. We've completed a drill program of 11 million this winter to put that number to about 25% of measured. Good jurisdiction, we've talked about Quebec. I think this is good. All Quebec is a good jurisdiction, but we're in the B2B camp. This is, we won't need a camp for fly-in, fly-out personnel. Abitibi is known for its experience in mining. We have access to providers, to material, to contractors, so this is very convenient. So an area where we have infrastructure and we have also the know-how how to build projects. We've obtained our BAP in 2014, so it's been a while, but the BAP is still valid in today's world, so permitting is getting into the fine details of getting the list of 25 to 40 permits. Community support, we're right next to two small villages, town of Launay and Tresesson. We don't have any house to move compared to a previous project I was in, and we're about 25 kilometers away from the Amos town. Low carbon footprint, very lucky. Naturally, our rock, our waste rock, the serpentine, is able to absorb CO2. So that's a key function. A lot of the other presentator today said, low carbon footprint, but it's also achieving that even in the extraction. So our tails and our waste rock will absorb passively, naturally, the CO2 carbon. So those are some of the ingredients that I think make the project very interesting, Dumont. But key placing Dumont, I think, in top of the list for the critical and strategic mineral development in Canada, it's ready to go. We have our permit. Everybody knows in Canada, if it's rarely less than 5 years to get permits. So we have that. This is still one of the largest nickel deposit undeveloped in the world. Permitted, I've said, it's a mine that's going to be open pit with the first phase where we're going to extract about 52,000 tons per day with an expansion to double that to over 100 pounds per day. 30 years of mine life. Production every year, if we're averaging out over the life of the mine of 39,000 pounds of nickel. So that's the equivalent of production for cars that will enable them, the car manufacturers, to produce about 780,000 battery for EV cars. Key, like everybody's here for, is financing. Thanks to Kinterra and the backup of investors in the United States. I'm not saying, everything is done for the financing, but this is an overall project with the second transformation of NiVolt of $2 billion Canadian, and the financing is going very well. We think we're going to be able to complete the first tranche, about $1 billion, in the next couple of months, and after that, it's going to be debt. But the project is on rail to get the financing and to start the actual execution. With that being said, I would pass the microphone to my colleagues, Corey.
Sure. Thanks, Francois. I guess what getting involved with this project, what really excited me is that we're going to be building a first-of-its-kind facility that's tailored to the EV market and taking sulfide concentrate to the EV market. We're doing it in Canada. We're both doing the development work as well as executing it here, and that makes me, my patriotism, ring that bell a bit. We're managing risk with our project through implementing commercially proven technologies that have been used in various sulfide processing and in the nickel industry globally, so we're keeping our risks low. And with our process, we're recovering the nickel and cobalt and transforming it from the Dumont concentrate into a mixed hydroxide precipitate product that the downstream user can use to put into their EV supply chain. We're also exploring further transformation to nickel sulfate with some of our partners to see if we could add more value to the supply chain. Quebec and Canada have both done excellent jobs so far attracting and developing the downstream supply chain. They've attracted major OEMs and PCAM producers to support the energy transition both in Canada and North America. We now need nickel and cobalt units to support these projects that are going on downstream, and it needs to be in a form that they're able to use. Both Dumont and NiVolt, we're satisfying both these things. We're adding both nickel units to the EV market and the nickel market, as well as transforming it into a high-quality mixed hydroxide precipitate product that could be used downstream. When we compare our product that we're going to be producing versus commercially available MHPs, we're both higher nickel grade and lower impurities, namely lower in copper, zinc, iron. These are typically difficult to remove downstream. This simplifies the processing for the downstream user, as well as reducing their cost to process the material and the waste generated from processing the material. So there's some knock-on effects to the downstream as well. The hydrometallurgical process that we're implementing has lower environmental emissions than conventional smelting of sulfide concentrates, as well as being located in Quebec gives us the benefit of a low carbon footprint energy supply for our process. This, coupled with the stakeholder engagement that the Dumont team has been doing in developing their project, has really made we could say that our product is responsibly sourced nickel that the downstream users really are looking for and feel good about putting into their product. So right now with our project development state, we're really accelerating. We've completed our process optimization test work in Q1 of this year, which then led into our piloting, which we completed in early Q2, and we've kicked off our feasibility study, engineering feasibility study, in Q2 as well, which are the aim to get that done by Q1 2025. So it's really exciting times for NiVolt.
Thank you, Corey. I think before our time runs out, one of the things that Kinterra is really proud of is that we're not tied to the capital markets, so we have a lot of allocation flexibility, and we're really focused on the execution. Can you talk to us, Francois, about the timeline of these combined vertically integrated projects?
Absolutely. So this is key. You know, I've joined the team because we were going to build a mine. The execution, we've laid down a schedule. And you know, this year, basically, we're refining the concept. So we're doing base engineering this year. For NiVolt, they're doing their fees to refine the concept. You know, it's known technology, but adapted toward the Dumont project. We're going to start the detail engineering at early 2025 to start construction or, you know, shovel in the ground in the winter of 2025-26 to be 2 years in construction plus or minus and start production for 2028. I think the goal, you know, for the OEM, this is very important. When you're talking about EOM, very different mindset than, I would say, other commodity metals. It's not going to a general market. It's providing a quality product in a timely fashion. So 2028, mid-2028 is going to be our first delivery of MHP. That's the plan. And the execution plan has been done, you know, accordingly to that schedule.
Thank you, Francois. Well, without further ado, do we have any questions from the audience? No questions? Well, I think we end our session here, but we just want to thank you for your time and your attention and remind you that this is a near-term project, vertically integrated, that will supply the battery supply chain in Canada, and we could not be more proud and more excited to have this project here in the beautiful province of Quebec. Thank you, everyone.
Thank you.
Thanks.
Thank you very much, Francois, Corey, and Laura for that discussion. Next up, it's my pleasure to introduce Greg Honig, Chief Commercial Officer of Sherritt International Corporation, for a fireside chat discussion with my colleague, Greg Doyle, Director Investment Banking at National Bank Financials. Gentlemen.
Craig. Great to see you. Good morning, everyone. So starting off, there may be some members of the audience that aren't familiar with Sherritt, so maybe you could provide a bit of a brief introduction on the business, and we can take it from there.
Sounds good. I think Sherritt's a name that's actually quite well known in terms of the fact that it has over a 90-year history. It's well established in Canada in terms of metals, refining, and mining. Also known around the world in terms of its expertise in hydrometallurgical processing for base metals. But given that history, a lot of people have questions of what is Sherritt today. So today, Sherritt's predominant business is a significant producer of nickel and cobalt. We do this through our 50% ownership in a joint venture, the MOA joint venture. This consists of a mine and high-pressure acid leach, so a processing facility in MOA, Cuba, and also a refinery in Canada. It's located in Alberta, Fort Saskatchewan, which is just outside of Edmonton. In addition to this, in Alberta, we have a 100% owned fertilizer business, which produces agricultural fertilizers and sulfuric acid for sale into Western Canada. And finally, in Cuba, we have a energy business, or a power business, through our 1/3 ownership in Energas. This is a 500 megawatt of installed capacity, very significant in terms of the local grid, represents over 10% of the national grid, and it's a low cost and low carbon emitting power source because it comes from natural gas. So it's very important in terms of our relationships on island.
That's a great synopsis. So maybe diving further into the battery materials sector, what have you been seeing in the nickel and cobalt markets of late, and what's your outlook for those commodities?
Yeah, a lot of discussion, obviously, given batteries on nickel and cobalt. I'd start by saying a lot of what we've seen in the price or the volatility in those commodities has been supply side related. So both in nickel and cobalt, we've seen significant supply side growth over the last few years. In nickel, this has largely come out of intermediates coming out of Indonesia. And in cobalt, this has been out of the DRC and out of Indonesia. In the nickel side, though, more recently, there's been a lot of news on supply side responses, whether it's New Caledonia, Australia, a variety of other high cost producers, and a slowdown of some of the projects in terms of future growth. So we're seeing that market come more into, or at least relatively into balance, smaller oversupply in the short term. And we think with the demand growth there, we expect that demand will exceed supply and we'll start to see deficits in the sort of medium to long term. On the demand side, both commodities have actually been quite strong. So without that oversupply component, demand has actually been positive in nickel and in cobalt. Nickel, it's important to know, stainless steel still represents close to 70% of the nickel market, and this continues to grow, as it has pretty consistently over the last few decades. But the main topic is batteries, and the amount of nickel that goes into batteries, and still cobalt that goes into batteries, because cobalt is a relatively small market. So although there's a lot of discussion out there about pace of adoption of EVs or battery chemistries, we're still quite confident that NCM, or nickel-containing battery chemistries with some cobalt, will still be a significant portion of the market going forward. And actually, I think it's important to note that we do need other chemistries and other sources of supply in order to meet the magnitude of demand when you start looking at it 2030, 2040, 2050. So it was never going to be solved just by nickel chemistry batteries. So it's important to have a mix to actually hit those milestones.
I mean, it sounds like a robust outlook for sure, and it's definitely something that aligns well with what we're seeing with the downstream commitments from the auto manufacturers, et cetera.
Mm-hmm.
So maybe pivoting back to Sherritt, what's the company's outlook for this year? Are there any growth opportunities in the pipeline that you're particularly excited about that you can share with the audience?
Yeah, so we've obviously released our 2024 guidance, so we're expecting improved production. So we produce, or we're guiding towards a midpoint of around 32,000 tons of nickel contained in metals, and about 3,200 tons of cobalt. So this is a good improvement from last year. We expect our NDCC, so our operating costs, to come down. We're guiding US $5.50 to $6 per pound of nickel. So expect to see improved margins on that basis. On the growth side, we've been actively engaging on an expansion project on island to increase our intermediate production by about 20% of contained nickel and cobalt. So this should be the last year of finishing off that growth project, so we're excited about that and what it means in 2025. And then also, we turned around our power business in terms of finding excess gas supply. So what that really means in simple terms is we're actually starting to see dividends from our power business starting in the back half of this year, which we have not had for a long time. So just looking forward to receiving those dividends and being able to utilize them for some of our strategic goals.
Absolutely. And then obviously ESG, very important topic these days. What are some of Sherritt's sustainability goals, and what's the company doing to ensure that it's a responsible producer and supplier?
Yeah, I mean, it obviously has been a big topic, I guess, for a long time now, and I think one of the things that differentiates, I guess, Sherritt from from a lot of the junior market is we've been a producer for a long time. So sustainability type topics have been important because they've been important to the customer actually for a lot longer than they've been important to the capital markets. So we've always ensured that we've been reporting and tracking our sustainability initiatives for over 15 years. We've always ensured that we've met to international standards, whether it's currently towards sustainable mining or OECD compliance. We ensure that we're LME compliant because we have a brand on the LME and we can sell our metal to a variety of customers. So we do a lot of governance, a lot of management systems, a lot of sustainability efforts in that regard. I guess the big topic on sustainability more recently has been on GHG, carbon emitting aspects. So we have also set our 2050 net zero targets. We've set some interim targets in 2030, and then last year we completed a lot of our climate risk assessments and GHG assessments at our operations so that we can build a more detailed roadmap instead of just setting a target, actually having detailed plans on how to achieve it. So we're hoping to roll those out in more detail in the coming years.
Perfect. So, one thing that was obviously a momentous announcement for you guys was in 2022 you announced the cobalt swap arrangement with your Cuban partners, and that was aimed at settling some of the outstanding receivables. Can you give maybe the audience a little bit of an update in terms of how that's going, what progress has been made?
Yeah, I'd love to. It's complicated in structure, and it's proven so because we've tried to explain it, and it still requires extra explanation. But very simply, because of our historic power investments, we had $368 million of outstanding receivables from the original capital investment in those power businesses. So what we've done with this swap is our partners on the mining side have basically absorbed or taken on those receivables. And so what they've said is for the next 5 years, we get to use their 50% dividends to pay off that outstanding receivable. So Sherritt will effectively receive 100% of the dividends from the MOA joint venture up to $114 million US. So, give or take 150 million Canadian dollars each year, we get that prioritized dividend coming to us. So last year was our first year of it being in effect, and through cobalt, so physical metal dividends that we then sell, and through cash dividends, Sherritt received just over 145 million Canadian from this mechanism, and that resulted in around 76 million, because our partner's 50% interest, being reduced from the receivables. So it's very significant. This has been a long-standing issue of Sherritt for probably over a decade. So to actually have a mechanism where it's within our control through the MOA joint venture, through held offshore, and basically as there's dividends, we automatically receive it. It's built into the structure. So very significant in terms of changing the future of Sherritt.
For sure. I mean, it's going to be key in terms of strengthening the balance sheet, and then helping you guys open the doors to some of the other growth initiatives that you have in the pipeline. Maybe on that topic, looking further ahead, what are your strategic initiatives over the next few years, and what plans do you guys have in place to achieve some of those?
Yeah, absolutely. You just mentioned balance sheet strengthening. So a lot of the executive team came into place in 2021, and it's been a priority since then. It was a priority before, but it's been one of our priorities to deleverage the balance sheet We did $150 million of debt repurchases and reduction in 2022, 2023. And that cobalt swap we talked about, that outstanding amount is basically equivalent to our outstanding debt as well. So very important in terms of, basically being able to ensure we can either repay or refinance that debt. So that continues to be a priority for us, deleverage that. We've done that also through our growth initiatives. So we're very much looking forward to completing this expansion, which will give us increased margins, increased profitability, both towards balance sheet strength and towards growth opportunities. So that should be complete by the end of this year. We hope to see those proceeds or the benefits, the fruits of that in 2025. And then again, I mentioned the power business. We're starting to see dividends out of that. So that'll be really interesting. What we're hoping is what we believe is we've built this base. And so now we can actually use that to look towards growth opportunities. So at the end of Q1, we announced that we are developing a flow sheet or a refinery project for North America to treat, I was going to say MHP, which was luckily just talked about in the last presentation, so maybe people will understand it. So basically to treat an intermediate of nickel and cobalt into sulfate so it can feed into the battery sector, the battery supply chain. And so we're going to be building a facility and developing this facility that can treat international material, but then also be able to treat future domestic supply that comes from upstream mines. So really excited about being able to transition into that growth opportunity to expand Sherritt's business.
No, that sounds extremely exciting. Maybe just one on the government's perspective on critical minerals and how is that impacting your strategy, if at all?
Yeah, I think it's been, you've been at this conference, it's been fantastic in terms of the level of support and engagement that's coming out. Obviously, it continues to improve in terms of its coordination and how we're all getting aligned in that. You noted the amount of investment we've seen, particularly in provinces like Quebec or Ontario in terms of the downstream industry, and it's starting to move into that midstream and upstream, which takes a little bit of time, and that's a very important component of that supply chain. So we're excited as that midstream starts to get built out and the funding and support and government alignment starts to really impact that sector. I think that'll be critical for us and others in the industry. So looking forward to that, and I think it's setting North America up to be a competitor in this space.
Agreed. And then maybe lastly, one of my favorite questions to ask in any fireside chat, why should someone sitting in the audience buy Sherritt? Why is it a great investment opportunity?
Yeah, and I know a lot of people start with undervalued story and all of that, and I think that's absolutely true. I think there's very few actual producing, nickel and cobalt companies out there. We have a long life asset, so more than 20 years. We recently expanded that. We have expansion coming up. And as we just talked about, we've really built the foundation again in terms of whether it's the cobalt swap to ensure the balance sheet. So we have a really strong foundation to grow from, good cash flow and profitability going forward. And then that expertise that we bring, both from an operating and technical perspective. So we talked about this MHP growth project, but we see a lot of opportunities come into Sherritt. And so as Sherritt improves our capability to then go after these opportunities, I think it's quite a bright future for us. Whereas a lot of the opportunities you see in the junior space are very interesting, but they sort of lack the capability in terms of the execution or the experience operating or actually building these facilities. And I think that will be important in terms of success going forward.
Perfect. Well, look, thank you very much for your time this morning. Thank you all in the audience as well. Great story and lots of exciting stuff on the come. So looking forward to seeing how that all unfolds.
No, thanks a lot, and thanks everyone.
Thank you both. Next up, help me welcome Iggy Tan, Executive Chair of Lithium Universe. The company is focused on obtaining a resource for its 2 lithium projects in the exploration phase in the James Bay region.
Ladies and gentlemen, by the end of this session, you'll understand what the lithium conversion gap is all about. Well, on one side of the lithium conversion gap, there's lithium supply, and as Ken mentioned it in his presentation, there's nearly 40 companies in Quebec developing resources. So the total resource that is, even in just Quebec, is 500 million tons at better than 1%. So there's a lot of development on one side of this gap. On the other side of the gap, we also talk about 20 major manufacturers announcing battery plants in the North American market. So nearly 1,000 gigawatts of battery capacity has been announced. And if you calculate how much lithium chemicals is required, it's nearly 850,000 tons of lithium chemicals. What happens today when Quebec or Canada produces spodumene? Well, it has to should be shipped all the way to China to be converted to lithium chemicals. And even Sayona has announced the transport costs of a spodumene from the mines to the port to China can be up to $150 a ton, which is equivalent to about $1,000 in lithium carbonate. And then what happens to the lithium chemicals? It comes all the way back to the North American market. And we see that Canada is also putting its foot down and wanting these producers to go downstream and bring that supply chain in country. So this is the lithium conversion gap. Today, only 100,000 tons per annum of lithium conversion has been announced. And introducing you to our company, Lithium Universe, our vision is to start closing that lithium conversion gap. Now, it's not that simple. There are problems with lithium conversion. It's a very complex chemical process. The industry is very young, and there's very limited expertise in the lithium conversion. There have been many failures and many technical difficulties. Our view is that there are two problems in this area. First one is experienced operators, as I mentioned, and the second one is proven technology. So, to solve the first problem, we've amassed the most lithium experience you can get in one single company. It's led by myself. I have a lithium background. I commissioned the first lithium carbonate plant in 1995 in Australia. A lot of people don't realize that Australia tried to go to lithium conversion in the early 90s. And then I was headed up Galaxy Resources, and we built the Mount Cattlin plant rated at 137,000 tons per annum, and we built the Jiangsu lithium carbonate plant to take that material to convert it to lithium chemicals. As I mentioned, we are amassed the most lithium experience in one single company. Joining us is Pat Scallon. He ran Greenbushes for 25 years. He took this plant from 200,000 tons per annum to 1.6 million tons. Today, Greenbushes is the highest grade, largest mine in the world. Joining me as well is Dr. Jinwan Liu, who was my right-hand man at Galaxy. He is the preeminent expert in lithium carbonate and lithium hydroxide processing. So, if Jinwan has just about seen every flow sheet around the world, and he advises. So, a lot of experience together. Now, this is the 1992 Dream Team. If you can remember the US Dream Team, well, we have our own version of a Dream Team. This is our Lithium Dream Team. No one plays basketball, though. So joining us is also Terry Stark, who was the General Manager at Galaxy Resources, Roger Povo, who has got background in Greenbushes, as well as ran the Mount Cattlin operation. John Loxton, who was working at Hatch and built the Jiangsu lithium carbonate plant. And John Cebulski, who is our CFO. So what we're essentially doing is brought a team together that designed these plans, built these plans, financed these plans, and got it running, just to take out that risk. Now, let's look at a typical development of a mine, a lithium mine. Generally, it takes 8 to 10 years. Companies go through a maiden, they find a resource, they conduct a scoping, PFS, a DFS study, and then finally in construction. So typically it's about 8 to 10 years. Just to show you that we have a proven experience, we did at Mount Cattlin a 3-year time frame. Maiden to first product in 3 years. Mount Cattlin is a typical hard rock operation. As Ken said, it's a large crystal type operation. 1 million tons per annum, 4-stage crushing, dense media separation, no flotation. So it's very appropriate technology for the James Bay area. Now let's look at conversion issues. There are 2 plants that have been built in Australia today, one by Tianqi Lithium in Kwinana. After 5 years, it is still not running. It's still at 10% of design. Albemarle, who's a lithium producer, built a plant in Kemerton, and after 5 years, with a lot of cost blowouts, it's still operating at less than 20%. Now, in Canada, you know some of these issues. With Canada Lithium, essentially produced only 100 tons before it went into receivership. Nemaska 1, well, during construction, it virtually went into receivership. So there are a lot of challenges in lithium conversion. So why have these projects failed? Fundamentally, we believe you need these operators at the design stage of your project. So that's why all our Lithium Dream Team are operators and have experience operating these plants. And to demonstrate that, we took Jiangsu from breaking ground to first production and steady production in less than 2 years. Today, this operation is it's the benchmark for all refineries around the world. This is a Western-style, continuous process refinery that we built, and most of the refineries around the world has basically come from this process. A very successful project, well operating above design today, and the best quality in the world. So what we're doing, very simply, is we're replicating it. We're not trying to be too smart about it. We're taking it, we know it works, and there is a perfect expression, copy and paste, okay? And we're building this at Bécancour. It's based on a proven design. It's got the same flow sheet. We have the same equipment, and we will use the same suppliers. We have also used the same engineering company. Hatch was the engineering company that built the first Jiangsu plant, and they will be building this Bécancour lithium refinery. It's a lithium carbonate plant, and a lot of people have said, why lithium carbonate, not a hydroxide plant? Well, you might not know this, but lithium carbonate is the feedstock for LFP batteries. LFP is lithium iron phosphate batteries. And you know the car manufacturers, like Tesla, have started to shift to all LFP batteries. Why? It's much safer and it's much cheaper. So lithium carbonate, will be the predominant feedstock for the future battery industry. And as an example, 67% of today's EV installations in China is LFP based. So where are we building this plant? Well, it's a great industrial site you have here in Quebec, Bécancour. It's between Quebec City and Montreal, And the best part of this site is that we have all the facilities that we need: natural gas, transport, railway at the back of our plot, and the most important thing, as Ken mentioned, green, cheap power. And Ken made a great point. When you have power less than 4 cents, and in Australia it's probably close to 26 cents equivalent, it makes Quebec very competitive to China on an operating cost. And our vision is that Quebec could be the center of lithium conversion for the transatlantic North American market, purely based on the price of electricity, the access to some of the major transport routes. As you can see on our site, there's a port facility where we can ship 30,000 tons of spodumene up that river and to feed our plant. Well, yes, eventually the spodumene can come from some of the James Bay mines, but it's going to take a while. So in the interim, we have a strategy where we can ship material into our plant from other parts of the world. So this is the process, in case you're interested, and we are the only company that publicizes the full flow sheet of the process. And the reason we can do that is we're very confident of the process. It works. And essentially, what's different about our process, 15 years ago, we built the back end of this, which is a purification plant. So we take raw lithium carbonate and we purify it to a battery grade, 99.7% quality. And that's what the industry is looking for: high quality, battery grade lithium carbonate. We've already well advanced in our DFS. We've already done the layout for the plant. We've taken the Jiangsu model and we've winterized it for the Quebec location, and you can see there. Just to give you an idea how the process flow, the first part of the process, you take spodumene and you calcine it. The next part is you react it with sulfuric acid, and then from that process you create a residue, which is aluminosilicate, which we hope to sell to the cement industry. And then taking that, we make lithium carbonate, as well as a byproduct called sodium sulfate. Sodium sulfate is sold to the textile industry and the detergent industry. So essentially well advanced on our DFS, and we've also made sure that our process can handle any type of spodumene around the world. So basically we bought spodumene from around the world. You can see some of the pictures there. And basically we have made battery grade lithium carbonate using this process with any type of spodumene around the world, including Canadian spodumene. So it's a very robust, versatile project. So what's our business model? Well, we don't need to worry about developing a mine. That's a long process. Our expertise is lithium conversion. So the business model is very simple. There's a lot of OEMs around the world that have secured spodumene offtake. For example, as Piedmont said, Tesla has offtake with Sayona and Piedmont, LG Chem. Ford has offtake with Liontown in Australia. Where are they going to convert this material? Well, they have to send it all the way to China and back to North America. And this is where we fit in. We will just act as a converter, right? Very simply, we'll charge a fee for the conversion. And the beauty of that is we pay the refinery back. As long as we can pay that refinery back, that's our business model. The benefit is that we don't take any risk on the market. We don't take the risk on pricing. We don't take the risk. We become part of the supply chain of the OEMs. And that's our business model. The benefit for the OEMs is suddenly they have the conversion part in their supply chain. Now, people say, why don't the OEMs just go and build a conversion plant? Well, I just told you all the problems with even with a lithium producer trying to build a lithium conversion plant. What do you think an OEM's going to do? So essentially, as I mentioned, the big advantage for Quebec, and we think could be the center of the conversion industry, is green, cheap power. So ladies and gentlemen, thank you for your time. To resolve this conversion strategy, there are two problems: proven operators and experienced operators, number one, and proven technology, which we amass. So thank you very much.
It is now my pleasure to welcome Jennifer Knight, Deputy Assistant Secretary for Textiles, Consumer Goods, Materials, Critical Minerals and Metals at the International Trade Administration of the U.S. Department of Commerce.
Bonjour, good morning. My joke is I think I have the longest title in the US government. But thank you for the kind introduction. I'm very happy to be joining you here today in Quebec City, and I'd like to take a moment to thank Ms. Joanne Jobin and Ms. Jennifer Choi for their kind introduction or invitation to attend the event, and also like to express my thanks to the Government of Quebec and the major corporate sponsors of the conference. And finally, a sincere thanks to the province of Quebec for putting in place a critical mineral strategy ahead of any other Canadian jurisdiction. We've quickly learned the advantages that Quebec holds for building resilient critical mineral supply chains, including an attractive business environment, the Aboriginal community consultation policy specific to the mining sector as a tool for dialogue and collaboration, diversified mineral resources, technological and scientific expertise, and skilled labor. So today, I not only want to talk about what the US is doing to build resilient supply chains and to increase mineral production supply chains between our two countries, but also to learn from you, Quebec, the strategies, collaboration, and financial resources that are enabling the province to become a leader in the production, transformation, and recycling of critical and strategic minerals in partnership with local and Indigenous communities. I'd like to start by telling you a little bit about the US Department of Commerce and what we're doing in the critical minerals space, and then frame out the critical minerals problem and the US response thus far, including policies and tools we're using, and the challenges that we're facing. And at the end, I'd like to leave you with a little bit of a history lesson, which I hope will shed light on a path forward. But at the US Department of Commerce, across 13 bureaus, we're working to drive US economic competitiveness, strengthen domestic industry, and spur the growth of quality jobs in all communities across our country. For critical minerals, commerce continues to play a central role in the US government efforts to strengthen critical mineral supply chains. Several commerce bureaus are involved in this effort. In the International Trade Administration and the Industry Analysis Unit where I sit, we're playing a crucial role. We launched a first-of-its-kind supply chain center this past year, and we've built out a team of analysts their job is basically to get ahead of supply chain challenges, set priorities for policy focus, and figure out how to take action based on data-driven risk analysis. And this group is working on critical minerals. They're also working on a number of other important industry sectors. We also created the first USG dedicated Office of Critical Minerals and Metals in November 2022, and I'm proud that Mr. Gary Stanley is actually here, who was responsible for creating that office. We're also conducting in-depth analyses on individual critical minerals, including some very obscure ones, to understand supply chain choke points,
vulnerabilities, dependencies, and ultimately making potential policy recommendations to mitigate short-term supply disruptions. We're all here in Quebec City to continue the dialogue on an issue that is only growing in importance, and that is how can we build resilient critical mineral supply chains to support our economic and national security. Executive Order 14017 on America's supply chains succinctly lays out the problem. The United States and other nations are dependent on a range of products, including critical minerals and metals, and are the building blocks of the products we use every day. For many of the minerals we need, we have little to no domestic production. And it's the combination of being overly dependent on a single source supplier and the anticipated increased demand that exposes our supply chain vulnerabilities. China has repeatedly used its stranglehold over critical mineral supply chains to distort the market for clean energy technology and drive competition out of business. I used to highlight China's use of economic coercion by its decision to cut off rare earth exports to Japan in 2009. But now, unfortunately, I have a more recent example to point to, which is China restricting exports of germanium and gallium, which are key inputs in semiconductor production. These uncertainties, ongoing trade tension, and low prices are the center of industry and investors' concerns. Our intent is to show that USG programs, mainly the Inflation Reduction Act, the IRA, serve as a long and not a short-term plan, and that U.S. demand for critical minerals will grow regardless of price fluctuations. The long-term solution to America's critical mineral supply chain challenge must be met through a combination of support for domestic production across the supply chain, from mining, processing, and recycling, as well as trade with allies and partners. And we need to do all of this while ensuring that growth in critical minerals production does not come at the expense of the environment, human health, or human and labor rights. With reliable critical mineral supply chains, U.S. and Canadian firms will be better equipped to securely invest in green energy technologies, making a net zero future more achievable, affordable, and consistent with U.S. economic opportunity. Since Executive Order 14017 was issued in 2021, several actions across multiple federal agencies are helping to mitigate the risks of building a secure and resilient North American supply chain for critical minerals. We are encouraging investments throughout the supply chain, from mining and excavation to downstream value-added processing in the manufacturing process through the Inflation Reduction Act, the Defense Production Act, the Department of Energy Loan Program Office, the Export-Import Bank of the United States, and more. We are working to ensure that growth in critical minerals production does not come at the expense of the environment, human health, or human and labor rights, just to repeat that again. The Inflation Reduction Act represents the most extensive investment in climate solutions in U.S. history. The IRA is a 10-year plan that facilitates the North American energy transition and supply chain diversification. It includes a wide range of tax credits, grants, and loans for clean technologies, totaling $370 billion over 10 years to accelerate the nation's energy transition. On May 3rd, the Biden-Harris administration announced final rules and guidance for the Inflation Reduction Act Clean Vehicle Credit, otherwise known as the 30D tax credit. The U.S. Department of Energy also finalized its interpretive guidance on the definition of foreign entities of concern, which clarifies which companies are FEOCs, the acronym, in particular that FEOC is limited to entities owned by, controlled by, or subject to the jurisdiction of North Korea, China, Russia, or Iran. The credits contained in the Inflation Reduction Act are stimulating an unprecedented investment boom into expanding the supply chains for clean energy technologies. We need to accelerate and sustain clean economic. Thank you. Thank you. It's helpful. Thank you. Okay. We need to accelerate and sustain clean economic growth in this century. The guidance ensures that auto manufacturers are incentivized to procure a sufficient non-foreign entity of concern supply of critical minerals to be eligible for the 30D credit. The Defense Production Act provides broad-based authorities to incentivize domestic sources to develop, maintain, modernize, and expand production capacity or critical technologies. My office has committed significant resources to reviewing these proposals, and there have been 15 awards totaling $336 million since the start of fiscal year 2024, so it's quite significant. Canadian companies are some of the only non-US entities and persons who are considered a domestic source for purposes of this act. Last month, during the Canada-US Energy Transformation Task Force, the Defense Department made a historic announcement of $14.8 million in awards to two Canadian companies, Fortune Minerals and Lamico Metals, a Quebec-based company. Canada's Department of Natural Resources announced complementary funding of up to $5.6 million to Fortune and $3.6 million to Lamico. These announcements by the US and Canada demonstrate a commitment to implementing a joint vision of developing sustainable, integrated critical mineral supply chains to serve North American advanced manufacturing, clean energy, and defense. The Department of Energy's Loan Programs Office, or LPO, enables borrowers to access long-term senior debt for the construction of clean energy projects that are challenged in obtaining adequate, flexible debt financing on competitive terms from private lenders. LPO can support critical minerals mining and extraction activities as eligible project costs under the Title 17 Clean Energy Financing Program. The Title 17 Clean Energy Financing Program is central to LPO's mission to serve as a bridge to bankability for clean energy projects that are critical to achieving the decarbonization of the energy sector and enhancing the domestic clean energy supply chain. Projects still undergo a rigorous due diligence review with respect to the environment, affected communities, and federal Indian trust. The Export-Import Bank is the only official export credit agency of the United States and plays an important role in filling gaps in private sector financing, supplementing and encouraging private capital, and leveling the playing field. EXIM's existing financing solutions can be deployed for critical energy mineral projects from mines to gigafactories in the US or abroad at the scale necessary to support purchases by Canadian buyers of US goods and services and to promote secure and sustainable battery supply chains. Domestically, EXIM's Make More in America initiative will make available the agency's existing medium and long-term loans, loan guarantees, and insurance to export-oriented domestic manufacturing projects. Access to these resources is essential to advance our comparative leadership with respect to China in strategic industries. And going one step further, the China and Transformational Export Program will support the extensions of loans, guarantees, and insurance at rates and on terms that are fully compatible to the extent possible with those provided by China. And finally, permitting reform, which I know is in many people's minds. In my meetings with industry, I often ask, what's the #1 challenge to increasing domestic production? And more often than not, the response is current US permitting laws. It can take upwards of 10 years to stand up a new mine in the United States, and our current mining laws were enacted in 1872 or 150 years ago. The Biden administration has taken steps to address the urgent need to improve efficiency and effectiveness of the federal permitting process while ensuring strong environmental protections, robust community engagement, and better coordination with states, tribes, and local governments. This will facilitate the use in semiconductors, electric vehicle batteries, smartphones, and other technologies of minerals and materials sourced under the responsible social, environmental, and labor standards. One more sip of water here. The Interagency Working Group on Mining Laws, Regulations, and Permitting, which the Department of Commerce is a part of, issued its final report with more than 60 recommendations to revitalize domestic mining, including expanding consultations and engagement with tribes, obtaining fair compensation for taxpayers for minerals extracted from federal lands, and protecting taxpayers from the costs of abandoned mine reclamation. I think I've been doing too much public speaking lately. I'm sorry. Sorry. On April 30th, the White House Council on Environmental Quality issued a final rule to reform, simplify, and modernize the federal environmental review process under the National Environmental Policy Act. The Federal Permitting Improvement Steering Council proposed revisions to FAST-41 mining sector regulations to focus on critical minerals and the full critical minerals supply chain, including critical mineral refining, recycling, and beneficiation. The South 32 Hermosa project in Arizona is the first mining project to be added to the FAST-41 process. This project has the potential to be the only battery-grade manganese producer in the United States, and potentially one of the world's largest zinc producers. This program is making a difference. Several weeks ago, the Forest Service kicked off permitting review process for the Hermosa project. The Permitting Council, using funds provided by the IRA, has made an initial $5 million available to tribal governments to support tribal engagement in the process, in the environmental review and authorization process for FAST-41 projects. And now, switching gears for a minute, the bottom line is that US demand will continue to grow. Almost 2 years have passed since the IRA was signed into law. Loans and grants have been approved, rules and regulations updated, and bilateral and multilateral partnerships have commenced. However, much more remains to be done, which also means many more opportunities to be considered and invested in. First, the market's unprecedented growth in demand for critical minerals will only continue. According to S&P Global, US demand for energy transition-related copper and critical minerals will increase year over year for at least another 10 years. This forecast accounts for reductions in demand for recycling, batteries, and vehicles, and yet, even still, net demand is expected to grow annually by 3.7% for copper and 25.3% for critical minerals. Second, many of you have been closely following the US and some might say global slump in the demand for electrical vehicles, which started around late last year. Despite this, US demand for critical minerals will continue to grow because electric vehicles are only part of our decade, if not multi-decade long transition in the energy sector and broader economy. The S&P Global forecast for US energy transition-related demand includes not only our transportation industry, but our energy storage system, renewable generation, and the broader transmission and distribution network, which were built before many of us were born, and it desperately needs repairs, upgrades, and expansions. Moreover, we also need more critical minerals for our non-energy demand, such as electronics and technology, communication and infrastructure, defense and aerospace, medical and healthcare, agriculture and industrials, as well as other consumer goods. Third, I imagine that foreign competition, especially those lower cost and higher capacity, might also be a concern to many of you here today. But local sourcing will be needed, and the US government will continue to ensure a level playing field for our producers and investors. The IRA has a clearly defined North American sourcing requirement, and it's below the S&P Global forecast of US net demand for the next 10 years, therefore ensuring that domestic sourcing will be both necessary and that it will not exceed demand. Additionally, non-market-driven low cost and overcapacity from abroad have been and will continue to be countered by US government policies, such as the recent announcement of new Section 301 tariffs on US imports from China of approximately 21 minerals and metals. Although trade will remain part of our supply chain, secure and reliable sourcing for most critical industries is our utmost priority, and North American producers and investors are essential to achieving that goal. So finally, I want to leave you with a few personal thoughts about our future in critical minerals based on history. I want to take you back to 1973, when oil-producing Arab countries stopped shipping oil into the United States due to our support of Israel for the Yom Kippur War. US gas prices went up by 40%, And some of you, including me, remember waiting in lines at gas stations that stretched for miles. Though the oil embargo was eventually lifted, the shock had done enough to expose our dependence on foreign energy as a strategic liability for the US. As a result, President Nixon launched Project Independence for the US to become energy independent by 1980. Think about this. It included policies such as adding more nuclear power plants, reducing oil demand by lowering highway speed limits and building more public transportation, and converting oil power plants to coal power plants. Succeeding presidents have tried their own policies, such as the Strategic Petroleum Reserve. And while some policies were more effective and lasted longer than others, US demand for oil continued to grow, and Canada became a major source for US oil demand. From there, it took almost 50 years, or 14 presidential terms and 26 congressional terms, for the US to finally achieve oil independence in 2022, the same year we passed the Inflation Reduction Act for our next energy transition. Many lessons and conclusions can be drawn from the last 50 years, but I think we could all agree on a few of them. 1, US energy demand continued to grow substantially despite supply or price shocks. 2, both major US political parties continued to support domestic production and trade with partner countries despite facing challenges of lower prices and dumping of overage from foreign competition. And finally, 3rd, technological breakthrough, such as the shale revolution, was a turning point for US energy production and independence. I leave you with these historical lessons as you consider and navigate through existing and future projects. I believe that we collectively in North America have learned a lot over the last 5 decades. And while there is no silver bullet, we will succeed, and I'm certainly heartened by what I see happening here in Quebec. Please remember that we are here to support you, whether you have concerns or recommendations about US government policies, need assistance to invest and do business in the US and other markets, or if you simply need help navigating the US federal system, we stand ready to work with you in building a secure and reliable supply chain of critical minerals. Merci and thank you.
Thank you, Jennifer. I'd just like to inform everyone we're going to take a 10-minute short break and resume the presentations at 10:30.
Ladies and gentlemen, please join us in welcoming LIFFF Power and Alex Langer, President and CEO, in the presentation room at 10:30. Your presence is required.
Now, please help me welcome Alex Langer, President, CEO of LIFFF Power Ltd. LIFFF Power is a lithium exploration development company focused on advancing its portfolio of hard rock lithium projects in Canada. Welcome, Alex.
Perfect. All right, good morning, everybody. My name is Alex Langer, and I am president of LIFFF Power. I quickly wanted to chat on Jennifer's presentation. I was recently just in Korea and Hong Kong and Japan, meeting with various battery manufacturers, OEMs, car manufacturers, things like that. And the importance of the IRA scheme that the US is putting together now is really going to change the way we're looking at battery metals moving forward. Not just lithium, nickel, cobalt, things like that. There is going to be a price divergence of, IRA compliant lithium and non-IRA compliant lithium. So that's coming. So over the next year and a half, we're going to see what that scheme looks like. But the Koreans and the Japanese are well ahead of it. So having secure supply of North American product, which isn't controlled by the Chinese, is going to be quite important. If we look at some of the largest lithium mines in the world, such as Greenbushes, which is about 29% owned by Tianqi Lithium, SQM, one of the largest producers of lithium, that's owned by 25% by the Chinese as well. So there's going to be a lot of product out there that won't be fungible in the new IRA compliance system. And with that, LIFFF Power, we are an exploration and development company focused on large-scale hard rock lithium assets within Canada. We do have three deposits that we're working on right now. Our flagship project is the Yellowknife Lithium Project, where we've recently completed over 50,000 meters of drilling, and we will be coming out with a maiden NI 43-101 resource report sometime this summer. Our Cali project, which is located also in Northwest Territories, that is a drill-ready project. And finally, our Quebec projects, where we are the largest owner of land. We have 2,300 square kilometers in the St. James, Pontac, and Moyenne areas. Forward-looking statements, I've already made a few, and I will continue to make many more. Please feel free to review this on our website at your convenience. So LIFFF Power, why invest? It's really the resource potential. Our flagship project, the Yellowknife Lithium Project, we expect it to be one of the largest in North America. We spent well over $40 million in drilling. That's 50,000 meters in the last 12 months, which is huge. It's one of the largest programs in Canada, let alone lithium, in terms of all different commodities. So we have that size and scale that's going to be needed. Moving forward, I expect another 10 to 20 lithium mines will come online throughout the world, and that's probably enough. Lithium is fairly abundant, but having secure supply that's mineable at a low rate is going to be important, and this has the potential to be one of those projects. Infrastructure is also important. Again, if you're in the middle of nowhere, transportation costs can be very, very expensive. Luckily for us, we're just about 20 to 40 kilometers outside of Yellowknife, where there's all-access roads, and then not too far away from railhead, which is really important if you're going to be shipping concentrate. We do have an expedited strategy. As I mentioned, we picked up this project about 2 years ago, and we've already completed 50,000 meters of drilling, and we're going to continue to push that project forward. So right now at Yellowknife, we are working towards environmental baseline studies, community engagement, things like that. When you have these large-scale projects, you want to be de-risking them all the way. We've already proven out the potential in terms of the size of the resource. It could be much larger. Metallurgical work is really important, so we're doing a bunch of that. But we're also doing community engagement and permitting and baseline, things like that. With that is ESG. Obviously, it's really important, especially in Canada and throughout the world. So we have partnered quite closely with Indigenous group. We're literally in the backyard, so it's kind of a first time scenario where a company of our stage really did an exploration agreement with the Indigenous group so early before we even started drilling. So it really is a partnership, which is great. I think that's really going to benefit us when we do go to permit this mine, hopefully in the future. Our team is okay. We have a bit of M&A transaction history, as well as discovery history, which is quite important, and timing. As I mentioned, we should be quick. Another 10 to 20 lithium mines. If you're not one of the first ones, you could be left behind. With lithium pricing, it will come back up. We're seeing it right now. It's obviously towards the bottom, but it's not sustainable at these prices. I was part of the company before, and we saw multiple cycles. So you can time these right. It's really profitable. The idea is to get into production as soon as possible, pay off your mine, and then you can generate revenues in perpetuity as long as that mine life is. So again, quickly on our projects, the Yellowknife Lithium Project is our flagship. We have 13 spodumene pegmatites with 100% exposure at surface. Obviously, it's quite easy to see the potential there. Infrastructure is important, and we've just completed 50,000 meters of drilling. Maiden resource, again, is due this summer. Our Cali project, it's a dikesmore, about 1.5 to 1 kilometer in length. We've done a large grab samples program last summer where we indicated 124 grab samples of over 1% lithium. It's road access within 6 kilometers, and it is fully permitted to drill. So we would like to drill that project in the near future. And then our Quebec projects, again, we are the largest land position within the St. James Bay region, over 2,300 square kilometers. We have large spodumene in-till anomalies defined at Pontax, and very similar in magnitude to the Whabouchi project, which we'll get into in a little bit. So obviously people are really important when you're looking at any of these projects. Francis McDonald, everything we're doing technically is led by him. Francis is an exploration geologist. He spent the majority of his career at Newmont. He was in charge of, I guess, large-scale exploration, mainly in Africa and in northern Canada. He's taken that expertise that he learned at Newmont and brought it over to LIFFF, and that's where we're able to really work down these very, very large packages into drill-ready targets, and we've been quite successful so far. I myself, I'm not technical. I come from a capital markets background. I started my career at Canaccord. I left there in 2009, and since then I've been working, helping companies, finding projects, raising capital, and finding management teams. The last 7-8 years of my life, I've been involved in lithium. I was part of a company called Millennial Lithium, where we had a brine project in Argentina. We started that with a drill hole in the ground and eventually sold that to Lithium Americas for $490 million just over 2.5 years ago. So got very comfortable with lithium, understanding the cycles and what that looks like and the future moving forward. One thing I was looking for is these hard rock assets. They're very, very important, especially in the longer term future of lithium and the world's need. Infrastructure is key. Quickly touch on Yellowknife. Yellowknife is the territorial capital. Yellowknife is the territorial capital of the Northwest Territories. There's about 20,000 people. 30% of the economy in Yellowknife is from mineral resources. The Caddy Mine, the Diavik, Gaucho, those are all actually slated to shut down over the next 3 to 5 years. So I think we're in a position to really fulfill that revenue need that the territories are going to have as these mines come offline. Again, location is really important. You can drive to these projects through the Ingram Trail, and eventually, in terms of transportation, would be able to either barge it across Great Slave Lake all the way to Hay River, where there's a railhead. And once you're at railhead, the economics of these projects become quite attractive. Again, or in the wintertime, we can drive the Yellowknife Highway, which is, again, a paved highway. So again, infrastructure is very, very important, and that's what this project has. Zooming out a little bit, this is also one of the advantages of the Yellowknife project, is it's really the only large spodumene project located in Western North America. So right now, there's really no proper refineries in North America. They're coming, and hopefully they do work, but for the time being, anything would have to be shipped out to Asia. So China, Korea, there's processing centers there. So we're actually very, very close to the West Coast. And again, as I mentioned earlier, once you're on rail, such as Hay River, you can go out through Prince Rupert or Vancouver relatively economically. Some of the projects in Quebec, they're a bit further away from railhead. So we're going to see what happens with that. There will be infrastructure coming, but for the time being, we really have the best located project to supply any material, raw material, over to the Asian markets. I think in the future, I do see a processing center maybe being built in Edmonton. Edmonton, there's a large chemical manufacturing hub. There's energy. There's a strong workforce. So it could be an area that a hydroxide plant or a carbonate plant could be built, would be in Edmonton. And again, our project and probably the Cali project could suffice to feed a scenario like that. ESG highlights, I touched on this earlier, obviously really, really important. We're literally in the backyards of the Indigenous community, so we signed a partnership before we did any type of exploration. They've been amazing. As you can see here, we've also lived up to what we said we were going to do. Indigenous employment is about 28%, and local northern employment is about 26%. What does that mean? It's a direct correlation of over $14 million into the local economy, both Indigenous and within the northern region. This is what they look like. So it's relatively straightforward. That's Google Maps. You can see these pegmatites sticking out of the earth. There's over 10 kilometers of these things. We've drilled about 8 of the 13 total pegmatites. Right there on the right is one of the pegmatites. Those are trees, and that's a drill rig. So it's relatively straightforward. Just point, shoot, and drill. And that's what we've done. So we've done over 50,000 meters of drilling to date. We've announced a majority of that. I think we have 1 or 2 more press releases to come out. But we will be taking all that information and coming out with our maiden NI 43-101 resource report later this summer. It's been very consistent all the way through. You can see the pink are grade thicknesses of 30 for lithium, and it's very, very consistent all the way through the majority of the pegmatites that we have drilled. We started to block model this. As you can see here, it's going to look pretty attractive for open pit mining. What's also quite interesting is our Echo project. You see how the pegmatites actually flatline, so kind of a latitudinal direction, which would make less pit design needs. You'd have less strip ratio in terms of mining a project like that. So block models are well underway, and again, the NI 43-101 is due sometime this summer. Also, what's very important is metallurgical testing. We noticed right away, yes, we have great amount of lithium. It's all at surface, relatively straightforward. But if the metallurgical work isn't able to be processed, you really can't mine it. So what we've done is we sent now 9 tons of rock from the 8 various pegmatites that we have drilled for processing. It looks like the majority of the lithium contained in that rock is hosted in spodumene, which is very amenable to either flotation or DMS recovery. So we're not quite sure what type of process we'll use. It could be just DMS, it could be flotation, or it could be a combination of both. So that'll come out in the feasibility study, which we'll be working towards once that resource comes out. This is a little comparison that we like to show. This is at scale, so obviously Sigma's in the green on the right, producing mine in Brazil, but geologically it's very, very similar to what we have in Yellowknife. They're both pegmatite districts with multiple dike systems feeding a global resource. So this is at scale. Now Sierra de Grado, Sigma has 109 million tons at 1.39% lithium. We actually have about 40% more surface exposure than they do. So this is a potential that we could build up to down the road. Pure benchmarking, right now our market cap is about 170 million. It fluctuates, especially with the price of lithium, but we are going to be coming out with that maiden resource very, very soon, and that's where we're going to get re-rated. So hopefully, we'll be somewhere in that range of these other companies. Obviously, they've done really, really well, some great projects, and we feel the Yellowknife Lithium project will be one of them. So quite quickly, you can see a re-rating towards Adina, and then if we can get even larger, towards Quebec, which is an amazing project, and then once you're in production, obviously, the sky's the limit, especially in a good lithium market. Quickly, I got about 3 minutes here. Our Cali project, it's also located in the Northwest Territories. Infrastructure here is also very, very good. We're about 50 kilometers away from the past-producing Cantong mine. So there's an airstrip, there's a camp, lots of things that we can use. This is fully permitted to drill as well, and we'd like to do that in the not-too-distant future. Again, a little bit of a correlation to another company, Latin Resources. Very, very similar geological showing that they have there. It's a pegmatite dike swarm, 1.2 kilometers by 1.5 kilometers. We've done a little bit of trench work. Majority has been sampling, and we've come up with multiple hits there. And again, we'd like to drill this relatively soon. Now into Quebec, pretty quickly. Quebec Greenfield, we're targeting lithium pegmatites, which are actually covered, undercover, glacial retreat, and has put up quite a bit of lithium anomalies at surface, very similar to how Corvette or Whabouchi or James Bay were discovered, using that type of methodology to push these projects forward. Zoom in a little bit, we have an incredible potential target at Pontax. As you can see here, those pink numbers is what you want. That's over 0.5% lithium, and that's all at surface. Now these are huge areas. That's over 50 kilometers in length. So what we've been working over the last 2 years is trying to build up these drill targets. We spent over $7 million in Quebec just building up these drill targets, getting ready for a hopefully potential drill campaign in the not too distant future. Again, zooming in a little bit further, we actually have the land right down from Whabouchi. Whabouchi is 46 million tons at 1.36% lithium. And if you look at those yellow till anomalies on the right, that's actually the trend, the anomaly that came from Whabouchi when the glaciers retreated. And what we've done is taken that information and then scoured the rest of our projects. So we have this area here to the south, which is not of interest, so we know what nothing looks like, but we know what something looks like. And if you look at the left, we have about 9 large targets over there that could potentially host a similar size project to Whabouchi. Even further, in our other area, we have about another 11 similar targets to what Whabouchi is, very similar to what you see the CV project looks like, where you see these anomalies, and then underneath you would find large pegmatite districts all the way through. Also, we're a very good location. A lot of these projects run right through the Billy Diamond Highway. Timelines and catalysts, I got about 40 seconds here. Winter drill program, that's all done. The 50,000 meters is done. NI 43-101 maiden resource is due this summer. Environmental baseline work is ongoing. We've been doing that for the last few years. Very, very important. And then now in Quebec, we are working up these drill targets with the potential to drill this summer. Quickly, the share structure, really, really important. We just have under 43 million shares outstanding. We do have $7 million in the bank. Market cap's about 160 million. As you can see, our insider ownership is huge. Management and founders, we own over 55% of the company. We've invested a huge amount. We've raised about $70 million since we went public, and we spend the majority of that, obviously, in ground. We have some retail following. We do have some institutions that cover us. Canaccord, SCP, and Beacon, all their targets are about 1250 and above. And with that, I'll quickly run through. Again, resource estimate is due sometime this summer. Environmental work continues to go. Drill target definition in Quebec as well as Cali, and metallurgical testing is ongoing. And with that, I say thank you.
Thank you, Alex. And now I'd like to welcome Mark Jasmine, Director, Investor Relations at Nouveau Monde Graphite, to the stage. Nouveau Monde is a Canadian company dedicated to developing a fully integrated source of green battery anode material, leveraging its graphite resources in Quebec.
Welcome, everybody. I'd like to start by thanking rapidly the Mining Event of the North for inviting us and for you being present today. My presentation will be in English. Toutefois, je prendrai les questions en français s'il y en a au kiosque 55. So we will be at booth 55 if you have any questions. But I think in English we'll have a much wider audience in the context of the conference. So I'm going to start rapidly with the first slide. Our value proposition as a company is right there. Building a vertically integrated producer of anode material right here in North America that would also be carbon neutral. Each and every one of these sentences is important, brings value added to the Nouveau Monde story, and I will be expanding in a few slides on each one of them. We are a publicly traded company. I will be making forward-looking statements, so please be aware of that. Most importantly, perhaps, from a listing standpoint, we are the only one of our comps who is listed on the New York Stock Exchange or the Big Board, in addition to being traded on the TSX Venture Exchange. If we look rapidly in a nutshell, what defines us and where the value added resides. First and foremost, we recently signed in February long-term binding take-or-pay offtakes with both GM, General Motors, and Panasonic to cover a substantial portion of our long-term production. This was key, actually, to put in place what we believe will be a successful final investment decision before year end or early next year. We are located in Quebec. All of our assets are in Quebec, 2 hours north of Montreal as the crow flies for the mining asset, and about 2 hours northeast of Montreal in Bécancour for the transformation asset. Those this morning that listened to Minister Fitzgibbon understand that this is a great jurisdiction, amongst others supported by very clean and, I'll say the word, cheap hydro and accessible hydro that supports a very low cost OPEX. Most importantly, we've de-risked our operations building transformation or demo plants. Since 2017, we've invested about 150 million Canadian dollars actually to be able to show the product. In this business, it is the chicken and the egg. If you cannot show a transformed product, at the end of the day, you will not get an offtake. And this strategic decision made a few years ago actually allowed us to get the offtakes with both GM and Panasonic. We're also a growth story. We bought an asset in late January that will be 5 times the size of our original asset, ready to build, and perhaps we've cornered the North American market, considering getting a mining permit in the United States of America is about 10 years. There's abundant graphite, but we have the transformation strategy, the demonstration plants, and we have growth. In addition, we're very committed to ESG, and I'll show in a few slides how I can support this affirmation. I'll go right away to the next slide. If you look on the left-hand side, Matawinie is actually the mining asset. In Matawinie, we will be producing about 103,000 metric tons of material of ore, of which we will be sending about 2/3 or 65,000 tons to Bécancour. And after spheronizing or transformation, considering a yield factor, we will be producing about 43,000 tons of active anode material. The Ouatnan asset is the one we purchased from Mason Graphite. It used to be called the Lac-Guéret asset. It's now called Ouatnan. It was earmarked originally for a 50,000 per year capacity for 240 years back in 2018. Now that the market for lithium-ion batteries is mature, we're going to redesign it to make it a 500,000 ton project for 24 years. And that would be the largest graphite mine in the world based on today's standards. What exactly do we do? You may have heard of the acronym CSPG, so coated, spheronized, purified graphite. If you look at the left-hand side in Matawinie, at the mining level, this is where through a typical grinding, flotation, crushing system known to the mining world, we produce the flake graphite. 2/3 is sent to Bécancour, where it will be transformed into a high-value added product. Just to give you a sense of an idea, flake graphite, depending of mesh and a few characteristics, is somewhere between $750 to $1,500 US per ton, and the price of anode material recently was about $7,200 US. So depending on how you look at it, can be as much as 10 times greater. And it is a customized, made-to-fit product, and the customer will pay top dollars if you're able to hit their specs and go from the mine directly into anode material that goes into the battery. ESG, I've mentioned it rapidly. We were benchmarked by Benchmark Minerals, 60 producers, 79 sustainability index. We're the absolute #1. Why were we able to get that? Amongst others, we're committed to have a fully electric open pit mine within 5 years of operation with the help of Caterpillar. We also have the clean hydro I've mentioned that's willing to backing our business model. And we also have an approach to stacking where we use a dry stacking approach, which is quite different to what we typically see in the industry. All this put together helped us to get our permit with a record speed of 19 months. So we are concrete ready, ready to go, and ready to build. Important slide. So the demo plans you see at the extreme left allowed us to show product. And this was from 2017 to 2023. We today have a nameplate capacity of 2,000 tons per annum of coated spherical purified graphite. But more importantly, having these demo plants allowed us to sign the offtakes. Without them, that would not have happened. And today we're at execution phase. So we're ready to build, ready to go ahead, and with the engagement of our offtakers and equity participation, ready to put in place the debt package and a whole, hopefully to reach a final investment decision, as I've mentioned, by year end. Growth would hopefully be a copy-paste type of approach, where what we're doing in Saint-Michel and Bécancour could then be copied at a scale of 5 times larger, but extremely important for us to show to our customers that we can accompany them in their own growth. So it was a defensive move, because not that many assets in North America could have the scale and time to market. This was one of them, but also an aggressive move, because it shows our customer, look around, not many out there can supply you right here, right now in North America, and none of them are vertically integrated in the country. Geopolitics of graphite rapidly. About 77% of the mines are actually in China, but they control nearly 95% of the transformation of the mineral. It is one of the most controlled mineral out there. So China, you cannot get around them. They are extremely important in the value chain. Reaffirms our model of being vertically integrated and the value of such a model. A lot of graphite is available in Africa as well. But wherever you take it in the world today, you must send it to China to be transformed if you want battery material. One exception, just starting, Sierra Resources, our biggest competitor, has a mine in Mozambique, is starting to ship some material in Vidalia, Louisiana for 11,000 tons as starters, but definitely you cannot go around China, whatever way you look at it, which is the opportunity for Nouveau Monde being in North America. Geopolitics, third week of October, big bomb. My stock goes up 32% that day, millions of stock traded. China says 2 days after the US slammed some export controls on artificial intelligence chips, China reacted, says, okay, we're going to put export controls on graphite products. That had the immediate reaction to have our customers panic, probably accelerated the signature of the contracts. But this reflected what geopolitical risk means. We were negotiating a price in North America that we think should be different than what is seen in China, and one of the important angles was a geopolitical premium, and this basically illustrated to our customers, which in a few cases had just a few weeks of inventory, how vulnerable they were to such a supply chain. So very important. Recently, the Biden administration reiterated that a tariff that was announced by Trump but put on hold because automaker pressure would be put back 25% in 2026. And in 2027, there will be an obligation for traceability of graphite just to show that it is not sourced originally from China, which would render it ineligible for the tax credit that a purchaser of an electric vehicle gets in the US for $7,500. So like a double net that supports the North American industry price-wise, and that also can help us in pre-negotiated formulas. Why is graphite important? People don't realize, but no graphite, no anode, no battery, no battery, no EV, no EV, no decarbonization. So 95% of the anode is actually made out of graphite. There are new technologies, I do agree, but if you put yourself in the shoes of GM and Panasonic, 3 years of construction, up to 7-year offtakes, they've committed to natural graphite and Nouveau Monde for 10 years by signing long-term binding take-or-pay offtakes. So extremely important in the equation, and not such a big portion of the overall costs. So even if it goes up a little bit in price, does not move the needle that much on the cost of a battery pack. 415 gigafactories announced worldwide. They will not all happen, but if we look at what the demand is expected for graphite, it is going to go through the roof. In a few slides, I'll show you the demand right here, right now from our existing customers, and you will still see that over and above this blue sky scenario, there is ample space for us to grow. North America, about 1.4 gigawatt hours. It's 1 kilo per kilowatt hour. So in the blue sky pure scenario, the demand for graphite would be about 1.4 million tons. We just signed offtakes for 36,000 tons. So pure blue sky, 40 times what we're able to supply in the near term is the actual expected demand if everything were to materialize. Europe, similar numbers, but the Chinese are much more aggressive in China selling cars. They're much more interested selling value-added automobiles and selling graphite or battery cells, but definitely a different dynamic, and the tariff game, once again, seems to be setting in. If I look at the demand of my existing customers right here, right now, both GM and Panasonic Energy, this represents 210 gigawatt hours of supply based on current and existing plants or the ones under construction. If you assume 50-50 natural graphite and synthetic, and I can answer a question afterwards, that's in excess of 100,000 tons per year, or 3 times our demand. So depending on the mix, our customers right here, right now, can use up to 3 to 5 times what we're able to supply from North America with no other sources that could be timely and available. The price is down 20% year over year, which puts us in a tougher spot, but we were able to finance or to put the equity and off-takers in place in the context of this market, expected to move. High sensitivity to our model, and like I've mentioned, North American pricing deserves better pricing for geopolitical reasons, for carbon neutrality, and logistical savings. Each 10% move in price is 2% on our IRR, and I'll get to that in a few slides. GM, along with the order, and Panasonic invested $50 million US of equity, which is earmarked to advance and optimize a feasibility study at a high level, considering an 88 million Canadian cash position. But over and above, they've committed to invest an additional $275 million US at FID, which could be seen as an open lead order in the context of the market. So definitely a cornerstone. Debt wants to see equity, equity wants to see debt. So our partners did say we're willing to show the strength of our hand and basically support you going forward. Third box from the bottom, what's left to be done? I see them as future milestones. So we will be optimizing the feasibility study, which you see right here, giving an update on the financial structure, and hopefully we think to be in a position to finalize an IBA with our First Nation partners. We already have 2 agreements in place with them, so it is definitely a will, and that we're in a very good track to accomplish that as well. In addition, we have 6,000 tons of graphite or anode material left to be sold. We should be able to give a commercial update and perhaps announce a third partner before FID. Numbers rapidly. Total investment 1.6, debt equity 60-40, billion debt, 600 of equity. Customers will be putting about 375 US using a 1.36 exchange rate. We expect traditional partners such as the Quebec government, as an example, perhaps will up their stake and put support. EBITDA, revenue less OPEX, was about $400 million based on 2022 numbers. You see our investor stack, 11%, GM Panasonic, Mitsui at 12%, Mason Graphite, where we bought our asset, is now at 6%, Investissement Quebec is at 5%. Federal government put an important tax measure, which will give us $400 million back to equity, which is not included in the feasibility study, but very significant for us. Rapidly, just to finish, covered by 5 analysts, average price is $479 US. They all have a buy. You do see the strength of our equity partners, and we do think the cornerstone to be perhaps the first producer in North America, vertically integrated, with the right time and scale to market, is Nouveau Monde Graphite. Thank you for your attention. We're at booth 55 and still have openings if any of you would have any interest for tomorrow morning.
Thank you, Mark. It's now my pleasure to welcome Michael Pettingell, Senior VP Business Development of Vizsla Silver Corp, for a fireside chat with Stephen Sook from Stifel. Welcome to the stage.
Great. Well, thanks everybody for joining us here for a fireside chat on Vizsla Silver. So I'm Stephen Sook. Joining me is Mike Pettingell. So yeah, we'll dive right in. So Mike, Vizsla's had some pretty amazing success growth-wise over the last few years. Maybe just for those who aren't familiar somehow, if you could take us through where you started a few years ago and then where the project's at currently.
Yeah, absolutely. And thanks everybody for being here. Vizsla has a flagship Panuco Silver Gold project down in Mexico. It's a silver primary discovery we made in basically a newly consolidated district. We've basically outlined through about 400,000 meters of capital efficient drilling one of the world's largest, highest grade undeveloped silver primary resources. It's about 325 million ounces of silver equivalent, grading just shy of 500 grams per ton.
Yeah, that's definitely something pretty special in terms of the grade and rapid growth and scale of what you guys have been able to put on the book so far. So obviously a great endowment. So that's kind of coming to some pretty major milestones here. You've got a PEA coming out in the next little while. Maybe you can just give us a little bit of teaser on how you're starting to think about framing the project moving forward.
Yeah, that's a great question. So we have been an advanced explorer for the past several years, drilling these large drill programs, over 100,000 meters a year, and we've found enough, right? All contained within this tight radius in basically a postage stamp within our large district. And so the plan is to now move as efficiently and rapidly towards production as we can. And the goal of getting into production in mid-2027, the first stop along the way is that PEA. So that's going to come out here in Q3, sometime before Beaver Creek. That's what we're saying. And again, look for this to be a very robust production profile at a very modest initial capital outlay.
Yeah, that's certainly the scale of capital investment is something that investors are focused on. Is the project financeable at the scale of company that you're at? So that's something that goes a long way, and something that originally attracted me to the Panuco project. So buildability and mineability, I think, are two ways to put it. So could you maybe expand on that a little bit in terms of access to infrastructure and why the ore bodies are set up to support future high margin production?
Yeah, this is a brownfield district in nature. The discoveries actually date back all the way to the conquistadors. Been mining in this area for 450, 500 years, but there's never been any commercial or mechanized mining, right? But it's got all of that infrastructure endowment set in place given the past producing nature of this district. So we've actually got highways that bisect the property, high tension power lines that bow around our center of mass and our center of mineralization. All the locations that we're looking to develop, our surface infrastructure, are on previously disturbed ground to expedite that permitting process. And all of our mineralization is right at surface. Now, this is an underground focused project, but when it's all right at surface, that keeps your development costs extremely low. So we couldn't imagine a better area to go into developing, the next world-class silver project.
Right. Yeah, definitely. And you're not done making discoveries either. We've recently put El Molino, La Luisa's expanded quickly. Copala's got additional splays. So maybe you could just expand on what you see within the immediate project area for additional opportunities that may or may not be included in the PEA depending on the stage, but what else you see as kind of runway there.
Yeah, exploration is in our DNA. The 11 structures that we have currently that make up our resource base, we have not closed off mineralization in any direction. The only direction it's closed off is up because they're right at surface. So there's targets to extend the current resource base. There's targets that are just outboard of that resource base where, hauling, you could still haul to a centralized facility. But really, this center of mass that I'm referring to represents less than 10% of the known vein strike that we've mapped and sampled in this district. We are really just, getting going. It's early innings here. And so there's immense opportunity within our contiguous package, but since the start of the year, we've made some pretty large acquisitions within this frontier belt, really. And so now we've effectively tripled our land holdings in district since the start of the year for about $6 million in cash and shares, really building this multi-generational pipeline of quality silver projects.
So the Panuco property is, like you said, extensive and has a lot of runway there. So what was it about these additional regional land acquisitions that really attracted you to those specific pieces of ground?
Well, where our project is situated, it's about 80 kilometers to the south of First Majestic's flagship San Dimas. San Dimas has been in commercial production for over 150 years. It's produced over 1 billion ounces of silver equivalent. In fact, it's about 850 million ounces of silver on top of 12 million ounces of gold. This is the direct analog from a geologic perspective to what we have. The property that we acquired, one of the properties we acquired called La Garra, is equidistant between San Dimas and our property. It has all the hallmarks that attracted us originally to Panuco, past producing, has been in private hands since the 40s. In fact, this La Garra project has never had a diamond drill poked into it. So you're talking about no modern exploration. And when you have fragmented land, such as Panuco, consolidating and then exploring on a systematic basis while using modern applications is really, really beneficial. And we've had tremendous success doing that.
Definitely. So should we be expecting to see some early results out of the properties, or you focus more on de-risking the Panuco development project? Where do your priorities sit within kind of this large amount of opportunity set that you have to work with?
Yeah, we're laser focused right now on getting to cash flow, right? We can continue to explore and raise capital and dilute ourselves down while we add more to the resource base, but we're not getting rewarded for that. The way you get rewarded is to de-risk, get into cash flow, and then you can attract that elusive silver premium, right? And so that is our goal. In year 2 or 3 of cash flow, we can start exploring the rest of the district, the contiguous district, as well as some of these earlier stage properties that we've acquired. In the meantime, though, again, exploration, as I said, is in our DNA. We have undertaken some low unit cost exploration methods. One is the acquisition of World 2 satellite imagery that's covering our contiguous package. We're also flying EM, MAG, as well as VTEM survey across our package to help aid in that ongoing targeting.
Okay. And when it comes to de-risking, what does the next couple of months, obviously the PEA will be a good piece of data point de-risking, let's say, for the market, but in terms of operational de-risking, what does the path forward over the next 3 to 6 months look like there for Panuco?
So we've got 3 key de-risking initiatives that we've outlined for the remainder of 2024 and the first half of 2025, all feeding into a feasibility study that we're looking to publish in the summer of next year. So the first is a fully permitted bulk sample test mine program. We received these permits in record time at the end of last year. This is going to allow us to develop and extract 25,000 tons from our primary Copala structure. This is where we will initiate mining. So I can't speak to how valuable this program is to reconcile your resource to your block model, but really get a handle on your development rates, your mining rates, ventilation, really understanding and mitigating that risk from surface to mine and then back to surface. We also want to stockpile roughly a year's worth of mineralization to mitigate any growing pains associated with the first year of production and opening up the mine. The second program, which complements that, is an ongoing tight space definition program, really to reduce that drill spacing and set us up for reserve delineation in advance of that feasibility. And the third program is our ongoing MET, right? We've got a 4th round of optimized metallurgy underway, really to get a handle on those recoveries and understand that response. So it's really about these key de-risking initiatives as we march towards the delivery of the feasibility in 2025.
So I wanted to touch on that a little bit. Is it that de-risking process and kind of mindset that will allow you to move directly from a PEA to a feasibility study, kind of surpassing a PFS? You think you've got the project scoped correctly, and then it's really just the detail that needs to go into the final document?
Yeah, this PEA, really led by our COO, Simon Smirlik. He joined us officially at the beginning of the year, stepping down as COO of Ausenco Engineering to really take charge. Now, Simon's built 42 mines in his 30-plus year career, most notably Silvercrest Las Chispas as a recent build. He's had us going down the MET study program, the pathway, pretty rigorous from day one. This PEA that you're going to see is very much a PFS level document. Engineering is already in Deswick. Again, 3 rounds of MET testing complete. So we do have a very good sense of the scope, and it's going to be a pretty large project. I think if it were in production today, it would be between the 8th and the 1st largest silver mine on the planet.
Wow, yeah, that's certainly coming out of the gate swinging when it comes from discovery hole a few years ago to production. Given that kind of rapid pace, with the feasibility study, you said first part of next year, when would you hope to actually be in production and start to see that cash flow come in? Obviously, time value of money in an elevated rate environment is a key value component on how you evaluate the these mining projects right now. So where's that goal you guys have set for yourselves to hit that?
Yeah, H2 2027 is the goal for first pour, right? That's really what we're focused on. So that's giving ourselves 2 years to finish permitting and construction. Now, permits don't need to go, they're not mutually exclusive, right? So you can start tackling those permits essentially the moment the PEA is delivered, especially if you're quite confident in the scope of the project.
Right.
And so for us, we've already moved through quite a bit of that initial consultation with our AHIDO groups. We've now got 30-year operating agreements with 5 AHIDOs. That's all the AHIDOs that cover our district. So we're in a really good way in terms of pushing through those permits. Construction, again, give yourself 2 years to do the overall build.
Sure.
Get into that mid-2027 production.
The other component I wanted to touch on, switching gears a little bit, is the royalty spin-out. This is something that's kind of been driving some of the news flow recently, and I know is starting to come to that final head and being able to action and dividend out to shareholders. So maybe we can talk a little bit about the thinking and rationale behind doing that sort of transaction at this point in the development process of Vizsla Silver.
Yeah, so for those that are unaware, we are spinning a 2% NSR out to shareholders on the Panuco district. If those in the room followed Great Bear, you'll recall that Great Bear, in anticipation of its sale pre-resource to Kinross, they spun out a 2% NSR to shareholders on the Dixie project. Really insurance for any future production that could come or future exploration upside that could come from that project. And so that's very much the same thing we're doing. The big difference is that Vizsla Silver is going to retain a 49% ownership in the SpinCo. That way it can still use it as a potential financing tool or optionality down the line. And so the date of record for distribution, I think it's been set as the 21st.
Okay.
So for every 3 shares of Vizsla that you hold by that date, you'll receive 1 share in Vizsla royalties, as well as 1 warrant in Vizsla royalties.
Right. Yeah, it's certainly a model that worked extremely well for Great Bear on a district with that much runway from an exploration perspective. I can see how that would be attractive to shareholders. Maybe just in the last minute here before we wrap up, speaking of kind of that runway, you guys have a fairly strong cash position, which has definitely been an asset in its own unique way through a rough part of the market. So, where does your kind of cash balance sit now, and then what point through does that get you to over the next little while?
Yeah. So with this switch of focus from being an advanced explorer, at one point having 13 drill rigs spinning on the property down to 2, just laser focused on de-risking, getting it to cash flow, we've reduced our burn significantly. Right now we're close to about $1 million a month burn. We currently have 40 million Canadian in the bank. We expect that to take us all the way to delivery of that feasibility, which really you're at a point of raising project financing.
Construction financing, of course. Yeah. That's great. No, I appreciate the chat here, Mike. We're just running out of time, but exciting things ahead for Vizsla.
Yeah, thank you so much. And thanks everybody. Happy to chat if you want to find us. I think our booth is 87.
Okay. Thank you very much.
Cheers.
Now help me welcome John Pasalaka, President and CEO of First Phosphate Corp, for a fireside chat with Gary Baschuk, co-head of mining and senior geologist at Patriot Canada. First Phosphate is a company engaged in the exploration and development of phosphate projects, aiming to supply the growing demand for lithium iron phosphate batteries.
Good morning.
Good morning.
So John, I mean, you've got from First Phosphate, we've got, I guess we hear so much about the batteries and cobalt, nickel, lithium iron, graphite needed for it. So how does phosphate fit in this whole picture as part of the EV revolution?
Yeah, so thank you, Gary. Phosphate, it sits under the family of lithium-ion batteries. So lithium-ion batteries, just to keep it short and simple, are batteries that use lithium. So there was many different types of lithium-ion batteries, but it seems to be down to about 2 technologies that are the forerunners. So you have the traditional nickel, manganese, cobalt in the cathode, together with lithium, and then you have lithium iron phosphate. So the difference between lithium iron phosphate and nickel, manganese, cobalt is less elements. So you've got iron, you've got phosphate, and lithium. Whereas in the other one, you've got nickel, manganese, cobalt, and lithium. So it's a little bit more complex, the chemistry and the need for input items or input materials to make the battery. So lithium iron phosphate is a slower, more easy breezy way to electrify. And it's becoming the battery of mass adoption, where we need to get vehicle prices very low, but not just in vehicles, even in large-scale energy storage. Whereas nickel, manganese, cobalt has a little bit longer range, and it's preferred in the higher-priced electric vehicles. So there's room for both, and they're like complementary, but you're really going to see a big push in LFP, and it's now 70% of battery output in China, and that's coming over here like a tidal wave, whether we want to acknowledge that or not. So that's where we're positioned as First Phosphate, is to make that transition happen here in Quebec with very pure igneous phosphate rock that produces a lot of this purified phosphoric acid, which is the precursor to make LFP cathode active material. And proud to say, product of Quebec, it's not maple syrup, it's not poutine, but c'est de l'acide phosphorique purifié, made in Quebec. So I hope everyone's proud of this. This is from our Bégin-la-Marche property in Saguenay-Lac-Saint-Jean, Quebec. And this is the precursor. This, together with lithium hydroxide, lithium carbonate, and a source of iron, would make LFP cathode active material that would then go into battery cells to make electric vehicles or large-scale energy storage systems.
So right now, where's the world's supply of phosphorus coming from for the LPFs?
Yeah, so phosphate is a very interesting, tricky commodity. It's considered an industrial mineral. We have to remember it's voluminous. There's a lot of volume to phosphate. It's almost like gravel. And that's why it can make cheaper batteries, because it's in a sense plentiful. There is a lot of phosphate in the world. There's a lot of potential areas where you can find phosphate, but the problem is a lot of the phosphate is found in marshy, swampy areas. A lot of it's found in seas and oceans, and a lot of it's found far from infrastructure. So when I was saying the word voluminous, it's important because we know there's carbon footprint, there's transportation costs, so it's important that where you have the phosphate, it be very close to infrastructure. And then there's 2 types of phosphate. There's sedimentary phosphate, which is 95% of the world's phosphate. And that is very good for making fertilizer-grade phosphoric acid, also known as merchant-grade phosphoric acid. But it doesn't make a large quantity of this, battery-grade purified phosphoric acid. We have something very precious here in Quebec, and it's igneous rock, igneous anorthosite rock, which holds phosphate, which is very pure. It's very low in contaminants, if not almost none. And we can make a lot of purified phosphoric acid. So for instance, once we achieve this feedstock, which is apatite, it's phosphate and calcium together, and we hit this with purified phosphoric acid, sulfuric acid, we get almost 95% of it converted into PPA, purified phosphoric acid for battery, and a very small waste stream which can go into fertilizers. Whereas when you're sitting in sedimentary rock, sometimes it's 10, 20, 30% that can be converted into purified phosphoric acid. So we can be making just the purest purified phosphoric acid for batteries with this igneous rock here in Quebec. So there is phosphate, but there's different grades of phosphate, and there is high purity, and high purity is extremely rare, and we have it here in Quebec, and that's what we're aiming for, strictly for the LFP battery industry, 100% focused on technology and not at all involved in fertilizers, as was traditionally the use for phosphate.
And byproduct from this would be a calcium sulfate, so gypsum, which could be used for other products as well.
Yeah, what's really interesting is, at the mine, we concentrate this. We strip out magnetite, we strip out ilmenite, we end up with an apatite. And so it's basically calcium and phosphate. So you need to break the bond, because in nature, phosphate does not usually exist on its own. So you have to break that bond. So you hit it with sulfuric acid. What happens is the phosphate is removed, and it becomes liquid together with water, And this is pure phosphate, if you will, to keep it really simple. But then what happens with the calcium and the sulfate, the calcium from the apatite and the sulfate from the sulfuric acid, they bind and they create a gypsum. Now, as you know, gypsum is used in the construction industry. It's used for wall boards. Yeah. It's used for plaster. We recently signed a contract with Rapid Wall. It's a company out of Australia where they can take high purity gypsum, and they've certified our gypsum as being some of the highest purity. I mean, we have this certified as the highest purity apatite perhaps in the world to make very high purity PPA, but also the byproduct that we're talking about, which is the gypsum, it is high purity as well. So we can craft that into panels that can be used to make modular housing. But this is not true of all phosphates. The 95% of phosphates in the sedimentary world, they contain contaminants such as cadmium, uranium, and thorium, and they become a big problem. These slag piles are a big problem in the southeast United States, for instance. We won't have that problem because of the low contaminants. The gypsum is 100% recyclable. And I don't know if anyone's been following our press, but with Rapid Wall, what we're able to do, one purified phosphoric acid plant that would make 100,000 tons of this so purified phosphoric acid would also produce enough gypsum to make 25,000 homes per year, 3-bedroom homes, which are modular and can be shipped to northern parts of Quebec, Indigenous communities. They're anti-fire, and they're also very easy to assemble in a few days. So we're very proud of that sort of circular economy aspect and helping out the housing crisis that we're also having in this country.
All right. Now, your project's up in the Saguenay, Lake Saint Jean area. How's the community been on this? What's the infrastructure like?
Yeah, so I mean, the community is wonderful. It's a great area. It's very francophone. It reminds me a lot of the books I used to read about Nouvelle France. It's very, very traditional. There's also a great number of Indigenous communities, mostly the Innu in the area. And to me, I mean, as an outsider coming in, I almost see like a perfect integration between the community there and everybody working really hard together. I find it's a very industrial area. People are very hardworking. They're very funny. We joke around a lot, okay? And also I find that they're very receptive. We've had such a strong reception out there. We signed an agreement with CEMAX, Comité de Maximisation des Retombées Industrielles, which is a regional committee for the maximization of industrial projects. So we're given industrial project status, major project status by this group. They're also helping us with local suppliers of different services that we might need. We're very well integrated. We go out to see the municipalities. We're invited out to the regional councils. We speak with the mayors. We started consulting very early in the process, even before we started drilling. And that's helped a lot. We have a partnership, full collaboration agreement with our local Indigenous community of Mastoyash, and it goes beyond IRA, it goes beyond consulting, it's partnership. It's people shaking hands, people getting something done. Yeah. We are literally trying to work with all the partners in the area for the betterment of the area.
Yeah, I think that's so important, is to actually be partners in the community with that. I mean, for infrastructure-wise, is there ports available now? I'm guessing you would just ship things down the Saguenay River and out from there? Or?
So we have something that's extremely important and it's overlooked. And very few people know this. As you know, the Saguenay is known as the aluminum battery valley. That's where Alcan used to be. It's purchased by Rio Tinto. Rio Tinto is still there. I don't know if you knew, but during the Second World War, 85% of the aluminum going into the fighter jets for the Allies the defense of in Europe was coming from Saguenay. So there is still the logistics in place from Saguenay for the aluminum that now goes directly down to Detroit, Windsor, right to the heart of automobile territory. That's all there. It's train. It's infrastructure. Rio Tinto's infrastructure is not just for themselves, but it means there's just tens of thousands of qualified workers in there, people who know industry, and there's a whole subset of sub-suppliers that have had to work, building things for Rio Tinto, building things for the industry, very strong forestry industry there. So what does it mean is we've got a very skilled workforce, but also I would say like a very entrepreneurial workforce, which is almost the most important thing that helps us to solve problems that we might have.
Well, it sounds good. Can you tell us a bit more about the history of the deposit itself? What's the exploration potential for expansion, the size of it, and grades, etc.?
Yeah, so we have one PEA out on our first property, Lac-Lorignal. It's about 140 kilometers from the deep sea port of Saguenay. There's a PEA on that one. The PEA measures about 800 million NPV, 23% IRR, which is very good in the industrial minerals world. In the meantime, we've also started drilling on Bégin-La-Marche, which is about 70 kilometers from the deep sea port. We just put 25,000 meters of drilling into that property starting in January of this year. We finished it in 3 months thanks to our excellent geologists. And again, that gets back to what you were saying about the area. I mean, people can literally live at home and go and over to the drill site and come back home at night because we're that close. So that made such that our drilling program was done in 3 months, 25,000 meters. We have found exceptional grades of phosphate. We have found phosphates, highest grades that have ever been found in the whole Saguenay-Lac-Saint-Jean area, and grades of phosphate that are equivalent to, and higher in some cases, than those grades which are associated with 3 of the current igneous mines in the world. Like I was saying before, most of the phosphate mined in the world is sedimentary deposit. It goes into fertilizer, but there are 3 mines, pretty much. One in Finland, it's got about 4% grade, carbonatite, and then there's 2 in Russia that are massive, and they actually compete with Morocco, and they're at 10% grade. We have found grades in our northern portion of Bégin-La-Marche, 10 to 12, found some massive apatite, not found anywhere in the world. You can see it tonight if anybody comes out to the core shack. Like, it's just white powder in there, 30, 35% phosphate. Small veins, of course, but the larger veins, you know, it's a very interesting deposit. Again, we have to go through our mineral resource estimate and our PEA. We're accelerating that. It's in the process right now, so by the end of the year, this will, you know, we'll see, I think, the true marvel of the Bégin-La-Marche deposit.
Great. And you're being supported by EXIM Bank in the US. How's that relationship, and how is that really supporting you?
Yeah, so the EXIM Bank of the US is similar to, is it the BDC in Canada?
Yeah.
So it is meant to be there to support exporters from the US, manufacturers, to export their products into the world. Every country seems to have one of these so they can support their exporters. So the EXIM Bank has given us a line of credit. It starts at 170 million US just to get a foot in the door, but they're very interested in the whole process in all of our plants, whether it be the mine and the concentrator, the purified phosphoric acid plant, and then eventually the LFP CAM plant. And this is something that you touched on earlier, and I really want this to be understood, is when we look at the Saguenay-Lac-Saint-Jean area of Quebec, like I was saying, there's a strategic valley there of aluminum, and it was very important, and it was built up during the Second World War, and it went quick. And it went quick, and it's one of the most wonderful forms of cooperation between Quebec, Canada, and the USA. I don't think there's any better form of cooperation that you could look out there in the history books. And we're talking about that again, aren't we, right? And so there's a base there. It's base Bagotville. It's a NATO base, and it was there for a reason. Now it's kind of like, okay, training center, whatever, but in the early days, it was there during the Second World War to protect the Battery Valley. Why? There was submarines that would come up and they'd fire torpedoes at Alma because obviously the aluminum that was going into making the fighter jets that were dropping the bombs was coming from Saguenay. So it's a very strategic part of North America. We're talking integrated North American supply chains. We're talking, we got a NATO base there. We're talking, we have integrated logistics, supply chains that feed right down into New York, right into the heart of America. So it's very, I guess, strategic to have this EXIM funding, and EXIM, I assume, sees it strategic for that reason as well. And so, you know, we're very proud to build Saguenay 2.0 with the same sort of openness and collaboration between the 3 levels of government. 4 with the Indigenous group now.
Yeah, that went fast. I had one more question. Where do you expect to be in a year from now?
On this planet?
What's the next steps?
Well, we're a public company, so I have to be tempered in what I say, but we're just loving it. And I just want to say thank you to my team that's out there. They're just killing it. We just having a lot of fun, and we just seem to go in the direction that Destiny wants to take us. But I know you're looking for a more concrete answer. We're advancing the project very fast. I hope to be at some point into a feasibility study, and also working on some of our downstream operations, actually into making the LFP cathode active material that's signaled out there. So that's what I can say now, but I hope to go faster.
Great. Well, thank you very much, John. I appreciate that.
Thank you.
Thank you.
Thank you.
Now please help me welcome Armand McKenzie, who will be introducing the Indigenous Business Panel.
Okay, great. So I assume that welcome, Mr. Bourad Nox, no et écouté. Mr. London et Nchka droit aux mots, tous m'asquedok. Je voudrais d'abord procéder à des remerciements à l'organisation. Joanne and Jenny, thank you for making this happen. Our first Indigenous panel, which is awesome actually. And then thanks to the sponsors. And then perhaps just before kicking off the panel with our distinguished guests, I would like maybe just to introduce the theme of the panel is to how to make sure that we have a good business strategy, making our interventions, our initiatives, endeavors in Indigenous territories, and how to make them successful. When I started my involvement in the resource industry sector, pretty much the Indigenous communities, peoples, individuals were left out. Okay, well, there was not much for the communities to benefit from the panels, the mining industry or the resource industry. Now, with Supreme Court decisions, the UN Declaration on the Rights of Indigenous Peoples, which I helped negotiate, by the way, it is best practice to have Indigenous peoples at the table from the beginning of the project, at the financing stage, throughout the life of the project, and at the end, at the decommissioning stage. This ensures for investors economic certainty to a successful project. So let's take a bit of time to discuss those issues with our distinguished members of the panel. I'm very honored to have them here. First of all, Chief Gilbert Dominique. I will read his bio in French. Make sure that you have those translation devices because it's a third language panel here, trilingual panel. Gilbert Dominique était membre à titre d'élu du Conseil de la Nation Innu des Pequot-Mi'kmaq depuis 1997 comme conseiller au chef. Et au-delà de ce parcours professionnel, Monsieur le chef Dominique est reconnu pour sa très grande implication au sein de la communauté de Mastoïach. Depuis son accession à la chefferie, la jeunesse, la culture, l'économie, la reconnaissance des droits de la nation continuent de se situer au cœur de ses préoccupations. Par ailleurs, le dialogue, l'ouverture et le partenariat caractérisent indéniablement ses actions. Nous sommes très honoreux de l'avoir comme participant à ce panel. Aussi, également honoré d'avoir à ce panel, le ministre Yann Lafrenière. Bonjour, Monsieur le ministre. Bonjour. Yann Lafrenière a été policier pendant plus de 28 ans, dont 26 ans au service de police de la Ville de Montréal. Servir fait partie intégrante de ce qu'il est, que ce soit comme policier, pompier, policier militaire. Il a toujours eu à cœur le service aux citoyens. S'il s'est lancé en politique en 2018, c'est d'abord et avant tout parce qu'il avait fait une promesse aux victimes d'exploitation sexuelle, soit celle de ne jamais les oublier. C'est avec conviction qu'il a présidé la commission spéciale sur l'exploitation des mineurs, dont le rapport a été déposé en décembre 2020. Étant père de 2 adolescentes, il a espoir que les générations futures pourront établir des relations sincères d'égal à égal. Et finalement, my distinguished partner, John Pasalacqua, CEO of First Phosphate. John Pasalacqua is an international business strategist with over 30 years of extensive technology and capital markets experience. In 1998, John gained the title of the top 50 international business strategist on the early internet. He's involved in private and public market planning for companies in nascent visionary industries. He's founder and CEO of First Phosphate Corp. Mesdames et messieurs, voici votre premier panel autochtone du Mining Investment of the North. Voilà. Donc, ça va être très simple. On aura une période de questions de 2 rounds. Alors, vous, Monsieur le chef Dominique, quelle est la place des Premières Nations, en particulier des Inuits, dans le développement des ressources naturelles et dans le développement de la filière batterie du Québec et dans les questions de transition énergétique?
Oui. Alors, tout d'abord, quoi inotometchek, mais je te me le donne kati tukcheniek côté intestinal. Tout d'abord, je voudrais bien sûr prendre le temps de vous saluer et de vous accueillir sur le territoire traditionnel de la nation Innu. Québec est un territoire là, qui était occupé là, par la grande famille de la nation Innu, un territoire que nous partageons avec d'autres grandes nations également ici à Québec. Pour nous, Premières Nations, c'est assurément une volonté d'être impliqué dans toute la sphère du développement énergétique, toute la filière, toute la transition, parce que énergétique également, qui va éventuellement, bien entendu, là, nous amener vers toute la dimension là, des batteries. Okay? Donc, pour nous, c'est clair que notre Première Nation, comme l'ensemble des Premières Nations à travers le Québec, nous sommes assurément des incontournables. Donc, pour nous, il y a 2 éléments que je pourrais vous partager qui sont importants. Okay? Tout d'abord, c'est qu'on veut s'assurer d'être impliqué, consulté en amont, le plus en amont possible. C'est beaucoup plus facilitant, je vous dirais, là, pour tous les promoteurs, de nous impliquer en amont parce que vous allez connaître immédiatement nos préoccupations, nos enjeux, nos paramètres également en matière de développement, okay? Parce que nos traditions, notre mode de vie est intimement lié au territoire et on sait pertinemment que lorsqu'on développe des projets miniers, on vient porter atteinte au territoire de façon pratiquement permanente. Okay? Donc, dans l'équation, vous devez obligatoirement venir nous consulter le plus en amont possible. La relation, là, à ce moment-là, est beaucoup plus intéressante et je pense que John pourra vous l'expliquer tout à l'heure. La relation, là, s'est établie rapidement là, avec First Phosphate. Rapidement, là, les préoccupations ont été comprises. Et je pense qu'on a conclu là, une entente là, dans la phase, là, comment est-ce qu'on appelle ça, la phase d'exploration. Okay? Donc, l'élément consultation en amont, le plus important. L'autre élément, c'est clair que, considérant qu'on a des droits sur le territoire, il est essentiel qu'on ne veut plus juste être des Premières Nations là, qui reçoivent des montants à titre de dommages ou de compensation. On veut vraiment là, être des partenaires de premier plan, des investisseurs également, partager le risque avec l'ensemble là, des promoteurs, l'ensemble des investisseurs. Donc, dans le montage d'un projet structurant à laquelle vous aspirez développer sur nos territoires, inévitablement, vous devez faire de la place là, aux Premières Nations.
Good. Merci beaucoup, M. Nouveau. Monsieur Lafrenière, la place des Inuits dans le développement des ressources naturelles ou en général des Premières Nations, hein, il y a des gens du territoire CRI aussi ici, d'après vous?
Bonjour, hello, Kwe, Segon, Wachia, Oulakut. Vous avez bien raison, chef, quand vous avez dit qu'il faut changer de statut. Et j'aime bien l'expression de mon collègue Pierre Fitzgibbon que vous avez rencontré plus tôt, qui dit qu'il faut partir du stade de bénéficiaire à partenaire. Ça, c'est facile à dire. Après ça, il faut le faire pour de vrai. faut vraiment travailler avec les communautés autochtones comme des partenaires. Oui, les ERA, les IBA, c'est une chose, mais il faut les impliquer, il faut travailler avec elles. Puis moi, j'aimerais vous donner un exemple très concret.
Oui.
Vendredi passé, nous étions en Waswanipi, chez les CRI, projet Windfall.
Absolument.
Et c'est un beau projet avec OTCQX et la communauté CRI de Waswanipi, où ils deviennent propriétaires de la ligne de transport électrique. Donc, ce n'est pas un IBA, ce n'est pas des retombées. Oui, il y a des jobs, oui, il y a de l'argent pour la communauté, mais ça devient vraiment des partenaires dans leur projet. Et ça, je vous dirais que c'est un gage de succès pour le futur. Mais ça amène à une autre question, un autre point que je vous amènerai. Puis c'est une leçon que j'ai apprise aussi, entre autres, avec le chef Dominique, de se donner le temps.
Oui.
Le temps d'aller en communauté, le temps de connaître les communautés. Puis, there's no one size fit all.
Yeah.
It's not going to be the same all across the province. You got to take time to understand the community, the needs,
Absolutely.
and to find out something that will fit. Sometime we're not that patient. I'll take that for myself.
Yeah.
I'm not a very patient person. So you want to provoke something, but you need to take time to
Indeed.
understand reality and to do partnership. Partnership is not only to give IBAs, to take time to develop something that will fit the community, and this is how it's going to be a success at the end of it.
Absolutely, and then congratulations actually on this hydro line announcement. I think one of our colleagues, Mathieu, the CEO of Cisco, is here, and then we talked about it, and then actually this is a very good example.
Et si je peux me permettre, c'est non seulement un succès économique pour la communauté, mais au niveau environnemental, c'est près de 500 000 litres de diesel par semaine qui va être économisé avec cette ligne électrique qui va venir approvisionner la mine. Alors, quand on parle de win-win-win, it's a win-win-win.
Yeah.
C'est bon pour l'environnement, bon pour la communauté, bon pour l'investisseur. Et moi, de voir les gens, la semaine dernière, quand j'étais là, de voir les membres de la communauté CRI qui étaient fiers d'avoir monté la ligne électrique, qui étaient fiers de travailler sur place. Ça, c'est un bel exemple. Bravo.
Absolutely. So it's empowerment, basically, of the community. John, any remarks on this? How do we make sure that the Indigenous people are involved in the industry, especially our colleagues, our partners in you? How are they? How can they be involved in the development of extractive industry, but also the battery file in Quebec?
Yeah, I mean, I think the first thing that's really important for us to understand as a mining community is we have to take away the fear, right? There's Indigenous relationships that, are there, and it's not any fault of the Indigenous communities or fault of anybody else. There's a bit of a chasm there. So, don't be afraid, right? A lot of, I find mining executives are afraid and they try to hide from it. They don't know what to do. Just face it dead on. And just remember, at the end of the day, doesn't matter what history is, you always have another human being on the other side, right? Doesn't matter if you go to China, it doesn't matter if you go to Russia, it doesn't matter Europe, South America, wherever it may be. Same thing when you enter Indigenous territory, right? It's kind of, it is us, and it's also sometimes a little bit different culturally. So just take the time, go through it, and I think you just look for partnership. And quite frankly, we got to get beyond, like I think Mr. Lafreniere was saying, and also Chef Dominique, we got to get beyond the fact that we're going there to offer something because we owe something. Sure, you can look at it that way, not a problem. But also understand that you gain a lot. You gain a lot by going in there and having a relationship. Like Chef Dominique has helped us. He's helped us lobby for phosphate on the critical minerals list. Quebec, Canada, even on the US side. I've learned a lot about the territory. I've learned where the trails are. I've learned where the sacred spots are. I've learned about the communities and the families and how to approach certain issues politically. And it's only going to help your mining projects. So I think you need to look as a partner. And I think it's also important when we go into a community, in the same way that we've worked with the allophone community. If there's a Indigenous community there, you want to work the same way. Sure, there's a little bit of cultural differences, but you want to give something and you want some help. And I think when you go in with that approach, I mean, we just had tremendous reception and tremendous help that it's going to make this project go a lot faster in terms of the environmentals, in terms of community relations, and also in terms of building something that you could feel good about. I remember growing up, everyone used to say, you know, business was evil and this and that. But I think that everybody in this room, one thing is we have to learn is I think everybody deep down inside wants to do well in life, wants to do well by another person. Very few people I know in life that actually want to hurt another person, right? Starting off, maybe they're angry, but when you start off on a fresh, clean slate, I think most people, you know, we're human, we're gregarious creatures. We want to have, we want to be liked, we want to do right by people. We all have a sort of a moral compass that we go by. So I think just, we got to take it down, we got to humble it down, we got to forget what the past was, offer partnership and make it happen. Et chef, je vous remercie pour votre accueil à First Phosphate et à moi personnellement. Et j'ai beaucoup d'hâte de venir au powwow cette année. On est commanditaire, je vais venir avec mes fils. Ils sont deux déjà tout contents là, ils sont tous préparés.
Good. En fait, on va poursuivre dans cette veine parce que puis, Monsieur le ministre, vous allez aimer aussi ce thème-là. Dans l'établissement de bonnes relations d'affaires, il faut que ce soit que les projets de développement dans ces milieux-là, dans les milieux autochtones, soient une réussite. Quelles sont les conditions gagnantes? Quelles sont les conditions essentielles? Et puis, comment le gouvernement du Québec, par exemple, peut aider à faciliter la réussite de ces relations d'affaires? Mais, chef, d'abord, c'est l'occasion de parler de vos exemples de succès.
Oui, puis excellente question. Puis, vous savez, hein, c'est important pour nous, les Premières Nations, que nous soyons reconnus comme étant là, une nation qui a ses particularités, hein, un peuple qui a son territoire, sa langue, son mode de vie qui est complètement différent, je vous dirais, là, de nos voisins. Donc, c'est un élément qui est la reconnaissance là, de nos droits, de ce que nous sommes. C'est un élément qui est important. Vous savez, nous, on travaille beaucoup avec des partenaires là, sur la base du respect, de la transparence, de l'écoute. Donc, c'est des éléments là, qui sont ancrés dans nos façons de faire, dans nos valeurs. Donc, ça, c'est important là, de considérer ces éléments-là. Les autres éléments, c'est clair que nous, on a réussi là, à bâtir en partenariat avec particulièrement la région chez nous, nos voisins, les municipalités, des projets structurants. Notamment, nous, on a développé là, vraiment là, une expertise dont on est fier là, dans le développement énergétique, dite de mini-centrale, de l'énergie communautaire. Il y a un modèle unique présentement là, au Québec où les projets qu'on développe, c'est 100% collectif. C'est important, c'est des projets à notre portée. On est présentement dans le domaine là, des projets de mini-centrales. Présentement, on développe nos compétences pour toute la sphère de l'éolien également, parce qu'on veut développer des projets également là, à portée plus là, humaine pour nous aider également là, à développer des expertises là, à ce niveau-là. Puis en passant, on va conclure avec Hydro-Québec très prochainement là, une entente de partenariat également sur la base de 50-50, 50 Hydro-Québec, 50 le milieu représenté par notre Première Nation. Et nous allons faire la place, bien entendu, à différents autres là, partenaires publics. Donc, c'est vraiment là, apprendre à connaître là, les Premières Nations. Par la suite, ce qu'on a besoin, bien entendu, c'est des leviers. C'est des leviers. Vous savez, les Premières Nations, là, on nous a amenés pendant des générations et des générations là, sur un état de dépendance étatique. Hein? Donc, nous, on a fait le choix là, de ne pas attendre après personne. On a développé là, nos capacités, on a développé des projets là, énergétiques qui génèrent des capitaux. Ces capitaux-là, ça nous permet de réinvestir dans d'autres projets structurants. Donc, mais c'est sûr que si on s'aventure dans des projets de développement minier, dans la filière énergétique qui s'en vient, la transition énergétique, c'est clair qu'on va avoir besoin là, de leviers beaucoup plus importants. Et là, j'ose espérer que le gouvernement provincial va être au rendez-vous également. parce que ça va être à l'avantage de tout un chacun là, si effectivement on a ce support pour éventuellement être en mesure de pouvoir investir, de pouvoir vraiment être perçu comme un acteur de premier plan, là, et non pas, comme le ministre le disait si bien tout à l'heure, être constamment un bénéficiaire.
Minister, we have about 9 minutes to share, both the minister and then John. Minister, you mentioned earlier that there's no one-size-fits-all solution to all of these challenges we're facing with the Indigenous communities. But what are the essential tools, ingredients to make a business relationship successful between the communities, the government, and the promoters, such as First Phosphate?
Chief was right about it. When we're talking about the nation-to-nation approach, first of all, you get to understand there is a lack of trust, lack of knowledge, and John was touching base on that also. So you get to understand that, and mistakes are going to happen. But it's not supposed to stop you from trying to do something, because the only way to avoid mistakes, my grandmother was saying, don't do anything. That's the only way you're going to prevent that. And believe me, Chief can tell you a long list of mistakes that I've done in the past, because it happened, because we're trying to do something.
Yeah.
And I think the first thing John was talking about this, it's to be involved. Not just to try to do business, but to be involved personally in this. Because most of the indigenous, I don't want to talk for them, they're going to tell you that first of all, they want to connect with your heart.
Yeah.
They want to trust you. Do I trust you as a person, as a human being? Not your company, but you as a person. So our job as a government is to try to do everything to give the power to help the empowerment of communities, tout en comprenant. I'll do Franglish. And by the way, I had the same question on the other side at National Assembly, and believe me, I prefer to be here. But tout en comprenant que les enjeux, les demandes ne sont pas les mêmes pour toutes les communautés. Et rapidement, je vais le temps aller, on a fait des ententes récemment avec Pessamit, Unamen, Pakwa. Ganawage aussi pour MCK. Mais les trois avec Pessamit, les gens me demandaient, est-ce que vous allez faire Pessamit ailleurs? Puis ce serait la première réponse du gouvernement de dire, oui, on veut Pessamit partout au Québec. La réponse, c'est non. Pessamit ont décidé, eux, d'investir pour bâtir des maisons. Unamen ont décidé d'investir pour bâtir une maison de personnes âgées. Pakwa a décidé d'investir pour la jeunesse. Et comme gouvernement, on a cette habitude de dire que c'est la même chose pour tout le monde. Un programme normé avec des petits carrés, puis on fait tout pareil pour tout le monde. Je dois l'avouer, c'est un challenge. It's a challenge to adapt ourselves. It would be so easy to consider Indigenous as a whole group. But this is not the case. It's completely different from one community to the other. That's why sometimes it takes time. But our job as a government is to give the perfect environment, or to give the empowerment. And Chief Dominic was talking about it. Whether it's a fond d'investissement, it's to give the right tools, or to be flexible. And as a government, believe me, it's not easy. But this is a challenge. When we're talking about challenge, I see that as an opportunity also to do things differently. We've done 6 agreements in the past year and a half. Believe me, we got more to do. There's so many more to do. Still working on it. It's I call that baby steps, and sometimes it brings a lot of frustration because people from First Nations have been waiting for so many years.
Exactly.
So I do take the critic, but we need to start somewhere. That's the job now. Being present on the field, being open, transparent, like Chief was saying, and open to critics saying, you know what, I understand this is not me as an individual, I received that critic, but from the past, from the history, because yes, we've done so many mistakes.
We have to commend the work of the government of Quebec that lined up all these successful agreements over the last year, especially in the hydro transition, energy transition field. And then we have to acknowledge as well that Minister went in each and every one communities in Quebec, the native communities in Quebec. Congratulations for this success.
That was the first statement to visit every communities. And just a reminder for everyone, 50% of the Indigenous people in Quebec are less than 35 years old. So this is a workforce, and they're present everywhere in the province. So when you're asking me what should we do with them, it's a must. We need to work with them.
Thank you, Minister. John, you have the last word. And then we have a wonderful partner here with the Indigenous community. And what are the essential ingredients for a successful business relationship? Please.
Oh, wow. You got 3 minutes. I think you know, it was already all very well said. I think Monsieur Lafreniere as well has, you know, echoed that we, you know, we need to look at this differently. We need to look at case by case. I think your heart has to be open. But I might want to just touch on one thing. It's just the prerogative, this energy transition prerogative. We're not going to get there fighting each other, right? Guess who will get there if we fight each other? Our enemies, right? It's enough. It's enough with all the nonsense. North America, got to work together.
It's a bipartisan issue.
Bipartisan issue, French language, English language, indigenous languages, Spanish, whatever, doesn't matter. We're all people. We got to work hard. We got a big prerogative ahead of us. We're not going to get these mines up and running if we're not working together. And the only way that that can happen, cross-border partnerships, internal partnerships, Quebec, Canada, indigenous groups, USA, Europe, our allies around the world. And you start, it's like kind of what they, you know, take a word from Greenpeace, right? Think locally, act locally, think globally. So, you know, there's times in my day where we're talking to somebody just on the field, in the fields.
Yeah.
And there's other days, next day you're talking to the president of a company or a country, and you have to be able to just be in all those levels and be happy and have that common courtesy and respect, which I think Minister echoed. And gotta have fun, right? You gotta love the people that you deal with, which I do.
I think we had a very fun and interesting panel here. Chief,
oui, j'aurais le goût également d'ajouter un élément qui est important, puis je pense que c'est la responsabilité des différents niveaux de gouvernement, au fédéral et bien sûr là, au niveau de la province. Il faut obligatoirement là, que les gouvernements s'engagent à reconnaître les droits et le titre des Premières Nations sur le territoire. Okay? C'est fondamentalement important et le véhicule pour y arriver, c'est par la conclusion d'un traité, un traité convenu de façon honorable. Et c'est important pour l'ensemble des promoteurs et des investisseurs qui veulent investir dans des projets structurants dans nos régions parce que ça va amener un élément de certitude. Donc, c'est un élément important. Donc, moi, j'invite les promoteurs, les investisseurs à questionner, bien sûr, les gouvernements lorsqu'il y a des projets là, qui se développent, à savoir si, effectivement, là, ce genre de démarche est en cours.
Monsieur Nouveau, chef Dominique, merci beaucoup. Ministre Yann Lafrenière, merci beaucoup pour vos contributions, votre contribution très, très active et intéressante ici. John, dear John, you're always like on the point. It's very good. Thank you so very much for this. Une bonne main d'applaudissement pour le premier panel autochtone.
Merci.
Merci Yann,
Merci chef.
Thank you all for the wonderful panel. I would like to now welcome Gary Stanley, Managing Director of Global Mineral Strategies, who will be moderating the Quebec Critical Metals Pipeline Leader panel. Welcome.
Good afternoon, everyone, and thank you so much for being here this afternoon. And obviously, as you enjoy your lunch, we are also absolutely delighted to have a true all-star panel up here to talk about the importance and the vital issue of mining and Quebec. I'm here with three distinguished gentlemen, and we look forward to, over the next 30 to 45 minutes, to have a Q&A session about the importance of Quebec and mining and the future of the critical minerals and battery supply chain. I'm Gary Stanley, and I am the Managing Director of Global Mineral Strategies, LLC. Up until the end of last year, I was the director of the Office of Critical Minerals and Metals at the U.S. Department of Commerce in Washington, D.C. I spent 40 years working for the Department of Commerce, advocating on behalf of the materials, critical minerals, and metal sectors. And now, as I've stepped into private life versus public life, I'm now looking forward to the next challenge of working directly with folks like the provincial government here in Quebec, but also with you and with others as we seek committed projects, committed activities to continue the progress that has been made in such a short period of time. So again, I'm Gary Stanley, and I'll allow each of my co-panelists to introduce themselves.
Thank you very much, Gary. Bonjour tout le monde. Donc, je suis Yann Morissette, sous-ministre associé au ministère des Ressources naturelles et des Forêts du Québec. Merci beaucoup pour l'invitation et j'ai bien hâte d'échanger avec le panel. Merci.
Bonjour tout le monde, Amio Choquette, directeur principal investissement chez Investissement Québec. Pareil même, ça me fait plaisir d'être ici ce midi pour discuter sur l'avenir des minéraux critiques et stratégiques au Québec. Et merci à Joanne Jobin et l'organisation pour nous avoir invités.
Bonjour tout le monde, Sylvain Lépine. I'm a real Quebecer geologist, raised and born in Abitibi-Témiscamingue. And since 3 months, I jump on the other side of the table. I'm a director of a new fund created in the northern Quebec to invest in the northern mining project in Quebec. So, bon appétit tout le monde et ça me fait un grand plaisir d'être ici.
So I must admit to feeling a little swinging below my weight up on this stage compared to these gentlemen, but I'm very excited and really appreciate the opportunity to moderate our panel today. To set the stage, I, as a industry analyst and a researcher, did a little homework for myself just to get a real appreciation of the importance of mining in Quebec. And here's what I came up with. First of all, it is absolutely true that Quebec is a mining powerhouse. The province is home to not only committed professionals, but also a provincial government that strongly supports this sector. Here's 5 little nuggets that I came up with. First of all, that the mining here in Quebec is the largest province in terms of surface area, where Quebec is home to more than 200 active mines and quarries. Secondly, Quebec houses approximately 900 mining-related facilities, with many of them in rural and isolated areas and communities that rely on the mining and processing sector as an essential part of not only its social fabric, but its economic growth and development. Thirdly, and this is the part as a former chemical engineer in a natural resource extraction sector, the third thing that really stood out to me is that the sector directly employs between 25 and 26,000 skilled and well-paid workers. You add to that the direct as well as indirect benefits of employees, and it's more than double. Fourthly, mining activities derive more than $10 billion in financial benefits to the province. Fifthly, the provincial government here in Quebec receives more than $1 billion in tax revenues annually from the mining sector. This captured my attention and really sets the stage for what I think will be a very meaningful conversation. So with that in mind, we begin with our first question, and this is directed to the panel. In January of 2024, the Quebec provincial government released a new critical and strategic mineral action plan for the 2023 through 2025 time period. What specific things does the CMS contain that will drive future investments in critical minerals and battery space, especially given the uncertainties in the current and future market conditions, as well as the investment climate?
Merci beaucoup, Gary. Peut-être juste pour mettre les choses en perspective, pour ceux qui ne le savent pas encore, le gouvernement du Québec a été le premier à lancer une stratégie sur les minéraux critiques et stratégiques, donc en 2020, et la stratégie se voulait évolutive. Donc, on veut être agile, on veut être capable de s'adapter à la réalité et au contexte qui est aussi évolutif. Donc, juste avant les fêtes, effectivement, une mise à jour du plan a été annoncée, dans lequel on venait mettre en œuvre différentes mesures, différents programmes, notamment en matière de recherche et développement, pour être capable justement de continuer d'appuyer le développement de l'industrie. On avait aussi différentes mesures pour la formation de la main-d'œuvre. On sait que c'est un enjeu aujourd'hui partout pour assurer le développement économique du Québec, mais particulièrement dans le secteur minier. Et donc, on est venu aussi mettre en place des mesures à ce niveau-là. On a aussi ajouté 6 nouveaux minéraux critiques et stratégiques à notre liste, ce qui fait en sorte que maintenant, elle en compte 28. Et pour ceux et celles qui travaillent sur ces minéraux critiques et stratégiques, ça va vous permettre d'avoir accès justement aux programmes qui ont été mis en place par le plan sur les minéraux critiques et stratégiques et la mise à jour qui a été faite juste avant les fêtes. Donc, je vous dirais qu'il y a une série de mesures qui ont été ajoutées justement pour être capable de continuer de s'adapter et de soutenir le développement du secteur au Québec.
Évidemment, le plan québécois de la mise en valeur des minéraux critiques et stratégiques, c'est un plan qui est issu du gouvernement. Nous, Investissement Québec, on est une agence de développement économique, on relève du ministère de l'Économie et effectivement, on est là pour supporter la mise en œuvre du plan qui a été mis de l'avant par le gouvernement. Investissement Québec, avant même les changements au plan ou avant même la mise en place de ce plan, on était déjà présent pour financer les compagnies minières. On disposait d'un fonds qui s'appelle le Fonds Capital, Ressources naturelles et énergie. C'était un fonds de 1 milliard de dollars. Il a été recapitalisé dans le dernier budget. Maintenant, c'est un fonds de 1,5 milliard de dollars. On est effectivement là pour supporter la politique dans toutes nos analyses de dossiers d'investissement. On travaille en très grande collaboration avec le ministère des Ressources naturelles, le ministère de l'Économie. Et on est là pour supporter des entreprises là, qui veulent développer les minéraux critiques et stratégiques au Québec, autant au niveau de l'extraction, mais aussi au niveau de l'affinage, pardon. Et c'est ça.
Et un peu synchronisé avec le nouveau plan, il y a un nouveau fonds minier qui a été développé dans le nord du Québec qui s'appelle le NQ Investissement Minier, NQ Mining Investment. NQ, c'est pour Northern Québec, pour le nord du Québec. Et dans cette vague-là, le message est très fort de ce fonds parce que c'est 2 organisations locales, qui est la Société de développement de la baie James et l'administration régionale baie James, qui ont décidé de déployer des fonds pour supporter les projets miniers dans le nord du Québec. Fait que donc, c'est vraiment important parce que ça démontre que les organisations locales croient au développement minier et croient aussi qu'il peut y avoir du développement minier en concertation et en collaboration avec les communautés locales et les Premières Nations. Donc, ça fait partie tout du grand plan là, que le gouvernement du Québec a mis en place.
Merci, excellent. Next question has 2 parts. It falls under 2 very basic questions, but they're in some ways support, but they also oppose each other in some ways. First question, what I call, what is missing? In other words, what do you see that is missing in the current environment that could be a hindrance or deterrent from the establishment and development of a North American battery supply chain? We'll start there. What do you see that is missing? Ian.
Merci beaucoup. Donc, effectivement, plusieurs choses ont été mises en place par le gouvernement du Québec justement pour essayer de contrer ces manquements. Je voudrais que 2 défis qu'on voit à l'heure actuelle, puis Mme Knight l'a aussi abordés ce matin dans sa présentation. Le premier, c'est effectivement comment on peut, nous, gouvernement du Québec ou les entreprises québécoises, s'inscrire dans les chaînes de valeur nord-américaines pour être capable de tirer notre épingle du jeu. Donc, je vous dirais que ça, c'est probablement un des principaux défis à l'heure actuelle. Et le deuxième, c'est peut-être sur la traçabilité, où là, on veut travailler justement à s'assurer que nos minéraux puissent être tracés et qu'on puisse les suivre et voir à quel point ils sont capables de s'inscrire, encore une fois, dans les chaînes de valeur, mais qu'on puisse être conscient d'où ils viennent exactement.
Une des choses qui manque pour l'instant, c'est des mégawatts. Je pense que le gouvernement, Investissement Québec, on a collaboré depuis 2018-2019 à l'élaboration de la stratégie batterie. Les équipes d'Investissement Québec international, secondées par mon équipe à moi et d'autres équipes chez IQ, on a travaillé fort pour attirer des projets au Québec. Il y a plusieurs projets qui ont été annoncés au Québec. Présentement, certains sont en construction. Donc, d'ici les 2-3 prochaines années, il devrait avoir quand même, la chaîne de valeur devrait être assez bien implantée. Encore là, au niveau minier, il y a eu un boom d'exploration, surtout dans le lithium, dans les 2-3 dernières années. Ces projets-là progressent, ça prend un certain temps. On va avoir des mines. Présentement, il y a une usine d'hydroxyde de lithium qui est en construction à Bécancour. Donc, j'en parlais un petit peu tantôt. L'affinage, c'est important pour développer cette valeur-là, cette chaîne de valeur-là. Il y a d'autres projets aussi qui sont considérés au Québec dans ce sens-là et pour lesquels on est en discussion avec d'autres partenaires. Donc, une fois que tous ces projets-là vont être en place, il suffira maintenant à Hydro-Québec d'arriver avec des nouveaux plans de développement pour l'énergie au Québec. Et une autre vague de projets pourront s'établir au Québec par la suite.
Merci. Ben, pour appuyer tes propos, c'est clair qu'au Québec, principalement dans le nord du Québec, qu'est-ce qui manque, c'est des projets avancés. Ça, c'est sûr, parce que qu'est-ce qu'on parle depuis tantôt? Il y a deux mots. Premièrement, il y a une synergie qui doit être mise en place. Le gouvernement a mis des très bonnes bases pour développer l'industrie minière et le nord du Québec. Et après ça, c'est le rôle des fonds institutionnels, le rôle des promoteurs et de travailler ensemble pour amener une synergie. Et plus qu'on va avoir de projets avancés au Québec, plus qu'on va être capable d'amener d'infrastructures et ça va amener plus de projets avancés. Donc, c'est sûr que c'est une roue qui tourne. Et aussi, je dois dire, pour avoir parlé avec plusieurs maires de la région du nord du Québec et des Premières Nations, qu'est-ce qui manque aussi, je crois, c'est que les municipalités se sentent peut-être plus impliquées dans le développement nordique parce que ça va être le hub, ça va être vraiment les villes implantées dans la Gémésie. Là, je parle pour le nord du Québec, mais c'est eux qui vont permettre de passer du camionnage vers le secteur ferroviaire et autres. Donc, je pense que ça va être important de continuer à travailler toute la chaîne de valeur en prenant en compte toutes les parties prenantes, incluant les municipalités et évidemment les Premières Nations aussi.
Merci. The next part of that question is what's next? In other words, beyond what's missing now, what's the next link in the chain to move the projects forward in this space? Let me preface with, in my time working for the U.S. federal government, this was not a weekly exercise, this was a daily exercise. And always asking ourselves the question, is what we're doing working? And I think one of the ways that you stay contemporary and you stay sharp is by being willing to ask yourself the questions, is this the right approach? Is this working to meet industry's needs? Is the government assisting or is it inhibiting? And so part of this question was driven from my time as the director of the Office of Critical Minerals and Metals, because I was not only asking that for my staff, myself, and our program, but also the department, the administration's overall theory of the case, its overall determination on whether or not we're going to be successful. So it's what's missing and what's next.
Merci, merci beaucoup. Peut-être encore une fois, juste pour faire un lien avec la présentation qui a été faite ce matin, on a bien vu les courbes de demande qui sont exponentielles, notamment pour le lithium, le cobalt et le nickel. Et le Québec regorge de ces trois minéraux et de bien d'autres. Donc, on a une richesse qui est immense. Et je vous dirais qu'il y a une volonté qui est très claire du gouvernement du Québec, justement de favoriser le développement de projets miniers dans le domaine des minéraux critiques et stratégiques. Et la volonté, c'est d'être capable d'accompagner les promoteurs, les partenaires, tout au long du processus, que ce soit de l'exploration, la mise en valeur, l'exploitation, la restauration et même maintenant avec le recyclage et l'économie circulaire. Donc, vous allez être capable de trouver au Québec un écosystème qui est complet et des ministères qui travaillent ensemble justement pour vous accompagner tout au long des projets et être capable de vous soutenir, que ce soit pour être en mesure de s'adapter aux différentes réglementations, être capable de répondre aux critères, ou encore en matière d'investissement avec Investissement Québec ou encore avec le fonds NQ Investissement Minier. Donc, on est capable de vous supporter aussi tout au long de votre processus. Donc, vous allez trouver un engagement qui est clair, une volonté qui est ferme, puis des gens qui sont là pour vous accompagner tout au long du processus, pour être en mesure justement de tabler sur cette richesse collective qu'on a au Québec et qu'on veut exploiter et mettre en valeur.
Merci.
Ouais, comme je disais, Investissement Québec a toujours été là pour supporter l'industrie minière. Même chose pour les autres industries au Québec. Tout ce qui est en amont, en aval de l'industrie minière, on est là. On parle sur le stage ici, il y a moi, représentant d'Investissement Québec, il y a Sylvain de NQ Investissement Minier, mais il y a d'autres organisations comme la Caisse de dépôt et SIDEX qui sont là aussi pour supporter, le Fonds de solidarité qui sont ici pour supporter des projets miniers. Pour nous, c'est la continuité. Encore là, j'en parlais un petit peu tantôt, manque de mégawatts à court terme. Mais l'équipe d'Investissement Québec International sera toujours là pour supporter le secteur de la batterie, la chaîne de valeur en batterie. Nos équipes chez Investissement Québec International présentement ont changé un peu leur focus. Au lieu d'essayer d'attirer des nouveaux projets, maintenant sont là pour supporter les projets qui sont en place, soit par des supports au niveau de l'accompagnement environnemental ou des relations avec le gouvernement, les gouvernements locaux, provinciaux. Et aussi, chez Investissement Québec, il y a une vice-présidence qui est en charge de la main-d'œuvre et le développement économique. On a des employés actifs chez Investissement Québec qui sont là pour supporter les projets de la chaîne de valeur des batteries, pour les aider à recruter du monde et former du monde. Et tout ça se fait évidemment en collaboration avec les autres ministères du gouvernement. Alors, en gros, continuité pour nous autres, mais adaptation de nos services en fonction des besoins de l'industrie.
Excellent. Merci. Sylvain.
Yes, from my perspective, I think in the future, the next move, I think, will be consolidation. For sure, we will need a lot of mineral, a lot of mine, and we know now with the ore sorting, with all the technology, I think it would be very interesting to see some regional infrastructure, regional mill, and I think we will see a lot of consolidation to be more efficient, and I think it will be the next step, especially in the northern Quebec. And I could say for lithium, it could be the first step, but yeah.
Merci. So for the next two questions, we'll reverse order. So Sylvain, I'll start with you, and then we'll come this way. Again, from my experience with the federal government, along with what's missing and what's next, the third high priority area is what exactly is the government's best role in supporting the critical minerals and battery supply chain space. In other words, given that the level of funding may or may not be sustainable, it's essential that governments at all levels, in the states, at the federal and the state level, here, of course, it's at the federal level and the provincial level, how best to determine the way to support these absolutely essential critical mineral and battery supply chains going forward. Sylvain.
Oh.
We'll reverse the order of the last two questions.
Oh yeah, no, it's perfect. Yes, we know where the long journey begins. It's when you finish your infill drilling until the permitting, it's a long way to go. The company need a lot of support because they are spending a lot of hard cash, a lot of studies, and the real answer is we don't know when we will be in production for real. We can make a forecast, but I think the company need help in this moment, and the institutional funds should be there to support them after the discovery until the beginning of the construction. So I think it's the key. We must be there, and we must support the industry in the purpose to bring the project on to production to feed the supply chain. It will be very important. Yeah.
Merci. Camille, please.
Ouais, un peu en complément avec ce que Sylvain vient de dire, effectivement, nous, Investissement Québec, nous, quand on supporte les projets miniers, ça nous prend une évaluation économique préliminaire, un PEA en anglais. Je pense que les compagnies d'exploration ont des fois de la misère, des fois moins de misère à lever du capital, mais quand vient le temps de développer les projets, il y a un manque définitif de ce côté-là. Alors nous, on est là pour supporter ces projets-là. Je regarde, dans le cadre de notre travail, je pense qu'on participe à plusieurs conférences, puis il n'y a pas de juridiction, en tout cas en Amérique du Nord, puis pas beaucoup dans le monde non plus, qui offre ce que le Québec offre pour développer son industrie minière et la chaîne de valeur qui s'ensuit. On peut toujours améliorer nos services, notre offre de services, notre offre de financement, tout ça, là, mais je pense que les projets québécois sont choyés. On a aussi au gouvernement du Québec, il y a la Société du Plan Nord qui est là aussi pour supporter le développement des infrastructures sur le territoire nordique. Donc, c'est ça. Je pense que pour le Québec, on doit continuer à faire ce qu'on fait en collaboration avec le gouvernement fédéral aussi, et les gouvernements locaux.
Oui, merci. De notre côté, je pense que notre rôle, on le voit comme étant celui d'un accompagnateur et d'un facilitateur. Vous l'avez dit, c'était mentionné, le permitting, c'est un processus qui est long, qui est rigoureux, mais notre objectif, c'est tout en maintenant des standards élevés, d'être capable d'accompagner les promoteurs de projets, comme je le disais tantôt, tout au long du processus. Donc, on a mis en place notamment un bureau de coordination des droits qui fait en sorte qu'on va faire le lien, nous, et on va vous accompagner dans vos relations avec les différents ministères. Au cours des dernières années, tout en maintenant, comme je le disais, des standards élevés, on a été capable de diminuer les formalités administratives de 30%. Donc ça, c'est quand même significatif pour accélérer les projets, pour faciliter aussi certaines décisions. Donc, c'est pas parfait, il y a encore du travail à faire, on y arrive, mais je vous dirais que c'est ça, on se voit comme étant un accompagnateur et on va vous aider justement à naviguer dans l'appareil gouvernemental pour aller chercher toutes les autorisations qui qui sont nécessaires et vous allez trouver évidemment au Québec un environnement qui est stable, qui est prévisible et qui est sécuritaire. Donc vous savez à quoi vous attendre, les règles sont bien connues et nous on est là pour vous accompagner encore une fois et vous aider à naviguer pour que les projets puissent se réaliser.
One of the reasons I asked that question is going back to 2017 and 18 when the Department of Commerce was inserted directly into the critical mineral conversation. One of the things I was most concerned about, even back then, was the need for governments to fight the urge to be isolated. Here's what I mean by that. Working for an agency like the Commerce Department, we have a large federal bureaucracy. So you have the Commerce Department with its mandate, you have the Defense Department, you have the Energy Department, you have the Interior Department, you have the State Department. Come to find out, when I was the lead coordinating author of the 2019 Federal Critical Mineral Strategy, it was eye-opening to realize that there were 16 federal agencies that had critical minerals equities. And one of the things I strongly encouraged the White House to do was to press the agencies to accept responsibilities not only for those equities, but to work together, because it's so easy, especially at the federal level, to be cut off and separated from what the states or the provinces are doing. And so one of the things that I think is an important role that government can play is to be that facilitator, to use its power as a convening authority to bring together parties that may on the surface oppose each other, but still need to be a part of the conversation. And when the federal strategy was released in 2019, we had not only the core 5 agencies of Commerce, Defense, Energy, Interior, and State signed on, but we had Environmental Protection Agency, we had the science people, we had the permitting people, all coalesce around one federal strategy. That's one of the things that I think that especially at the federal and even provincial level, there is the ability to bring together parties to be a part of the conversation. Because I think we all want to get to the same destination. The question is, what's the journey to get there? And one of the things I think that governments can do is use that convening authority to facilitate conversations, even if those conversations are difficult. This is not an easy job. Everyone here knows this. Each of you gentlemen knows this. But the only way that we can be successful here is to bring the parties to at least a meeting of the minds to understand that difficult questions have to be asked, they have to be answered, but they also have to be executed with the strategy to address them. And that's everything from energy to environment to communities to the rural areas. All of these parties need to have a voice. Hence, one of the things I think I would love to see governments continue to do, even within their own countries, but also crossing the border. And I don't think there's a better partnership than the Canadian and US participants in this process. Mm-hmm. Okay, last question. Okay, going back to the federal strategy. We had nearly completed the strategy, but the interagency and yours truly felt that there was one section that was missing and needed to be addressed. And it's related to my last question. From your experience and your knowledge, what needs to be done to attract, secure, and retain younger, enthusiastic, and skilled talent in the critical minerals and battery supply chain sector? From our perspective, this is also a multi-stakeholder activity, but welcome your thoughts. Sylvain, please, if you would.
Okay. I think Je crois qu'il faut commencer par la base et on sait que tout le monde veut travailler pour de donner sa carrière pour une histoire winner. Donc, ça nous ramène à la promotion de l'industrie minière, je crois. Il faut défaire les faux mythes. Il faut vraiment expliquer à tous les jours c'est quoi qu'on fait dans notre travail, pourquoi qu'on le trouve excitant, et faire de la représentation dans les écoles. On retourne vraiment à la base. C'est des discours qu'on dit souvent, mais je pense que c'est la base de former une relève, des jeunes talents qui vont décider est-ce que je vais en médecine ou non, je vais m'en aller ingénieur minier. Ça peut diriger beaucoup les talents et une fois à l'intérieur de l'entreprise aussi, c'est important d'engager des gens qui vont faire du mentorat avec les employés. C'est beau d'attirer des talents à l'intérieur de l'entreprise, mais pour les garder, il faut vraiment faire du mentorat et qu'ils se sentent accompagnés. En d'autres mots, qu'ils aient l'impression de continuer à apprendre, de continuer d'être à l'école, mais à l'intérieur de l'entreprise ou qui vont continuer à grandir.
Effectivement, là, je suis totalement d'accord avec ce que Sylvain vient de dire. Peut-être un avantage que l'industrie a, en tout cas tout le moins pour les minéraux critiques et stratégiques, c'est qu'il y a une belle vibe, si on peut appeler, là, avec toute l'électrification des transports, tout ça. Je pense que ça résonne mieux chez les jeunes que l'industrie minière pouvait résonner il y a 5-10 ans. Ceci dit, c'est un défi constant. La formation, je pense que les Premières Nations sont appelées aussi à contribuer. Évidemment, ces projets-là sont tous dans des régions éloignées. Effectivement, beaucoup de promotions à faire. C'est quand même une belle industrie, généralement bien payée. Alors, il y a un attrait, je pense. Mais puis, évidemment, chez Investissement Québec, je le disais un petit peu plus tôt, il y a le problème de main-d'œuvre, il n'est pas juste dans l'industrie minière, là, il est partout. Alors, c'est d'adapter les outils gouvernementaux et des agences comme les nôtres pour tenter là, de subvenir aux besoins de main-d'œuvre pour tous ces projets-là. Mais c'est un défi constant pour les années futures. Là.
Oui, merci. Évidemment, je suis d'accord avec tout ce qui a été dit par mes collègues. Je pense qu'il y a une carte aussi qu'il faut jouer, c'est que malgré le fait que l'extraction minière, l'industrie minière ne soit pas un jeune secteur, hein, on en fait depuis des dizaines et des dizaines et des dizaines d'années, mais je pense qu'il faut continuer à présenter le secteur comme en étant un d'avenir. Donc, on va souvent parler des nanotech, biotech, les nouvelles technologies, l'intelligence artificielle, mais le secteur minier est aussi un secteur d'avenir. Puis si on veut réussir la transition énergétique, si on veut réussir la décarbonation de l'économie, on va avoir besoin de minéraux critiques et stratégiques. Et donc ça, je pense que ça peut parler aux jeunes, les inciter justement à faire partie de la solution, puis être capable de contribuer aussi en participant au développement de nos ressources. D'être capable de faire partie de la solution. Les pratiques ont beaucoup évolué aussi au cours des dernières années. Il reste du chemin à faire, mais je pense qu'aujourd'hui, on peut être fier de tout ce qui a été fait, puis d'être capable de présenter le secteur comme en étant qui a des pratiques environnementales qui sont plus ce qu'elles étaient à une certaine époque, qui ont beaucoup évolué et qui maintenant peuvent contribuer encore une fois à l'avenir du Québec, à l'avenir de la décarbonation et de la sécurisation des approvisionnements.
Thank you, gentlemen, for the answers to what is a very, very difficult question, not just for us, but even more so to the private sector. Share a little story, and this has happened within the last 2 weeks. Mm-hmm. At a social event that my family and I had been invited to, during the engagement, I actually met with a company, and they expressed to me that in more than 15 years, they have struggled to keep the young, skilled talent that is really necessary. We all are aware of the number of scientists and engineers that even places like China are able to draw into the conversation and to be a part of this process. The idea that this is no longer a previous generation mining and minerals and supply chain sector, this is some of the most cutting edge engineering, science and technology I have ever seen. And I think part of what is missing is triggering the imagination, particularly of the younger people. And I said and I was somewhat floored to hear that what they were offering was exceptionally well paid, very influential positions, but they couldn't even get local colleges to support a career day, a job fair. And I think that's where so much of this challenge lies ahead. I will say though, particularly in about the last 3 to 5 years, I have been quite encouraged to see that there does seem to be a transitioning of the younger generation to understand it. In my position at government, the last 5 people that I hired were all 30 years of age and younger. 4 of those 5 were women. That was very encouraging to me, and I hope is a signal that we're seeing across a lot of areas. But I do think the government has responsibility here, but of course working with the private sector is absolutely essential to make this not just practical from an economic standpoint, but from being able to do this sustainably so that the future is optimistic about good jobs, exciting jobs, and again, some of the most cutting edge engineering, science, and chemistries I've ever seen, even especially in the battery space. So we have just a few moments left, and so I felt that before we closed, I would give each of you a chance to share any closing remarks that you might have before we conclude our panel. Sylvain, if you would.
Oh yes, if I could have a last word. It's a word for the promoter here. NQ Mining Investment is there to help you. If you have a project in northern Quebec, please feel free to talk to me, and we could finance the project from the early stage exploration until the construction. So please don't be shy to talk to me.
Excellent. Amia, please.
Pareil même, si vous avez des projets là, des projets de mise en valeur, on est là pour vous supporter, mais également là, tout ce qui est la chaîne de valeur de la stratégie batterie. Je pense que je voudrais remercier Gary. Thank you very much for being our moderator.
Thank you.
Et mes co-panélistes.
Merci. Merci encore. Donc, évidemment, peut-être être certain que si vous venez au Québec, vous allez trouver un partenaire en gouvernement du Québec, donc qui est là pour vous soutenir, qui est là pour vous accompagner dans vos projets. Je pense que, sans paraître prétentieux, je pense que c'est ici que ça se passe. Vous êtes à la bonne place, puis on est là pour vous accompagner. Il y a plusieurs collègues qui sont avec moi ici aujourd'hui, demain, qui étaient là hier. Donc, n'hésitez pas à venir nous voir, à nous parler de vos projets, puis on est là pour vous soutenir dans vos démarches.
Peut-être un petit dernier mot. La dernière fois, je pense que c'est toi qui l'avais fait, mais il y a l'événement Québec Mine Énergie en novembre. Alors, vous êtes tous invités à Québec même, ici même, au Centre des Congrès.
Du 18 au 22 novembre.
Well, let me close by saying this, that first of all, it was an absolute thrill to be able to be a moderator of this panel with these amazing gentlemen up here, but also just to be a part of the conversation with everyone that is here. And what I would say is that I think one message I would leave behind is we need to do a better job of celebrating our accomplishments, our great progress in this area. Think of how much progress has been made in this space in such an amazingly short period of time. Think back 5 years ago to where we are now. And I would like to encourage everyone, I understand the struggles are difficult. I understand that there is great competition. I understand the global competitiveness issues. I also understand that these are controversial projects in many forms. But given the importance of the future and the need for us to stay on course, is celebrate the accomplishments. Celebrate when something great happens in this space, and don't be afraid to share it with others, because what does that do? 2 things. It's motivation and encourages investment, which is what events like THE Mining Investment Event is all about, is how to spur investment and ongoing support for these projects. So I thank my panelists. I thank you all for your attention during lunch today. Please enjoy the rest of the conference together. Thank you.
Thank you.
Merci beaucoup, messieurs. Thanks a lot, gentlemen. That was very insightful. So thanks for your time and sharing today. So my name is Thomas Bachan from National Bank Financial. I work in investment banking, and I'm pleased to be your host for this afternoon's session. So first off, it's my pleasure to welcome Carl Comartin, President and CEO of Winsome Resources. Winsome is advancing its flagship Adina project in the James Bay region and recently secured an option to acquire the Renard Diamond Mine and associated infrastructure just nearby. So Carl, up to you.
Hello. Alors, maybe a small correction. I'm not the president and CEO. I'm the general manager of Canadian operations for Winsome Resources. So, good afternoon. It's a pleasure for me to come talk to you about Winsome Resources and provide an update on our Adina project and our near-term plans and ambitions. We could skip that probably. So Winsome is a small, relatively small junior mining group listed on the Australian Stock Exchange. We were listed on November 2021. That's about when I joined. And shortly into this adventure, we made a significant discovery in Adina, on our Adina project, one of 4 projects that we have. The third hole hit 160 meters of pegmatite, mineralized pegmatite, and then by the time we received the assay results in Christmas time, we knew we had something significant on our laps. 107 meters of 1.34 lithium oxide made it a significant discovery. We've been drilling ever since October 2022, when we made this discovery drilling. We released maiden resource estimate last December. That was based on partial results that we had accumulated then. 59 million tons of 1.12, all inferred. Since then, last week, we produced an upgraded resource based on additional drilling and additional sample assay results of 78 million tons in-pit constrained at 1.15% lithium oxide. And that would place us in the fourth largest lithium-bearing pegmatite deposit in North America. We've also signed an exclusive option to acquire all the infrastructure of the Stornoway Renard mines, which is located some 60 kilometers from our Adina project up in James Bay, UHE territory. Market cap right now is around 230 million Australian, and we got 40 million Australian in cash. Our management team, so we started pretty simple and humble with Chris, basically, and a part-time CFO, and myself and half a dozen contract geologists, and we've grown the team ever since. We have Geneviève Morinville, our VP Sustainability and Regulatory Affairs, who joined us a little more than a year ago, and Antoine Fournier, our new VP Exploration, also joined us about a year ago. Recently, we've added to the management team with the appointment of Nicolas Bolduc as VP Human Resources, and more to the point, Kim Nguyen as an experienced metallurgical engineer as VP Projects to lead the various studies we have ongoing now. We started from half a dozen to about 100 people, 40 permanent staff, mostly in Quebec, and in about 60 contractors now. Our projects, we have Adina, located sort of halfway between the Trans-Taiga Highway and the Stornoway Mine, which is 60 kilometers to the south. Canset, interesting project, 200 square kilometers, 395 claims on which there is a known showing, very richly mineralized, only a bit small, about 3 million tons, just by the side of the road. That was drilled by our predecessor in 2017. And by comparison, Adina is 30 times that size right now and growing. Sirmac-Clapier, which is close to the Mont Blanc deposit. And we've added 91 claims in the surrounding of Adina, our Adina project, which are mostly a pure exploration play. Adina is definitely our flagship project. That's the one we see going all the way. So Adina, 86 claims, 44 square kilometers. It's sitting on trapline MO1A as part of the traditional hunting territory of the Mistissini First Nation community, with which we in rather constant communication. And we see there the location of all the drilling that was done over the past year and a half or so, which is the focus of our investigation so far on Adina, and where the resource is located. We have a number of anomalies we wish to pursue. Those white and yellow shaded areas are gravimetric low anomalies, which could be hiding and a clue to underlying additional pegmatite deposits. So as I mentioned, we had a maiden resource estimate that was based on 93 holes that we had in December, for which we had complete assay results. Since then, we've doubled the spacing. We're now too close to 40, 50 meter spacing, which prompted this upgraded resource estimate of 78 million tons, 61 million tons of which are indicated, classified as indicated now. We've improved slightly on the grade and definitely improved on the tonnage. So far, we've done about 81,000 meters of drilling, 261 holes in about 20 months. This was the discovery outcrop. We had a team of young geologists and field hands that were looking for a place to land, and basically they landed on an outcrop that turned out to be a mineralized pegmatite. So we brought in the rig, and in October we made this discovery of the main zone. And this perimeter we see there is about 200 meters by 80 meters, is where the main zone outcrops. So we find pegmatite, mineralized pegmatite outcropping over this area. This green outline we see in this area here, and since then this has contributed to drill off and define the main zone. The main zone is 1.5 kilometer long, dipping about 30, 40 degrees to the south. It's anywhere from, we traced it down to 350 meters from surface. It's open east and west. It's anywhere from 10 to 80 meters in through thickness. So right there is 40 million tons plus in the main zone. The footwall zone, we had a few drill holes going astray and continuing, and they started hitting pegmatite in the footwall of the main zone. And the footwall zone turned out to be a swarm of pegmatite dikes that have the potential to be even larger than the main zone. So the focus of our resource estimate so far has essentially been on the main zone and the footwall zone. But we know we have a corridor of mineralization that is most promising, partly due to an original showing that was drilled by our predecessor in 2018 that gave its name to the Adina property. It was discovered by a Miss Adina who worked for the government of Quebec at the time. And the east zone. So we know now that the main zone ties into the east zone, so makes it a very large pegmatite body, over 2 kilometer long and growing. This was the block model we had in last December, our maiden resource estimate. and the 59 million tons, on which we had defined a conceptual pit. This pit doesn't go very far, about 160 meter deep, and it shows the extent of the drilling that was done at the time. Now this drill spacing has been doubled. We see it in our upgraded resource estimate. We're now standing at 78 million tons of 1.15, 4/5 of which are drilled to indicated level of confidence. And you sort of see the outline of the previous pit shell compared to what we've expanded now. And this pit we're looking at is a reasonable prospective economic extraction pit. So the 78 million tons are contained within this pit. If we release the pit, then we're closer to 100 million tons at 1% plus. 61 million tons at 1.14, another 16 million tons, 78 million tons. That's our JORC in-pit mineral resources, upgraded mineral resource estimate. We're still expecting results from over 50 drill holes, for which we only had partial assays. So there will be an upgrade to this resource estimate later in the year. Another thing that is interesting, we sort of see the main zone here that comes to surface. This is where we basically made the discovery and started drilling from. And the footwall zone system, a system of a swarm of dikes. And there's many more in the footwall that have not been modeled yet, so we will increase on this resource and mineral estimate. But what's interesting is within 150 meters from surface, we have close to 450 million tons at 1.2% lithium oxide. So it's a really shallow pit and shallow deposit, which has legs to grow. This is the preliminary timeline of our near-term objectives. So in 2022, we made this discovery. In 2023, largely we drilled over 45,000 meters of drilling, 154 holes. We've added close to 50,000 meters now, like we're close to 45 right now, targeting 50,000 during the course of this year. Produced a maiden resource estimate last December, an upgraded resource last week. We launched into preliminary economic assessment studies, two of which, one which is Adina standalone, and the other which is an Adina mining scenario combined or integrated with the Renard mine concentration capacity at Stornoway facilities. So we have these two PEAs running in parallel. They should be completed by August, end of August, September-ish, by which time we will choose a scenario and carry on with feasibility studies in years to come. If everything goes fine, by 2027, we might be into detailed engineering. We expect to produce final project description pending the completion of the PEAs later this summer, September-ish. And we're obviously looking at doing the due diligence review of the acquisition option we have to acquire the Stornoway Renard mine infrastructures. So our projects, the two sort of stream, if you wish, Adina standalone, where the mine will be located, and if we wish to build a brand new complex concentrator and an accommodation facility, would obviously require a mine. That would require some sort of a road bypass to connect to the 167 North highway that connects to Stornoway mine from Chibougamau. Or alternatively, Adina plus Renard facilities, in which case the road to Renard is slightly shorter, 60 kilometers, 57 from pit center to pit center, so 75 kilometers or so of haulage. And from there, convert the treatment plant, the diamond treatment plant at Renard, to produce spodumene concentrate at Renard, and carry on to ship concentrate through the 167 North highway to Chibougamau. From there, transport onto railroad a link that reaches Chibougamau, and from there all the way to ideally Bécancour. This famous road we need, that's a crucial infrastructure. We absolutely need, whatever the option, an access, a terrestrial access to Adina. So we got some conceptual plans as part of our PEA. We also engaged with the previous constructors of the Stornoway road access, ESCAN, who's the development arm of economic development arm of the Mistassini First Nation community. So ESCAN has applied with us as the industry sort of partner with the Critical Mineral Infrastructure Fund, a new fund that was put together by the federal government. So we've applied for a Stream 1, which is all the studies, consultation, design, engineering for an infrastructure, a critical infrastructure in this case, up to shovel-ready status. So Stream 2 would be to actually build the road once we've done the studies and secure the authorization to start building. But the thing with this ESCAN is they build roads. That's one of their core competence. So one of the main hurdle was to cross the Sakami River. Sakami is a very large river, about 120-meter wide, but there is a precedent. In the road leading to Stornoway, they were able to build a road, to build a bridge from Chantier-Chibougamau, and which is about 125-meter wide. So we're looking at the same sort of bridge work, which would estimated to cost about $4 or $5 million. So this is definitely something we would commit to. Or 75 kilometers to the mine, there's various options to reach the mine site. And a bypass would total about 88 kilometers. It's costed out at roughly $1 million a kilometer, including the bridges. The Stornoway Renard Mine complex, so this is an illustration. You see the plant, the treatment plant, maintenance shop, warehouse, offices, dry, the power generating plant there, the crusher loadout, the accommodation facilities, the pits that they have mined out. They're mining now through this portal, or they were mining through the portal down level 600 below surface, the root of those kimberlite shells. So what we're thinking is this could be an additional tailings containment facility, the empty pits, because we don't need the underground and we don't need the diamonds. There's also a treatment waste containment capacity facility that is coming to its limit. There's probably 3-4 million tons of remaining capacity left, but we're planning on to an expanded treatment tailings facility to the site. What struck us with Renard Mine, because we've been there a number of times now, is the impeccable state in which we find the infrastructure. We're looking at the accommodation complex that can accommodate easily 340 people, camp reception, offices, security, emergency area, in the garage in the background, garage, warehouse, dry and offices, the crusher loadout, the natural gas power plant that's on site, the process plant, capacity of 6,000 tons per day, 2.2 million tons per annum. They can push up to 9,000 tons per day in this plant. It uses dense media separation and optical sorting for the diamonds, which is more or less what we're expecting to use as circuitry and equipment for producing a spodumene concentrate from our ore. So that, we believe, can be relatively easily converted. And if we were to try to recreate such a complex at Adina, we would be in for close to $1 billion. So we're having that for a fraction of that. So we'll see. We'll see. It's still an option until we finish our preliminary study and due diligence review. It remains an option, but it's a no-brainer. The power plant, natural gas, liquefied natural gas power generator, 16 megawatt of installed capacity on site, and they got cryogenic reservoir on site as well. It's got an autonomy about roughly 2 weeks. This is all in almost brand new status. So the Renard mine, as we were saying, like a R2, R3 pit, remaining depleted pits. R65 was used as a water collection reservoir, so the drainage containment network all around the mine, collecting all the surface runoff water and underground water, collected and then treated in this water treatment plant. The existing tailings storage facility, maybe 3-4 million tons of capacity, maybe 10-12 million tons of storage capacity in the old pits, and another 25 or so in the expanded tailings containment facility, which they were considering for another 15-20 years of mine life at Renard. Also comes with an airstrip, 1,500-meter runway. Not say it could accommodate Dash 8s, but jumbo jets, but it can easily take up to 72 seaters at the site, and it's fully serviced with radar and all. So Renard mine acquisition would definitely, we see mostly advantages. It's a major de-risking factor with respect to engineering, to some in the capital funding that would be required to establish such a facility at a complex at Adina. It may advance the timelines because there's a number of permits that could be possibly transferred directly from Stornoway to Winsome. It would help consolidate existing stakeholders and third party in the regions. We're using basically previously targeted areas for storing processed residues. So the combined Adina-Renard scenario contributes to reduce the overall footprint of the project, as opposed to building new tailings and new waste pad and a new mine site at Adina. It could also help consolidate. Oh, geez, I'm almost done. What we got left is continue the drilling, definition and step-out drilling, metallurgical testing that started in a big way. The PEAs due in September. We'll complete the due diligence on our option to acquire Renard. We're launching into the pre-feasibility study, and we launch into a comprehensive environmental baseline study program this summer, which we started last fall. That completes the presentation. I guess there's no questions or no time for questions. Thank you.
Thank you, Carl. Next up, please help me welcome Tim Crossley, Managing Director of Addington Resources. Addington Resources focuses on the development of gold and copper projects in Papua New Guinea.
Good afternoon, everybody. I'm here to present on Addington Resources. My name's Tim Crossley. Maybe you can tell from my accent I'm Australian. Addington is a PNG-focused exploration development company. We've got foundation mineral resource to 43101 code of just under 2.2 million ounces. We IPO'd the company in January 2021, but I guess our involvement in PNG through an Australian company called Maya Resources has been for more than 10 years. In fact, we've been in PNG developing projects since sort of about 2012, 2013. So we're very well versed with the jurisdiction. In that company, we've taken two projects which are industrial minerals, not base metals or precious metals, from discovery right through the permitting stage, and on one of those projects, it's in final financing. In fact, we announced financing a couple of weeks ago. So I think my point is that we're very well versed on PNG as a jurisdiction. Just in the interest of time, I won't go through every slide, but the presentation I'm giving today is on our website. Look, I think PNG speaks for itself in terms of its geological potential. Clearly, one of the world's greatest discovery zones for gold, copper, precious metals and copper. What you'll notice on this slide is our projects in the orangey colour are not in the PNG highlands. They are in coastal, in both cases actually, they're in island locations. This is actually a strategic decision by the company to not develop projects in the highlands, not because we don't like the geology in the highlands. The highlands is extraordinary, and you can see it by the projects that have been developed there. You know, Oktedi, Porgera, K92, Wafi Golpu, not developed yet, but will almost certainly be developed. But we think it's a difficult jurisdiction. It's expensive to explore. Almost every project requires full helicopter support for exploration. And then once you discover and go to development, the development costs, logistics costs, landowner negotiations, landowner discussions are more complicated, a bit harder. You have to build access roads in, which means you've got to cross over many other people's land to get there, and any one of those people can sort of increase the risk of disruption to your project. So we've taken a strategic decision to develop projects on the islands. Access is easier. We can just park a barge on the beach, walk our drill equipment off, and drill. But I think importantly, if you're developing a project on the islands, you only really have one group of landowners to deal with, and that's the group of landowners on the island. You don't have to deal with anyone on your logistics or your road, because you basically are on the ocean, which is under no particular jurisdiction. So we think it materially de-risks the ability to develop your project, and without any compromise to the geology. Oops, sorry, wrong button. PNG, look, from the geology perspective, I don't think it needs any more introduction. You know, obviously some of the other things we like about PNG, we're Australian-based, so it's close to us. Politically, you know, it got independence in 1974. It's had stable governments. It has a Westminster system of government. English is the spoken language. It has a well and very mature Mineral Resources Authority, which governs mining. Very experienced Mineral Resources Authority. Royalties are 2.5%, so a very attractive royalty regime. PNG has never made an attempt to nationalise or expropriate any project off anyone. So I think from a tenure security or project security perspective, I think PNG is actually floating higher and higher up the totem pole compared to, you know, Latin America or some other parts of the world. So there's a lot of good reasons to be in PNG, and I think the majors and a lot of other companies are starting to realise that. We've obviously Barrick's been there for a long time. K92's been paving the way for a lot of the juniors and been an incredible success story. We've recently seen Newmont acquire Newcrest, which was a company heavily exposed to PNG through Lihir and Wafi-Golpu. So I think from a mining address, we're very comfortable there. And I get a lot of questions on that, but we're extremely very comfortable. So to our flagship project, which is Fenny Island, I guess why is it a flagship for us? Fenny is located in the Lihir Island chain, east of New England province. If you start at the northeast of that island chain, the first island you come to is Simberi. On the MRA website, Simberi is noted as an 8 million ounce deposit. It was developed as a world-class gold mine about 10 or 15 years ago, still operating today. You go a little bit further southeast, the next island you get to is Lihir. Lihir's arguably one of the greatest gold discoveries and gold projects globally. Again, on the MRA website, Lihir is reported as an 80 million ounce deposit. It's been operating for, I think, over 25 years, producing, close to 1 million ounces a year. Just an extraordinarily rich and amazing deposit. You go a little bit further down that island chain, you get to Fenny Island, our project currently sitting with 1.5 million ounces. And I'll take you through the thematic of why we think Fenny can be potentially certainly as good as Simberi, and maybe on a trajectory that could take it to a project as big as Lihir. Further on down that island chain, you get to Bougainville and the great Panguna mine, 6.4 million tonnes of copper and 25 million ounces of gold. My point being that we are in an extraordinarily rich discovery zone where every island has basically got a mine on it, and we're at that phase where we've just got to drill a little bit deeper and push into the boiling zone, which is what Lihir had to do before it made its major discoveries. The little diagram in the bottom, I think, explains it all. The geological feature that we see on Fenny is identical to Simberi, identical to Lihir. You've effectively got some northeast trending structures and east and some other structures crossing those which enable the fluids to come up into a boiling zone and deposit your gold. I think the one point I will make that's a little bit different to Lihir for us, and I'm just going to skip over a couple of slides here, just in the interest of time, is Lihir is predominantly a gold project. I mean, I don't think it really recovers any other credits. What is very interesting at Fenny, it looks like we've got probably 3 mineral systems on Fenny. There's an epithermal overprint Lihir style deposit where we're seeing huge runs of 180, 200 meters from surface of medium grade gold, sort of holes of sort of 0.6, 0.8, 1.1 grams per ton. So, which is what Lihir saw until it started to drill a bit deeper, and that's when once it got into the pure epithermal boiling zone, it really hit some significant grades and is predominantly where their resource lies. So our focus on our next program on Fenny will be to push a bit deeper and hit those boiling zones, and we're very confident of seeing a huge expansion to the resource. The other point I would like to make about Fenny, and I'll just step forward a couple more slides here, is the difference being that we're seeing quite a lot of copper in the system. This hole here on the screen is the 4th hole we drilled in late 2021. If I use the pointer here, that would have been the original ground surface before a subsequent volcanic event dropped about 70 meters in this case of tephra cover over the top. So once we'd pushed through that tephra cover with that drill hole, we were straight into mineralization, 0.3% copper, 1.1 gram for about 40 metres, and then we hit a massive sulfide copper, 6.5 metres, 5.1% copper. And then gold pushing down all the way to about 350 metres. The point being, down the bottom here, we were seeing some high-grade gold, which probably means we're either in the boiling zone or close to it. The other point about this hole here is you could argue that it's a little bit of a one-hole wonder, and clearly not, because if you look at the slide up here, I went back and had a look at some historical drilling, and also noting that quite a lot of the historical drilling on Fenny didn't even assay for copper. Yeah, it's extraordinary, but didn't assay for copper. But here's some holes that did assay for copper. If you look at KAD 001, 57 metres, 1.1 gram, including 55 metres of 0.4% copper. AMD 002, 114 metres, 1.1 gram, including 10 metres of 0.5% copper. And then the MAD series holes, which was the last program prior to our company picking up the tenement. An extraordinarily long run of 0.7 gram gold, 284 metres, 0.7 gram gold, including 72 metres of 0.3% copper. So from a geologist and a mineralisation perspective, we're sort of seeing three systems here. We're seeing an epithermal system, and then this hole is indicating that we've either got some penciling happening on a porphyry system sitting underneath, which is bringing the copper up, or it's some sort of a high sulfidation intrusion, which has got us extremely excited given the copper potential and obviously the pre-existing gold potential that exists on Fenny. Some petrographics we did on the island based on that hole 4 indicated that we are sitting in porphyry style mineralisation, confirmation of that with an epithermal overprint over the top. What I'll do now is just skip forward to our Ferguson Island assets, which are in Milne Bay. We've got 2 projects here, very advanced, ready for development, and that's exactly what we're doing. The 2 projects in the green are Gameta and Wapolo. Wapolo was a gold mine, developed as a gold mine in the early to mid-90s, and unfortunately the guys got their metallurgy a bit wrong, built an oxide plant when there really wasn't much oxide ore, didn't have the money to make the changes to their flow sheet and went broke. We were just on the island 2 weeks ago with a JV partner, and we'll be working with them to look at restarting. But just some intercepts from our last drill program on Ferguson in Gameta. You can see some great grades, all very shallow. I don't think we did one drill hole deeper than 115 metres. Plenty of intercepts of 4 or 5 grams a tonne. And as I said, it's really development ready. So we're now moving into feasibility, bulk sampling, and geotechnical drilling, tailings dam assessment, with the intention of putting an ML application in about 12 months' time. The process in PNG, once you get the ML application in, from our experience in another company, is it took us 12 months in both cases from the ML submission date until the ML is granted. And once you've got your ML, that's your license to operate. I've discussed some of those grades. That's just an image which shows there's significant expansion potential also on Gameta, both downstrike in the red zone on this image here, and also to the southeast where the resources hasn't been expanded into. But you can see there's one hole there, GRC 076, 5 metres of 6.5 grams. So, I guess the scale of Gameta, in our view, in our geologist's view, it's currently got about 500,000 ounces. We think it's probably a 1 to 1.5 million ounce deposit, but our focus won't be to expand the resource, but effectively to do some infill drilling and actually start the whole development cycle. is just a cross-section. Let's keep stepping through, sorry. I know we're a bit short for time. I'll just step back here. Here's some trenching that we did. The great thing about Gamut are all the mineralizations from surface. You can see some trenches there, 60 metres, 1.68 grams, 16 metres, 1.07, 14 metres, 1.07. So, you know, literally from your first excavator bucket, you're in pay dirt, which, you know, as a mining guy, you know, we love to see that. Small footprint, none of the developments on any, you know, where anyone's living. So from a development perspective, it's actually one of the easiest projects I can think of to actually get into development. You literally land your barges on the beach and start building and developing your roads, and with no dislocation to landholders. Our motto and development in PNG would be to, this is a refractory ore body, would not be to take it to doré, but just to produce a gold and silver rich concentrate. We've done the metallurgical test work. It's still unoptimized, and based on some previous work, we think we'll be able to get up to around about a 30 to 33 gram a tonne con, and the con silver to gold ratio is about 2 to 1, so about double of that in silver. It keeps the process flow sheet simple. It keeps your capex lower. It's effectively a mine, crush, grind, float, and then sell your concentrate either to the Indonesian acid producers or to a refinery smelter in, you know, there's plenty of them in our part of the world, China, Korea, Taiwan. Just very quickly on Wapolo, Wapolo is on a separate EL, but basically we do look at the two projects together and will most likely be developed concurrently. As I said, Wapolo was a previous project in the mid-90s. It got abandoned. I'm going to step through the next few slides and just take you to our JV on Wapolo. But again, some really great intercepts, all very shallow, no drill holes deeper than 100 metres. So we recently announced a JV with a group, it's a Chinese strategic. They're a large ferro titanium producer in Sichuan province. They also recently completed the Edavu hydro project in PNG, about 40 kilometres from Port Moresby. So are well versed in doing business and developing projects in PNG, which was a key and important factor in us proceeding with the JV. EVIH are committing to spend $9.5 million, of which $1 million will come off the table to Adderton, so $8.5 million on undertaking all the feasibility work, ML applications, SEPA applications, landowner agreements, bulk samples, geotechnical drilling, all things necessary to get you to shovel ready. Further to that, they've committed to provide a soft shareholder loan to the JV, which at that point will be 50-50 at the asset level, so it's not, it has no impact on the corporate shareholding structure, to fund the full development of the project with a preferential cash sweep, 90-10 goes back to them until the capex is paid back, and then we are 50-50 JV partners. If they don't deliver on that second phase, their 50-50 shareholding dilutes back to 10%. So it's a really good investment for Adderton shareholders, because it effectively means I do not need to go back to shareholders. I've got no need to go back to shareholders to fund that project into cash flow, so no more dilution at the headco level. I've just been given the eye around my time, so I'm going to pull up there. Thanks for your attention. As I said, the presentation's on our website. There's also a Claris research note, which is on our website as well. You know, if you want to contact me directly, I'm in a booth here. I think it's number 3, and any questions, I'm happy to answer them then. Thanks for your time.
Thank you, Tim. I'd like now to welcome Killian Charles, CEO of Brunswick Exploration. Brunswick is an exploration company looking for lithium in the James Bay region. Gillian?
All right, let's get this show on the road here. Let's talk lithium. I think it's important for people to understand the impact and how the industry is changing. You know, what we're starting to see when it comes to lithium in Quebec is the formation of a district. The James Bay is going to be one of the most important regions in the world. I'm actually quite convinced that in the next 5 to 10 years, when people open up a textbook and look at where lithium comes from, they'll see a couple locations. They'll see maybe Brazil, they see Western Australia, but they'll also see Quebec. This is an industry that is evolving, and so it is one that is constantly growing. New discoveries are being made. This was always the point of Brunswick Exploration. We wanted to make discoveries in jurisdictions that matter, jurisdictions that are going to develop lithium asset. And I'll be honest with you, we just saw one right before the Papua New Guinea presentation. We saw Winsome. This is what it matters when it comes to lithium, all right? Where is it located? It is located in Quebec. When you take assets in Quebec, when you look at lithium assets, I promise you they are typically larger, higher grade with better metallurgy. Your zip code matters. And in this context, Brunswick Exploration absolutely has one of the best zip codes. We are currently advancing one of the most exciting grassroots discoveries for lithium in Quebec. It is the Mirage property. It is a greenfield discovery. There was no lithium showing there before. It was discovered based predominantly off our model, where we focused on areas of interest across all of Canada, but as well as Quebec. And it has led to 3 successful discoveries. It just so happens they're all in Quebec as well, but again, that speaks to the exploration potential of the province. But this Mirage asset that we discovered in August of last year, even with all the forest fires that we had last year, we have already put 10,000 meters of drilling into it, and we are absolutely growing it. We put out a press release yesterday outlining 70 meters starting from surface at 1.6%. That followed up on 94 meters at 1.5%, once you know it, again from surface. So let's quickly dive into it here. I know everyone's having a wonderful time listening to all these presentations. This is Quebec. This is the James Bay. This is your lithium district, all right? This is something that's unique. For the first time in a very long time, you are going to have an axis. It's not about the lithium triangle. It's about the lithium axis. Maybe not, axis of evil like Bush used to say. But anyway, this axis starts from the James Bay, where you're going to see production of raw lithium ore, down into midstream, into refining in Quebec, then into further manufacturing into Quebec, into Ontario, into the US. This is a once-in-a-lifetime opportunity to completely redefine a particular industry, a global industry, important for decarbonization, into a single province, into a single area. I take the view that there is enough lithium in Quebec to supply all of North America. With discoveries like Patriot has done, with discoveries like Winsome has done, and with discoveries like hopefully we are going to do at Mirage, we are setting the tone for lithium in North America, all right? You can see here some of the drill results from our previous campaign. There's actually smaller than what we've been drilling right now. We've expanded across this area. This Mirage property is roughly located 50 kilometers north of Winsome, about 100 kilometers east of Patriot, and it is going to be the focal point of lithium production in the future. As I mentioned, zip code matters, and it doesn't get better of a zip code than this. It's our 90210 when it comes to lithium. So let's jump here. We can see, we're going to zoom in on the Mirage property. This is where we've been drilling. This is the property itself. You can see here, it is quite a significant property, which we control. We are focused on this small little 2.5 by 2.5 kilometer. That's where we've put roughly 11,000, 12,000 meters of drilling, where we have consistently hit thick, high-grade lithium mineralization across a number of dikes, all right at surface. We are merely scratching the surface when it comes to the potential of Mirage. Our drill holes, we haven't really gone below vertical depth of 100 meters on our targets. They are open in every single direction. We have yet to even understand the potential here. Even beyond this 2.5 kilometer area, we've actually made more discoveries. You can see there's a lake to the northeast. We've actually found a new outcrop right there. We are only starting. Again, we were here in August last year, spent 3 weeks prospecting. I'm actually jealous. Everyone, the whole team is here but me and my colleague Sarah. Everyone else is up in the field right now, following up on the drilling we've done, looking to actually do the work at Mirage and start to uncover the real potential of this asset. It is going to continue growing. But Brunswick is more than that. Last year, we launched the largest systematic grassroots exploration campaign of its kind across the world. We explored across the entire country. Not a single junior has ever done this in the last 20 years. Again, just ourselves, we had helicopters scouring the entire country, be it Newfoundland, be it Manitoba, Saskatchewan. We push the envelope to make lithium discoveries because we believe that there are significant discoveries to be made. We are going to repeat this. When it comes to exploration, when it comes to geology, when it comes to being successful, oftentimes it is the ones that have seen the most rock, that have the context in front of them to understand where to go looking and how to go looking for it. That's where we are best in class. When it comes to our program this year, we will absolutely continue advancing Mirage, but we see opportunities beyond that. We believe that Europe needs lithium. I think that North America is going to be supplied from Quebec, but how are they going to source themselves? That's why we are pushing the envelope. That's why we are first movers to do lithium exploration in Labrador. We are first movers to do sustained lithium exploration in Nunavut, and we are now forging new ground in Greenland. We understand what we are looking for. I'm not looking for lithium, I'm looking for lithium mines. I'm looking for lithium mines that can feed a market, be it the North American market or the European market. It's woven into our exploration DNA, all right? It is systematic lithium exploration at an unprecedented scale. We must have done roughly 1,000 targets. That's why exploration is hard, because it takes 1,000 targets to generate 3 discoveries. That's what we've done in Brunswick. Mirage, Elron, Anatakal, those are discoveries we made just last year. We're going to push Mirage because it has the right zip code, it has the right thickness, it has the right grade, it's at surface. There's still so much opportunity to grow it, but we are going to leverage that exploration team that we built inside Brunswick. We're going to leverage that exploration knowledge, that exploration success, and continue growing it into jurisdictions that no one has taught of to do lithium exploration, yet the geology is there. People like to put blinders on when they do exploration. Not so in Brunswick. We like to push the envelope. We've got the team, we've got the project, we've got the assets, we've got the company. We are going to push forward as much as we can. That's it. Thank you.
Now please help me welcome Pierre-Philippe Dupont, Vice President Sustainability at Canada Nickel. Canada Nickel is currently advancing the Crawford Nickel project in the Timmins region and recently closed an equity investment from Samsung SDI.
So good afternoon, everybody. It's good to be here today in my hometown of Quebec City. I didn't think I was going to give a talk in English as part of my career in my hometown of Quebec City, but I will do that today. It's good to be here. So today I'm going to talk about Canada Nickel, the company that was founded in they told me it was difficult. But. So Canada Nickel, new nickel play, founded in 2019 to actually develop the Crawford Nickel project, which is located in the newly discovered Timmins Nickel District. So this is like basically we built out of a really strong leading mining and nickel expertise. Part of the crew developed the Dumont Nickel project in Amos, in Quebec, in northern Quebec, and we also have the capacity to build, to take these projects that we have all the way to construction with a really good crew of engineers. We're focused on northeastern Ontario, the Timmins area. So for those of you who don't know Timmins, which would be surprising if you're in the mining industry, strong history of mining, mainly gold. Zinc as well with the kit operation, Glencore's kit operation, lots of skilled worker, all the infrastructures in there. And as part of what we did, putting that company together, we actually managed to acquire more than 24 nickel project within 100 kilometers from Timmins. As it was mentioned in the introduction, we onboarded multiple credible partners. So early 2023, Anglo-American came on board. They're now about 8% of the project. They're still working with us. So as part of the governance system, we have technical committees as well as ESG. They're part of these committees and supporting the project moving forward. More recently, right before the end of the year, a Nico Eagle came on board as a back end of a flow-through charity, 35 million that we will spend in exploration. We'll talk about that a little bit. And also, and nonetheless, Samsung, which is on board as well for about 9% of the company. So nickel overall, it's been I've been in the industry for about 20 years now in the nickel industry. Always underestimate, the demand's always underestimated. Mainly driven by stainless, surprisingly, because people talk about the EV, the battery sort of revolution. But the main driver for nickel has always been stainless steel, and the growth of stainless steel has been about 4% a year since decades. And now we're adding the EV demand. So people may think, it's we're talking about probably 6 million tons of nickel that will be required in 2030 to fulfill the demand, and maybe more. People are talking where does that nickel will come from? So the main producers right now are what we now call foreign entity of concern. So 70% of the nickel that's in the market right now comes from either Russia, the Philippines, or Indonesia. Philippines and Indonesia mainly controlled by a Chinese company. So big challenge with this nickel that we now call the dirty nickel is the environmental footprint is unbelievable. So we're talking about to produce a ton of nickel in these countries, we're talking about a footprint of about 30 to 80 tons of greenhouse gases emitted per ton of nickel. If we compare what we do in the Western, now we can call the Western world, we're about 2 to 8 tons of GHG emissions per ton of nickel produced. So this is a bit challenging. And we'll see what kind of solution we want to provide to this. So the Crawford Nickel project's our flagship project. We started working in 2019 started from 4 drill holes. We recently published the feasibility study in November. Permitting process is well on the way. About 2/3 of the process is done so far. So it's a magnificent location because we're in the Timmins area, in between Timmins and Cochrane. We're right, we have we need to relocate the highway, so access is not a problem. Electricity, power, everything's there. We have about 10 to 15 kilometers of railway to connect to the KID rail to spur line. Crawford would be a massive nickel operation. First phase would be 60,000 tons per day, ramping up to 120,000 tons per day after year 5, 40 plus years life of mine, producing around 50,000 tons of nickel at full capacity, and adding to that, we have cobalt, iron, chrome, and PGMs in the deposit. And one of the key aspects of what we're doing is Crawford will become one of the largest carbon storage facility in Canada. So I'm not going to go over the economics, but internal rate of return about like 17 to 18%, depending if you account for the carbon capture credits. 40-year life of mine, 2.5 billion capex to get that going, which is significant, but still, feasible in nowadays market. So Crawford would be the second largest nickel reserve globally, the third largest nickel sulfide operation as well. So a very significant nickel asset that we're pushing forward. Milestone-wise, I mentioned the permitting process. We're filing the environmental impact statement by the end of this summer. We expect that we should receive the main permits by mid-2025, start construction, about 2 years construction, so we should be able to provide nickel units in the market by the end of 2027. Talking about the Timmins Nickel District now. So when we started working on Crawford, we used the geophysical, geomagnetic footprint of the project to basically fly the area, and we actually discovered a bunch of targets that we acquired. So we now have about 24 targets. What we intend to do, and all of these targets yield nickel results, like all 0.25, 0.3. So I think there's one drill hole so far that we drilled that was actually not positive out of everything that we've done. So like it says that 94% success rate. So what we're intending to do with the money that we got from Agnico is to actually generate 7 new resources out of this nickel district. Working on Texmont, Deloro, Reed, Man Central, Man Northwest, Bannockburn, Midlothian. Texmont was an operating asset in the 70s, about 1% nickel. So this is one of the key projects that we're moving forward now. So with this resource, we should have a multiple about 10x what we have for Crawford in that district. One of the things that we're working on as well is we created that new subsidiary, Net Zero Metals, to build downstream processing facilities in the Timmins area. When we look at the overall nickel supply chain in North America, the missing link is downstream processing. So there's not a lot of it, there's actually none of it, and we intend to build a nickel con facility in Timmins as well as a stainless steel facility. We're presently working with Mezzo and SMR to do the feasibility studies of these projects that should be published by the end of this year. Concerning the CO2 footprint, obviously we're in Ontario, grid is pretty clean, pretty green, but what we intend to do is leverage the fact that the rock that we're mining has this capacity to sequester carbon once exposed to atmospheric condition. Like my CEO now calls it the magic rock. So basically what you see on this image is core, like a core sample that was like fresh core sample, and a core sample that was left on the table for about a year. So that white crust that you see on the surface of this material is what we call carbonate. So once exposed to atmospheric conditions, the brucite that's contained in the rock reacts and generates a carbonate. It's one of the only present permanent form of carbon capture and storage. So technically, you would need to have like a chemical process to extract the carbon out of that rock. So what we did in previous projects that I work on, such as Monde, so we basically intended to pump the tailings into the tailings storage facility and basically try to optimize that reaction, and see what's going to happen, and basically bank these carbon credits. What we're doing with Canada Nickel is actually we're pumping a pure stream of carbon at the end of the processing, And basically the results that you would get in the tailings storage facility in about a year, we can get these results in 3 to 6 hours as part of the process. At the peak production rate, we would be able to store about 1.5 million tons of carbon in the tailings storage facility, which would make Crawford probably one of the 4 or 5 biggest storage facility in Canada. So in summary, we do believe that there's the fundamentals for nickel are not well understood. We do believe that the growth's much faster. It's like the demand's growing much faster than what's being predicted, and we do believe that Indonesia is not the solution to provide those nickel units on the market, especially nowadays with everything that we know regarding geopolitical conditions. We've got significant investors on board. Anglo, Samsung, Agnico Eagle speaks about the credibility of what we're doing. We would be the Western world largest nickel sulfide operation. We have the potential to be net negative from a carbon perspective. We have our playground is amazing. We're unlocking the Timmins Nickel District right now, and we're also working on what we now call the missing link, which is downstream processing of nickel and magnetite as part of the stainless steel processing facilities in Timmins. So it's good to talk to you today.
Merci, Pierre. Next up, I'd like to please welcome Troy Boisjoli, CEO of ATHA Energy. ATHA is engaged in the acquisition, exploration, and development of uranium assets and recently completed its merger with Latitude Uranium to create a leading uranium explorer. The floor is yours.
Thank you. Thanks, everyone. Couple things, I guess, in the nature of time, interest of time, I'll skip through a few slides today. I've been warned by the backstage staff that there's a trap door here if I go over, so we'll keep it on track. All right, I will be making some forward-looking statements today. So ATHA, ATHA's a company that came to market in 2023 based off an experienced team that, behind the scenes in ATHA over the course of about a decade, put together the largest land position in the Athabasca Basin. In Western Canada, all of us are familiar with the basin. In the uranium space, it's widely considered the best uranium jurisdiction in the world with the highest grade deposits found globally. To put that into context, the Athabasca is mining deposits like Cigar Lake that have an average grade of 16% U3O8 based off a comparable global average grade of 0.02 or 200 ppm, so 200 ppm to 160,000 ppm, pretty big discrepancy. The Athabasca is a unique place. So put together 3.5 million acres of exploration property in the Athabasca, came together with a strong capital markets team and a strong technical team to bring a growth platform to the uranium space at a point in time when the macro side of the industry and the macro fundamentals have never been better in uranium. We're in a unique situation right now where there was an inflection point about 24 months ago where we went from having a perpetually oversupplied uranium market now to having a fundamentally demand-driven uranium market going forward, where the asymmetry right now is more heavily weighted on supply scarcity and uncertainty as to future supply of uranium relative to the demand profile. So it has us in a very, very strong position moving forward. Hence, what ATHA has been doing and what we've been up to over the last year. It's been a significant growth phase. Came to market in April of last year. Over the course of the year, invested heavily in our generative stage greenfield assets in the Athabasca Basin. At the same time, we're able to negotiate and execute on a three-way transaction where we bought Latitude Uranium and 92 Energy, two companies with assets that were more mature than our fundamental base, therefore maturing us along that asset maturity curve. In doing so, we also acquired additional ground, so we have a dominant land position in the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador, bringing up our asset base to over 8 million acres of exploration property, which is the largest in the uranium space. In order to explore at scale and grow, you certainly need a cash balance to be able to do that, and you need a technical team to be able to execute. Start of year 2024, we had a cash balance of around $60 million, 30 of which will be deployed into the ground across a broad spectrum of our exploration properties this year. Our technical team is very strong, very fundamentally sound. I have a background, came through Cameco as an explorationist and operator at one of their operating mines as a chief geologist. Had an opportunity to lead the development of the Rook I project for NextGen Energy for a number of years. Our vice president of exploration was the chief geologist that brought Cigar Lake into production for Cameco. So we have an experienced group of technical people to be able to execute the work. And we're at the stage right now, after having spent a year growing, where we're in the process of getting ready to, for the first time, deploy drills on the ground, start drilling, start executing, and solidifying the value that we saw in the transactions that we made throughout the course of 2023-2024. That starts with Angulac. You look at Angulac, Gemini, and the Athabasca Basin. Those are the three asset classes that I'll talk about today. And at Angulac, that's the reason we bought Latitude Uranium. It's a 43 million pound historic resource at an average grade of 0.69% that we viewed had significant and has significant upside potential. Over the years there, they were still in the very steep part of the resource growth curve. You overlay the targets that we see on top of that, and the expansion we believe is significant. Gemini is the reason we bought 92 Energy. It is a newly discovered trend along the eastern edge of the Athabasca Basin under very shallow cover on the eastern part in the producing jurisdiction or region of the Athabasca. That's the reason we bought 92 Energy, and we'll continue to work there this year. And then our projects across the Athabasca Basin, over 4.5 million acres of exploration property, which we have invested in geophysics across 3 million acres of, with the objective and priority to pull the highest priority, highest probability targets out of the largest land position and the best uranium jurisdiction in the world. Where we, the whole approach of what we're doing right now as we are growing is providing an investment opportunity that is intended to maximize the amount of exploration torque and discovery exposure that you get within the uranium space within a single investment. As such, you look at it in the context of the Lassonde curve, and we are investing $30 million in exploration and growth on the very left side, the highest portion torque of the Lassonde curve this year in 2024. The exploration program, throw it into a Gantt chart. What we're doing right now, we're at Angulac. We started drilling yesterday. Expect drill results to be forthcoming within a few weeks. We'll drill there from June, July, August. At the same time, we'll be doing regional scale geophysics within the area. At Gemini, we started off with geophysics, ground geophysics, with some gravity surveys, and then also ANT, or ambient noise tomography, in order to optimize drill planning going to the north on that corridor. Following that and the drill hole targeting as a function of the geophysics, we'll be moving drills in there at the end of July into August, September. In parallel to that, we are continuing target generation on our generative stage projects throughout the Athabasca, and we'll conduct it into the Thelon. Now, getting into Angulac for a minute, again, one of the highest grade resources outside of the Athabasca. It's just across the border into Nunavut, south of Baker Lake. 43 million pound resource, 0.69% U3O8, was primarily worked at the end of the last cycle, and the end of the last cycle denoted by Fukushima. In a post-Fukushima environment, they did significant work that grew this resource from 14 million pounds is 27 million pounds to 43 million pounds year over year over year. This resource is still in the very steep part of that resource growth curve. And you compound that and overlay that with the geologic targets that exist in the footwall and the hanging wall at depth on strike. This deposit is wide open. Hence, the plan for 2024 is to expand this deposit significantly with widely spaced drilling. We are not going to infill or delineate our way out. We are testing an envelope of rock around this resource. It has the potential for a step change in the resource here, which ultimately then will move this project forward. The grade profile is great. We like it. 0.69%. You put that into context, that's about 16 pounds per ton. At $100, that's $1,600 rock. At $50, that's $800 rock. From my experience in the mining industry, in the uranium space, we were mining at Eagle Point. That's a chemical operation for about $330 a ton. So very good foundation in this resource. We intend to, and we're in the process right now of expanding it. Skipping gears into Gemini. Again, where we're at with Gemini, deployed geophysics there, and we'll be drilling end of July. The reason we bought this project, eastern edge of the Athabasca Basin, new discovery, basement-hosted uranium mineralized system. There's only 35 drill holes into it. Current dimensions of mineralization, about 200 by 250 meters. Mineralization remains completely open. But more than that, this is a structurally controlled fertile uranium system that is completely untested as you go further to the north. And from the experience of our technical team, we draw a direct analog from this system into the Rabbit Lake system, both in terms of the structure, the alteration, the style of mineralization, etc. We intend to leverage that potential this year. So two-pronged approach within the Gemini project when it comes to drilling, expand the known mineralization, the current extents of the known mineralization, and then also conduct higher probability exploration going back to the north along a fertile corridor on the eastern edge of the Athabasca Basin. For those familiar with uranium systems in the basin, it's more common than not for there to be multiple occurrences. That's because they're fertile structural corridors, hydrothermal fluids come up them, and what you're looking for is structural and chemical traps along that fertile system. That system has not been tested at all to the north on this project, and that's what we intend to do this year. One thing that I guess, I'm gonna have to back up one, that I overlooked on the intro is within our asset base, you go from generative stage projects, significant buildup of exploration property across the Athabasca, the Thelon, post-discovery project in Gemini, resource in Angulac, but we also carry a 10% carried interest in the majority of NextGen Energy's exploration portfolios from SW1, SW2, and SW3. And just for clarification, that's a 10% carried interest at an asset level that would carry right through to a bankable feasibility stage, at which point it would become either participatory or convert to an NSR. So it's a build-up within our asset base that we like. It provides interesting optionality and flexibility, and it comes at a time when NextGen is committed again to exploration. They've moved past the delineation stage, and now they're exploring beyond Rook 1 again. So they're planning over 30,000 meters of exploration this year. A percentage of that will go into the areas that we have a 10% carried interest on. Now our basin strategy, 4.8 million acres of exploration property in every past producing, current producing, emerging producing jurisdiction within the Athabasca Basin, which in our opinion is one of the best, if not the best uranium jurisdiction in the world. What we did over the past 10 months is invest heavily in maturing this land package. We flew an unprecedented scale EM survey, 5 different platforms, optimized based off project location, based off depth, ton, conformity, etc., with the intention of being able to then rank, prioritize, and focus our exploration efforts moving forward, which is at the stage we're at right now. So we have prioritized the projects that we are going to operate internally as a 100% interest project. But then in turn, in order to maximize discovery potential and discovery exposure for ATHA and ATHA shareholders, we've also entered into about $30 million in farm-out agreements at this stage where we retain exposure to the discovery potential and upside potential in each of those projects. So it's a strategy that is fully designed to be able to maximize the amount of exploration discovery exposure within this land position. The same is true for the Thelon Basin. We have a dominant land position within the Thelon Basin, and getting short on time, but happy to talk about this independently after. Thelon Basin was once part of the Athabasca Basin. The same processes at play in the Athabasca are at play in the Thelon Basin. It's a fertile uranium district. The difference is it is significantly underexplored. You know, it is essentially unexplored relative to the Athabasca Basin. There is discoveries here by Orano. Former Cameco property has discoveries on it. We know it's fertile. It's just untested when you come under the basin. Has seen a significant lack of exploration expenditure over the years. We really like it. We think it's one of the opportunities, emerging opportunities in this uranium cycle. So I'm close on time, so I'll just wrap it up. But you know, ultimately, what ATHA represents is a growth platform in the uranium space. We are operating and executing exploration at scale, investing in the assets that we obtained organically and have acquired. And in addition to that, based off size, scale, structure of the company, and reach into the capital market space, we'll look to continue to grow through investing in our assets, but also through additional consolidation and acquisition as we advance through this uranium cycle. Thank you very much.
Thank you, Troy. It's now my pleasure to sit down with Sean Cleary, President CEO, Strategic Resources.
Good afternoon.
Nice having you this afternoon. Before we dive into specifics, do you want to just give an overview of what Strategic is and what your main projects are?
Yes, Strategic Resources, SR, listed on the Venture Exchange. We are a developer of the Blackrock project in Quebec and the Mustaveren project in Finland. You know, we're currently focused on development of our leased industrial park at the Saguenay Port to develop a 4 million ton a year iron ore pellet operation that's focused on DR grade pellets. And then in phase 2, we could expand to, we have a permitted direct reduction furnace also at Port Saguenay Industrial Park, where we could produce both DRI and HBI for the green steel market. And this is really our focus going forward. So overall, that's a $500 million CapEx project for phase 1, and then roughly $500 million for the second phase.
So you're starting with the downstream operations. And can you explain maybe why and what are the strategic benefits of this specific location in Port Saguenay?
Yeah, so Quebec as a region produces about 70 million tons of iron ore oxide concentrate per year. And as you know, there's a large shift going in the steel industry today where we have the conversion of blast furnace to electric furnaces. And as we go through this conversion, it means that the material flows for the steel industry will change. And this is all being driven by reducing CO2 emissions in the steel industry, which currently represent about around 10–12% of global CO2 emissions. By moving the industry to electric furnace operations, the industry hopes to cut those emissions by maybe 2/3 and use a lot more scrap steel in the recipe for steel making. And the issue with using scrap steel is it does contain some contaminants, and these have to be blended out with ore-based metallics and virgin iron units like DRI, HBI, and pig iron. And that's really where we're focused in the market. The expectation on the industry is that there'll be something like a 40 million ton deficit in the DR grade pellet market over the next number of years, and our hope is to solve for about 10% of that deficit. So there's a big demand for this solution, certainly in Europe, the US market, the Canadian market. And yeah, so this is what we're doing at Port Saguenay, and Port Saguenay has some unique and interesting competitive advantages because of its access to natural gas. So the Trans-Canada pipeline goes to Saguenay. We have access to natural gas. The Labrador Trough does not have that. Other pellet operations that are on the East Coast that would like to expand, these are very challenged operations from an environmental perspective. So we're hoping that we can produce, a very high quality iron ore pellet for the electric furnace green steel, evolution that's going on right now. And we can do that with a very low CO2 footprint, which is very interesting to the markets because, as we know, governments want to incentivize or penalize, for having highly emitting products being fed, especially Europe, where you see this with the carbon border adjustment. So we're going to have a competitive advantage for the pellets coming out of Saguenay because we'll have a better CO2 footprint than the rest of the Canadian market.
And what do you envision your feedstock coming from in the initial phase of this pellet operation?
This is a good question. So we're working on this right now with a mix of traders and producers, both in the Labrador Trough, but as well as globally. So we haven't solved for it yet. This is the next milestone for the company, and we're hoping to have this sorted through the summer months here.
Okay. Fantastic. And so I guess then it's putting the pelletizer in building, putting the pelletizer in operations, generating cash flow, and then turning back your attention to the original BlackRock project, if I may call it.
Yeah, I would say we kind of see that as phase 3 now. To have an integrated operation is, definitely the dream of the company, so that we can, supply our own mined feedstock to our own metallurgical complex. We see it being in 3 steps, though. Okay. Really, step 1 is to build the pelletizer, have that up and running. This is about a 2-year project. Then the second step, really to install the DRI HBI capability. And that's about a 2-year project as well. And then the third step to backwards integrate. So we do have a fully permitted open pit mine and concentrator up at Chibougamau. And we've gone through all of the permitting for all of the BlackRock project that we've been working on at Port Saguenay. For the pelletizer portion of the project, we have what we need in terms of permits for the initial design, and we've applied for a modification to that design, so we're waiting for final approval of the modification of the environmental decree.
Are the relationships and overall relations with IQ and the government, and I know Amio was on stage earlier today, he mentioned the increased challenges about the securing the megawatts. How are you progressing on those fronts?
Yeah, it's always interesting. I think as a small company, we're definitely well sponsored because we have a big shareholder, percentage shareholder from Investissement Quebec and the Quebec government, and we're very aligned in terms of where I think Quebec wants to go with iron production, which is a big export product for the province of Quebec, and to be able to have this going into electric furnaces as opposed to blast furnaces is a major initiative of the government. So we fit in well there, and like I say, they're a big shareholder. We also have Orion Mine Finance as a big shareholder of our company, and the Lumina Group and Ross Beatty and his team out west. After last year, we completed the merger, and then we also have the Cree Nation as a shareholder, and we have a full impact benefit agreement in place with them for the life of the overall BlackRock project. So I think we've done a lot of work to push this along. There are constraints within Quebec now on the power allocation, so we're working through that with the government, and we're hopeful that we get the power that we need for each phase of the project. Of course, Port Saguenay is a focus of development for the project, for the province of Quebec. Federal port, but there's a lot of industrial development to do at Port Saguenay. the government recently funded a conveyor system from the wharf up to where our leased land is at the industrial park. So we can use that for conveying materials up from the wharf and then product back down to the wharf. So this is very positive. You know, same on the natural gas side, you know, we have most of what we need in place, but you know, we have to advance this as we go forward. If we're able to put the offtakes in place that we want this summer, then we'll announce, I think, project financing a little bit later this year. We've been in discussions, you know, with some of the big banks on this. This is announcements to come, with the view that if we hit all of those targets, we could be in a situation for construction sometime next year. And as I mentioned, phase 2 is about a 2-year build.
Fantastic. Just jumping around, I saw you announce a collaboration agreement with Lividian to further decarbonize the technology. Would you mind expanding on that for a minute?
Yeah, so Lividian is a company out of the UK. Originally, the technology came out of Cambridge University, and this is a system that utilizes the conversion of natural gas for basically reforming it into hydrogen. But it also produces some very interesting byproducts of graphene as well as carbon black. So we really like that technology. It's very interesting to us because we can utilize that both at the pellet plant as well as for the direct reduction, the second phase of the overall project. And this will be very helpful because we've also looked at various electrolyzer solutions for hydrogen so that we can reduce the overall footprint. We see those being a little bit challenged in the respect of availability of power. But there's lots of availability of natural gas for Port Saguenay. And so reforming natural gas and producing byproducts of graphene and carbon black, which are things that we use in our processing and or we could sell as a sort of byproduct revenue stream. We see that as being very interesting, and you know, it's early days, but these types of systems are modular, so you can start small and then build. And then with the intention overall that eventually we can get to a carbon neutral type of operation. This is really where we want to take the company. We think that's what is right for the planet and is right for the business. And we see more and more incentives, I think, from different agencies, governments, you know, global groups that want us to go in this direction.
So it's fascinating because it's really moving beyond, you know, battery materials and electrification, and it's attacking, you know, the steel making industry, which, as you said, is a huge part of global emissions.
Yeah, and we can't have a modern world without steel. You know, it's a critical element of everything that we need, from automotive to construction to how the world is put together today. So we don't see that going away.
No, definitely not. In closing, you want a couple minutes on Finland, what's happening over there?
Yeah, so Finland, we own the Mustavären project in Finland. It's a past producer, vanadium, titanium, pig iron, so very similar to the BlackRock project. We sort of have that on a standby today, I would say, because energy costs and the solutions for Finland are not exactly obvious. But, you know, it's one of, you know, if you consider the BlackRock deposit and the Mustavären deposit, probably two of the largest known, well-known VTM deposits globally. So these are great assets for the company. And, you know, they sort of speak to the underlying value of our company. When we did the RTO a year ago, you know, we went out at $175 million Canadian dollar market cap. Today we're trading at $42 million market cap, and, you know, we have these significant assets in the company. So, you know, certainly from our perspective, we have a long way to you know, build up the value of the business.
Fascinating. Well, thanks a lot for your time today, Sean, and we'll be following developments this year.
Thank you, Thomas.
Thank you.
Appreciate it.
Thank you, sir.
Yeah, very well done.
Okay, go there. Thanks again, Sean. So next up, I'd like to welcome Robert Wares, Chairman of the Board, President and CEO of Cisco Metals. Cisco recently announced an updated mineral resource estimate at Copper Mountain as part of its Gaspé Copper project. Robert?
Merci, mesdames et messieurs. Je vais présenter en anglais aujourd'hui, mais je vais être dispo cet après-midi si vous avez des questions concernant le projet. So, Cisco Metals, part of the Cisco family, we're essentially focused on base metal development, now called critical metals in Canada. And with the two main projects, I won't get into our view on copper markets. Suffice it to say that we're very bullish. And if you want, again, those kinds of details, I only have 15 minutes, so I'll have to skip that aspect. So, Pine Point project, which is the initial project we acquired back in 2018, brownfield site. It's a zinc lead project, now joint ventured with Appian Capital, where we have a free carried to FID over the next 4 years. And last year we acquired Gaspé Copper from Glencore. It's the old stomping ground for myself. I actually worked there in the early 90s as a geologist. And it was a sleeping asset for Glencore, so we structured a deal in which we basically get it again to FID, shovel ready, with permits, feasibility, etc. And Glencore gets 100% of the concentrate on an offtake agreement that's already been negotiated. So fairly simple structure. Gaspé Copper was run by Noranda for a better part of 45 years. It was an iconic Canadian mine. It actually had its own smelter, which is something you hardly ever see today. And this is a shot of the complex circa 1990 with a Copper Mountain pit in the background. So it was both open pit and underground operation. The underground operation was focused on the stratiform skarn deposits underground. Quite a spectacular operation, actually. The pillars were 35 meters high, so certainly one of the biggest underground operations in its time, with over 125 kilometers of development. Adjacent to the town of Murdochville, which was the mining town then, still sitting there. Here you see the Copper Mountain pit. And Murdochville right now, a population of about 650 people, really working or surviving on seasonal tourist industry. Needless to say, they would love to see the mine go back into production, so we have tremendous local support for our project. So Glencore spent about $150 million. As you'll recall, Falco took out Noranda in the late 90s, and then Xstrata took out Falco Noranda, and then Glencore took out Xstrata, so this asset changed hands 3 times before Glencore reclaimed the site at a cost of 150 million Canadian. The smelter's gone, the mill is gone, there's one water treatment plant still operating at a cost of about $250,000 a year, which we have assumed. And the idea is to expand the Copper Mountain pit, again, significant resource sitting here. And the question often asked is, why didn't Noranda expand the pit in '98 rather than shut down the mine? Well, 2 reasons. Copper was down to 80 cents a pound. Secondly, the smelter was right on the edge of the pit, so it became impossible for pit expansion. The site, again, has been appropriately reclaimed. This is the tailings pond, now a grass field. Water quality in the Copper Mountain pit, which we have to dewater, is actually adequate. It respects both DFO and Quebec ministry standards for reject into the aquifer. So as it stands now, the project's very attractive with a nearby infrastructure, including the town of Murdochville, highway access to the coast, where there's a deep water port and a railhead. The land is located on the ancestral territory of the Mi'kmaq First Nation. And right now, the project is at resource development and PEA stage. We currently stand at 495 million tons of 0.37 copper equivalent, and that means copper, byproduct moly, and silver. Unfortunately, no gold. The current pit footprint is as this. So pit wall here would be about 600 meters away from the current town, with Copper Mountain acting as a shield, so there will be no need, in our view, to move any portion of Murdochville. The deal with Glencore was straightforward, US $25 million payable through issuance of a convertible note at 40 cents, including half warrant at 46, milestone payment at US $20 million upon commercial production. More importantly, Glencore was the commitment to spend $55 million over 4 or 5 years to get the project to shovel-ready status, or FID. Glencore retains a 1% royalty on Copper Mountain and also retains offtake on 100% of concentrate produced. Geology is very simple. It's a porphyry copper skarn system, so again, our focus on pit expansion. There is, however, potential for additional definition of resources, both a needle mountain located around one of the initial open pits mined by Noranda in the 60s, and also higher grade material in the underground skarn deposits. But as I said, our focus is on the pit expansion. We're working to make this as a standalone open pit operation. So since 22, we did about 37,000 meters of due diligence and resource definition drilling around the Copper Mountain pit. For security reasons, Glencore will not allow us to drill in pit, so we had to drill on the margins, which made for expensive drilling, but that allowed us recently to take that data and convert the resource to an indicated status. So we're looking at about 3.2 billion pounds in pit of copper, or 1.47 million metric tons, with about 180 million pounds of byproduct molybdenum and almost 28 million ounces of silver over life of mine. Key to the project, though, is the starter pit. The deposit contains a higher grade core right below the existing pit. So our starter pit is projected to mine the first 3 years at higher grade. This summer, our drill program will focus on better defining that higher grade core. We estimate about 50 million tons at better than 0.6 copper equivalent. The only significant intersection we're able to use when we're drilling from the pit margins is a directional hole that flattened out right below the existing pit that cut 300 meters of 0.93. So this summer, we'll well be able to go back and drill from the benches, and we have a 5,000 meter program designed to define, not only better define copper, because it's going to allow us to convert some of that resource to measured category, but also bring in more reliable moly and silver byproduct numbers. Mineralization is fairly typical of a porphyry system, both in porphyry and the host rocks. The host rocks here are not volcanic. It's entirely sedimentary, so they're located in hornfells, which are cooked up sediments, and you get typical array of 3 or 4 sets of stockwork veining of copper and moly mineralization. Skarn mineralization will be accessed at the bottom of the pit in C zone, which is higher grade and is again fairly typical of copper skarn disseminated material. Recently, we completed our first pass on metallurgical testing for the PEA. Copper recoveries to date are very encouraging, around 93%. Molybdenum at 65. We think with further testing, we can get that up to 70. Silver at 70, and copper grade and concentrate will be running around 26%, which will make for a high quality copper concentrate. Ball mill work index sitting around 3.5, so basically the ore would be average hardness. Going ahead for additional resource potential, this summer we have another additional 5,000 meters. Drill program has actually already started last week to try to define near surface resources around the original smaller Needle Mountain pit called the A Zone. Eventually, we will be going back to do underground drilling in the E-zone where high-grade skarn mineralization running roughly 3% copper and about an ounce silver were left behind from the previous operations, and which require additional drilling for expansion. But this is down the road right now. For next year, we're focused on improving resource definition in both Needle Mountain and Copper Mountain. So on the social licensing side, we've been proactive. We've made several community presentations, both with Micmac First Nation and the town of Murdochville. The project's been well received. No red flags to date. And so our timeline for the project is on 7 years, starting 24. Next 4 years, complete environmental impact studies. Finalize the PEA, which is due next Q1, and move on directly to feasibility. The objective is to get the end of 28, including the BAP in Quebec, its public hearing process, to get us to final investment decision. Following that, 2-year mine build. So if all goes well, we could enter production in Q1 2031. Pine Point is joint ventured with Appian, as I mentioned. Again, past producer, run by Cominco, again, another iconic Canadian mine, closed down in 1988, which means, again, available infrastructure, road network to Hay River, and from the Hay River, rail network directly to Edmonton on the transcontinental line. The deal with Appian is simple, $100 million investment in which they acquire 65% interest for a total investment of $75 in the project and $25 million payments in cash to Osisko. The current resource sits at around 16 million tons, measured, indicated, inferred 47. A new resource estimate is actually due to come out in the next 2 weeks. What I love about Pine Point is the outstanding quality of the concentrate, not only from historical production, Cominco days, but our own work. Comparing Pine Point to the 5 biggest zinc producers on the planet, both are major trace elements. You see that Pine Point concentrate is exceedingly clean and low iron, and by reference, very high in zinc. So this is going to be an extremely highly marketable product, which is one of the reasons Appian got involved in the project. So our First Nations agreement Pine Point include 2 collaborative agreements and 1 exploration agreement with the 3 communities, and right now we're working on IBA framework to get that done by the time we complete our feasibility. So our 24 objectives, quite ambitious, but we're fully financed to go ahead. We've completed our winter drill program at Pine Point for the eminent MREs I mentioned, coming in 2 weeks. We've already released our updated MRE on Gaspé copper. We are going to launch feasibility at Pine Point this quarter, launch environmental baseline studies at Gaspé copper, additional definition program, as I mentioned, at Gaspé copper, and we are scheduled to complete our PEA at Gaspé copper in Q1 2025. Share structure is simple. We control internally about 40% of the float, known institutional and retail, add another 13, so we can account for 54. So the takeaways, again, we're very bullish, especially on copper. As most of you know, copper has performed very well in the last couple of months, touching 5. Right now it's settled back to 440. In our books, any copper price above $4 is good news, but we anticipate that this should be maintained throughout 24, and in 25, we firmly believe that copper could reach $5 a pound and maintain that going forward. And of course, at these prices, Gaspé copper is a very attractive project, but most of all, it's one of the safest jurisdictions in the world for mine development and also permitting. It's still a 5-year process, but we know exactly what we have to do to get to those permits. And of course, Quebec government, very supportive of the project because it's a critical mineral. It fits into their agenda, and it's the biggest copper development asset in Eastern Canada. Thank you very much.
Merci.
I'd like to introduce Michael White, CEO of IBK Capital, who will be moderating our next panel on securing the critical mineral supply chain. Michael?
All right. Good afternoon, everybody. My name is Mike White. As you heard, I'm the CEO of IBK Capital Corp. We have a great panel on the stage today. We're going to be talking about securitizing the critical mineral supply chain. And what we mean by that is by consolidating the supply chain so that these critical minerals in the various forms that they need to go through in order to end up in the downstream products, the less they travel around the planet, the safer jurisdictions that they remain in, the more secure they are, the more safe they are. So today, we are going to touch on a number of metals from uranium, nickel, and lithium, and phosphate. And we're going to hear what these gentlemen are doing and their companies in order to consolidate that supply chain, in order to do more closer in, closer to home, closer to the mouth of mine, to upgrade these materials and therefore secure their supply chains. We have a great panel, as I mentioned. I'm going to go from my left, across. First, we have Killian Charles. He's the President and CEO of Brunswick Exploration, and they're exploring for lithium in Canada, and I've been told Greenland.
That's correct.
And then we have Ed Ho. He's the resident expert on nuclear energy and the energy transition. Next to Ed is Pierre Philippe Dupont. He's the Vice President of Sustainability at Canada Nickel. And next to him is John Pasalacqua. He's the CEO of First Phosphate. Probably saw him earlier today on the stage. And to end us off today is Iggy Tan, and he's the non-executive chair of Lithium Universe. So the question is, what are you doing to help consolidate your supply chain and therefore secure your critical mineral supply chain? And I'll pass it over to you, Killian.
Thank you. Thank you for the panelists and having me here. Look, I think it's quite an interesting question because, you know, security of supply chain was always something that as a mining industry we talked about for a long time, but we never really cared about. You know, this is something that we have not seen in the last 50 years of the mining industry, right? It was just something that we did not care. And here, whether it's uranium, lithium, nickel, any copper, any other commodity, it actually matters. And once you start to talk about geopolitical issue, it's a whole other ballgame when it comes to commodities, right? We'll never kid ourselves that countries like the US have gone to war and spent trillions of dollars to secure themselves the necessary commodities for their economy. And that's what we're talking about when it comes to securing the commodity chain here. It is something that is unprecedented for our industry to be faced with. You know, what can we do? I think, you know, individually we all come from different angles in terms of what we're trying to do. You know, we're obviously on the upstream side, looking to help out on the raw commodity. There's people here on the downstream side, the mid-range. There's a variety of different opinions. But I think more than anything else, it's political willpower, right? That is something that we definitely need to see first and foremost to help, you know, companies push through that. And, you know, talk is cheap. You know, obviously we are doing our part in advancing that as much as possible. We are exploring Quebec. We are exploring, as you mentioned, in Greenland. We're exploring a jurisdiction that we believe have an end objective in securing that commodity, right? That's why we picked those areas to explore. That's why we picked Quebec. You know, we strongly believe that there's almost no point of exploring for lithium outside of Quebec because it's all there, all that we need. We're exploring in Greenland because we think that That's what Europe needs. But it's going to require our companies and a lot of these companies here to, yes, work together, but to work together with governments and communities. And that's a big ask because they've often been fighting each other for a long time here. So it's definitely going to be interesting. I believe the political willpower is there, and I think the corporate willpower is there, but it's going to go up and down a little bit, I think.
Okay, thank you. So a little bit there from Killian. Ed, now we're going to change over to uranium, I believe, right? And you're going to tell us a little bit about the uranium supply chain.
For sure.
And how that can be continue to be secure.
Thank you for having me. It's great to be here, and I'm a little bit of an outsider in the sense that I'm not in mining. I'm not in the. I'm an outside energy consultant and focus on the energy transition. And so the way I frame, things in the context of what we're doing in the panel. First of all, as far as uranium goes, it's an incredibly valuable strategic asset for Canada as far as its strategic energy security goes, and as far as climate solutions go. So I would say we tend to exclude uranium from the conversation when it comes to talking about critical minerals. And for me, uranium is part of the big part of the solution. When I'm talking about framing the solution, why we're here, all of us in some form or another, is we're here to what are the solutions to decarbonize? And those solutions are basically, in reductionist terms, we want to reduce the amount of CO2, and how are we going to do that? Reality is we're going to try to electrify everything, more or less. And in some form, everyone's here because their material will either produce electrons, transmit electrons, store electrons, in one form or another, and that's why they're so critical in this transition to 2050. Now, I'm sorry, my wife makes me always take notes so I don't lose my train of thought. Those minerals are used in many things like batteries, in solar panels, in rare earth minerals for magnets for wind turbines and such. But when it comes right down to it, we need more electricity, and the uranium and the nuclear industry in Canada needs to grow, and that's very it's very important. The Ontario produced report, the Pathways to Decarbonization report, where they say we need to basically triple the size of our nuclear fleet by 2050. Now, that's creating another 18 gigawatts of generating power, which is more than we have now. And we have to do that in the next 25 years. So there's a lot of need for resources to do that. There's a lot of, it's a project management challenge that has never been seen for decades now. The last time we built that much nuclear generating power was in the 70s and 80s, and we haven't done it for a long time. So there are a lot of challenges to get there, and I can't answer that in 3 minutes. But as far as uranium producers go, it's very bullish for demand. And globally, it's not even just in Canada. Globally, the numbers are similar. It'll be double or triple the size of the nuclear fleet. And you can see that in the commodity price for uranium. And the folks from Denison presented earlier today, and they presented it very well, that the commodity price is where we need it to be, well beyond to make very successful projects. There is demand, and it's a very mature industry. Unlike many of the critical minerals, there is a full supply fuel cycle for uranium in Canada, and there isn't much missing in generating needs in Canada, but for maybe heavy water and for the new generation of reactors that aren't CANDUs will need enrichment, which we don't have in our fuel cycle in Canada. But other than that, the supply-demand fundamentals are great, and there are some fantastic new projects that are coming online in Canada for the first time in, I would say forever, but certainly Cameco has been there all along, but in the last decades, nothing new has come up. But there's like NextGen, there's fission, and Denison has a really promising development they're working on too. So I would say Canada's end-to-end on a nuclear security standpoint is very strong. And the Americans cherish the fact that we're their next door neighbor as well. In the fact that they can have our commodities as a friendly to them.
Sure, sure. Okay, well, thank you, Ed. So just to quickly recap here, I'm paraphrasing here, but explore where the minerals are needed, and let's use more of the power that we already have from secure sources like nuclear, and I guess hydroelectric would be included in that, other sources. And we can debate that. We can debate that. But I think
the irony is not lost to me that we're in Quebec, and no offense to our hosts, but uranium mining is outlawed. Is a moratorium on uranium mining in Quebec, which is, their choice, and even Hydro-Quebec, because of lack of water, is considering other options to enhance their ability to generate power, which include wind. And Michael Sabia even said maybe we'll look at Gentilly to potentially bring it back from decommissioning to actually turning it on again. So everything is possible. The switch is turned on, and nuclear is back in the conversation, which is exciting.
Sure. Okay, thank you. And then I guess now we'll be looking at nickel. But in terms of the nickel, you're in Timmins, Ontario, and you're looking to produce nickel in a very carbon neutral, sustainable way. And so if you could tell us a little bit more about that, what are you doing in order to secure the nickel supply chain in Canada?
Sure. So, what we're moving forward is massive, projects that will supply nickel, and actually sort of move the production from Indonesia, which is geopolitically very unstable and controlled by Chinese. But I'd like to sort of switch the conversation to the what's the challenges in securing the supply chain in Canada. So my colleagues and I at Canada Nickel, we spend quite a lot of time in the last couple of years in the US, especially in DC, talking to Department of Energy, Department of Defense. And it's funny to see how the conversation has changed in the last couple of years. So remember last year we would go and meet with the Department of Energy, and they our story is super interesting. So we can generate nickel, net zero nickel, because that rock has the capacity to sequester nickel. They thought it was super cool. This year, 2 weeks ago, I meet with them, Department of Energy. It's how many units of nickel and when? We don't really care about the ESG aspect of it. So, the ban on Russia, the ban on China, critical minerals, major drivers for projects. And what's been happening in the last couple of years is what? It's all the capital that we've seen invested in that supply chain went to the battery plants. Mainly, bits and pieces here and there that we've seen announced lately. But that's been what's been happening. And in the last couple of years, I've been looking at that. It's okay, fine. It's what about the upstream? What's going to happen there? And by talking to these people, Canada, the U.S., the province, all the authorities, if we invest in those plants, it's going to draw investment in the mining. Okay, so basically, if you create the demand, the local demand, you're going to see investment in the upstream. Do you know how long it takes to develop a mine? Do you know how long it takes? So it seems to be very challenging. I think we actually need to move, switch the conversation to we need to have an integrated strategy, the U.S., Canada, the provinces, into securing that supply chain. We know that the projects are there. Lithium's there, nickel's there, graphite's there. Everything's there. But it's really difficult right now to raise capital to develop those projects. And the midstream in Canada is completely inexistent, especially on the nickel space. So obviously, we'll need to see a better integrated sort of vision in North America to actually secure. We're talking right now, the U.S. are talking national security. They're not talking about EVs and all that. They're talking about how can we secure our stockpiles? How can we secure the defense? How can we secure? So I think we need to have a better integrated, as North Americans, let's put it this way, a better integrated strategy to make sure that we actually have all the pieces of the supply chain. What's going to happen with these battery plants? Where are they going to get the supply? In foreign entity of concern, this is going to keep going.
Perhaps we can lead as miners. Perhaps we can do more from the upstream to go towards the downstream and take more control over that. And I think, John, you're in phosphate in the soon to be a producer of phosphate, many tons of phosphate, and I know that you're working towards that. Are you not working towards upgrading the phosphate and making it available in a more pure form for your downstream customers? You want to tell us a little bit about that?
Yeah, so we are into the lithium iron phosphate battery. Obviously that contains three elements: lithium, iron, and phosphate. And what's really interesting about lithium iron phosphate, especially for Quebec, is that Quebec is completely self-sufficient in lithium iron phosphate battery. We have lithium. That would be from other producers such as Sayona, Namaska, and other ones coming online, Brunswick and others. And then for phosphate and for iron, believe it or not, both of those products we were able to create from our property in the Saguenay-Lac-Saint-Jean area, just 2 hours north of here, right by Rio Tinto facilities where there's excellent infrastructure. So we pull out apatite, but very high purity apatite, apatite which is able to create a lot of purified phosphoric acid. So we can make that on site, so there's not a big carbon footprint. We secure it. And then also, in order to get to the apatite, we have to pull out magnetite, which is iron. And that iron can be made into iron powder, which then is used to make LFP battery. So LFP battery, phosphate, iron powder, and lithium carbonate. Oh, yeah. So we've got all that in Quebec. So I think that's a really strategic advantage. So we're building on that. The fact that we secured our own raw materials because they're our own, together with partners in Quebec. But also what we're doing is, we're not just looking at it as a mine. We're looking downstream. We're looking downstream to where our clients are. And we've already signed significant offtakes for lithium iron phosphate cathode active material, especially in the US, a number of parties interested in Canada as well, and even in Europe. So that's a very good integration where you're looking at the whole supply chain. We're looking to build a whole supply chain, right from critical minerals to the processing of those critical minerals to the cathode active materials themselves. At that point, we stop. It's a bit too much. Somebody else can make the cells and the batteries. But also in those three sectors that I just mentioned, we realize it's a lot for one company to take on. So we're working very carefully with partners in that area. But very well-heeled strategic partners, some of the best in the world for sulfuric acid, purified phosphoric acid, technology for making iron phosphate and lithium iron phosphate. So that's the way that we secure that, and we're all working with predominantly Western companies, but all across the Western world.
And do you find that you're in some way leading that charge? I mean, any industry needs leadership, right? Whatever we're going to, and especially in our business, right? When you're looking to put a mine into production, it takes a village, as they say, right, to do that, and it takes a lot of leadership. If we as miners are going to consolidate the supply chain and therefore secure the supply chain like you're doing, John, how just quickly, I know we don't have a lot of time, but how do you pick your partners? How do you get other players in the supply chain in line with your vision?
Yeah, so first of all, believe it or not, it might sound trivial, but a great attitude. The people have excitement. Philosophically, want to go the same way we do, which is a full North American supply chain. If I pick up the phone to somebody and they say, well, I don't really need you, or you don't really need us because you could find this way around the Inflation Reduction Act, I'm like, I'm not interested. We're going by the spirit of the law. We want to stand up a supply chain here in North America. It's a prerogative of our countries. It's a prerogative of our governments. That's what they've asked us to do. They haven't asked us to sick 100 lawyers on the Inflation Reduction Act and try and find our ways around it. In fact, what they did in the second version of the Inflation Reduction Act, tried to close the loopholes. And there's going to be a third and a fourth and a fifth until people get it that, look, you gotta be part of the world, you gotta be together with the world, but at the same time, you need to have your industry back at home as a starting point. So that's the way we're doing it. It's philosophically, number one, you gotta be into a fully North American supply chain with partners, friendly countries, and then, from there, you'd look for somebody who's well-heeled, somebody who's got experience in the sector, who's been there for a long time, or something very revolutionary. Generally, we're looking for partners who have deep experience in their field and focused, right? We want to be really focused in what we do, and we look for our partners to be focused all over the board. So when you bring 4 or 5 partners together, fit together like Lego bricks or puzzles, and everybody does what they have to do, and everyone's got a competence, and that's a supply chain.
Very good. Well, let's turn over to, let's give Iggy a chance. I know you're doing some great things in terms of lithium, production of lithium and the upgrading of lithium. Right now, lithium, for the most part, is upgraded in China. It controls about 80–90% of the upgrading of the world's lithium, battery-grade lithium, the end product. So, but Iggy, you're gonna do your part to make sure that it's done in country where it's produced.
Yeah. So I'm going to make 2 points. Basically, yes, it's a good idea to onshore the supply chain, and I'll talk a bit about what we're doing as a company. And then also I want to give you a reality check of where you are. Number one, in lithium, a lot of spodumene is shifted to China to be converted into chemicals and then comes all the way back. And then it feeds into the cathode plants and battery plants. So it's obvious the biggest issue is there's no converters in the North American market. So that's the biggest supply chain risk. Our company is building a lithium conversion plant in Bécancour, 16,000 tons per annum. Based on our experience running these plants around the world and using the same technology. So yes, it's important to start securing or onshoring the supply chain. But the reality check is, if you understand all the things that actually go into a lithium battery for this EV transition, there are thousands of materials and technology that goes into this battery. And the notion that you can onshore this full supply chain when countries like Japan and China started 25 years ago. So if you think about all the elements in a lithium battery, not only just lithium, on the cathode side, somebody's got to make the anode material, mix lithium with manganese or iron, phosphate. There's technology around that to make nickel metal, nickel cobalt cathode, who then feeds into the cathode part of the battery, graphite, copper, the separators, the liquid lithium between a battery. There are so many elements in this battery supply chain, and yes, it's a good idea to start, but the reality check is that you've only started at the first step. And there is many years of development to get to full onshore of the supply chain for the batteries. Because people don't think about it. All they think about is lithium, and we need some nickel in a battery. There are thousands of components in a lithium battery if you want to onshore the supply chain. So the reality check is you've started the process. It's a good idea, but you've just started it.
And so what about the downstream partners? What part do they play in terms of, I mean, they're the aggregators. They're the ones that make those complex batteries.
The process has started, and what you see is the OEMs, Ford, Tesla, initially have said, okay, we want to secure lithium. So they have got some offtake for spodumene. For example, Tesla's got offtake with Sionis plant, LG has. That's the first step. They haven't even looked at all the steps that get lithium to be in the lithium battery. And there are many of those that has to be resolved, and we are doing our bit, and I'm saying it is a good idea to move towards that, but the reality, it's a long process, and countries like Japan, Korea, and China started it 30 years ago. And suddenly, the North American market decides we want to do it in 5 years.
Well, the nice thing, though, in terms of our efforts, these metals are so critical that we are finding new types of deposits that are multi-generational. They're district scale, size, and scope, and they will be operating for decades. In Timmins, as an example, that will become the next Sudbury for nickel, and it will operate longer than Sudbury operated for. some of the lithium deposits that you're looking at could be multi-generational and in production for decades. You're opening up newfound generational potential mines of lithium. And I think with that, we can take our time. We'll move as quickly as we can, but at least we're starting with the centers of excellence around, like Sudbury did with nickel. It was the one, Sudbury was Canadians that helped develop the nickel market in terms of new types of alloys and steels and tensile strength and all that. It was out of R&D in Sudbury. Perhaps we can start building those out. I agree, though, it does take time, but at least we have the deposits, or are finding the deposits of the future that we can do that with. Sorry, Killian, you wanted to add?
No, exactly. That's the point. You know, when you compare, let's say, to Japan, Korea, a little bit less so for China, but for Japan and Korea, we're lucky because we have the assets here. So we can actually build, like, Japan and China and Korea, again, a little bit less so China, but definitely Japan and Korea. Yes, they started this process 25 years ago, but they will never have a fully secured supply chain. It's impossible for them to have a fully secured supply chain because they don't own the raw commodity. China has some raw commodity for, you know, a bit of copper, a bit of nickel, a bit of lithium, but they don't have the size that we have in Canada and North America, and that's really the key differentiation here. It's going to be painful, it's going to take a lot of capital, a lot of political willpower for quite a lot of political cycles, but we have a chance to do that. And that's what makes this conversation unique, is that we can actually get there and have from mine to final product in every point. We can have that in Canada. We can absolutely do that in North America.
I think the realization, though, that it's come up all day yesterday and today, is that we don't have enough time to meet these artificially close deadlines that are being set, you know, by 2030, by 2040. It seems impossible, and the amount of capital, like you said, even just to build the generation capacity in Ontario that I'm talking about is $100 billion plus. That can't all be financed by the utilities, and there has to be some new financing methods to figure out how to you know, privatize or bring other parties to the table with capital. It's just
so my question to you is, why do you need to own the supply chain? It's a global market. We exist in a global market. Not every country can make every component of a lithium battery, so why even think about it?
Yeah,
we've never operated like that.
No, I know, and because I'm just speaking as a Canadian and for Canada, right? Perhaps the similar argument can be made for the United States. But why is it for, you know, a century and a half now we've simply taken our resources and shipped them overseas to be processed? Why can't we build out the expertise and the Center of Excellences here in Canada? It will take time, there's no doubt. But why can't we do that? Why not keep that value here at home? Because not only do you keep that value here, but you also do secure your supply chain, right? The less these things are moving around the world, the more secure they become.
You know, I come from Australia.
No, maybe it's noble thinking, but
I come from Australia. A lot of ore resources get shipped across the world, right? Yeah. And in the end, we've always looked at why can't we go downstream? You know what? We're not good at it.
Well,
and that's just a fact.
Yes. Yes.
So there's no point wishing about it and trying to get technology that we don't have and the years of development that some of the other countries have. So my question is, why do you need the whole supply chain?
Speaking like a true miner, that's all I can say. We're really great at taking it out of the ground, but we'll let someone else upgrade it. Anyway, we're out of time, but I really want to thank this panel. We could talk for, you know, I'm sure hours on this topic, but thank you, Killian, thank you, Ed, Pierre, Philippe, thank you very much, John, and Iggy. We're all here at the conference. If you have any questions or comments, or if you just want to chat with them about their companies, all great companies, by the way, please feel free to approach them and learn more. Thank you.
Thank you.
Well done. Thank you. Thanks, Ed. Okay, that ends that session, and thank you to Thomas Bachand for moderating the previous session. I will now be moderating the final session for today. So, if you just give me 1 second, we'll welcome to the stage Martin Turin. He is the president and CEO of FPX Nickel Corp. FPX Nickel Corp is a Canadian junior mining company focused on the exploration and development of the large-scale Dakar Nickel District in central British Columbia. Welcome. Sorry. Let's give him a warm welcome. Thank you. Thank you so much.
Hi, everyone. Martin Turin, President and CEO of FPX Nickel. Thanks for coming to our talk today. Very excited about our project, an advanced stage nickel deposit in British Columbia, kind of a first of its kind. Ultimately, we think something that can be a disruptive new source of nickel, of low cost, low carbon nickel here, right at home in North America. Our project is called Baptiste. It's located in central British Columbia. We've produced a preliminary feasibility study last year that suggests this could be one of the largest nickel operations in the world, producing about 59,000 tons of nickel per annum over an almost 30-year mine life, with operating costs in the lowest quartile of the cost curve, and also importantly, producing that nickel with a very low carbon footprint. We spend a lot of time talking to downstream users in the stainless steel and EV battery supply chains, and recognize that that carbon footprint is a huge strategic advantage of Canadian prospective critical minerals production, and I'll speak more to that here as we go. As mentioned, Baptiste is located in central British Columbia, about 80 kilometers to the west of the Mount Milligan copper gold operation, which has been in production for about 10 years, and sets a nice precedent for the permittability of a large open pit project of the type that we have in mind. Baptiste sits within the traditional territories of the Clausda Nation, the Binshe-Wuten Nation, the Takla Nation, and Yukutji First Nation. These are groups that we view as key contributors to the project, and true partners and collaborators that we hope to ensure maximize benefits to our local communities from development here. We're very proud that the environmental and cultural baseline studies that we're advancing are being performed on our behalf by First Nations-owned businesses. And we think that we can truly develop this project with a consent-based framework, a true collaborative framework that demonstrates that mining can be done the right way here in the 21st century. This is, as mentioned earlier, a disruptive or novel style of nickel mineralization. This is not a conventional sulfide or laterite deposit, but rather the nickel is hosted in a mineral called awaroite. There are occurrences of awaroite nickel in dozens of countries around the world, but this is the first potentially economic mineral deposit where the primary speciation of nickel is in awaroite as opposed to the sulfide or the laterite form. The chemical formula of awaroite is Ni3Fe, so you have very high nickel tenor in the mineral itself. Interestingly, it forms only in a host rock environment that is depleted in sulfur. We are the first here. We are doing something new and innovative, and I often say that the mining industry is the race to be second, not the race to be first. We're happy to be innovators and proud to be advancing the first deposit of this type. And we think there are significant advantages to this type of mineralization that will lend itself to that low-cost, low-carbon form of production that really leverages off one of the key properties of this mineral, which is that it's highly ferromagnetic. Awaroite is an order of magnitude more magnetic than magnetite iron ore. And so by using that magnetic characteristic, we can use magnetic separation to reject most of the fresh plant feed to tailings, leaving a very small footprint of mineralization that then goes through a flotation process to produce a 60% nickel concentrate. That's as compared to typical nickel sulfide operations that usually generate nickel cons in the range of 12 to 15%. The high tenor of nickel in awaroite allows for the production of these very, very high nickel grading concentrates. Now, as a new product in the market, then the question is, where does this product go? Who would use it, and how much are they going to be willing to pay for it? So besides the very high nickel content in the Awera White concentrate, the other key characteristic of it is that it contains almost no sulfur and none of the deleterious elements associated with nickel sulfide concentrates, things like arsenic, antimony, mercury, selenium. They are not present in this product. As such, the concentrate does not need to go through smelting and has a far more direct path to the end market, which yields significantly higher payabilities. We estimate payabilities for this product will be in the range of 95% of the LME nickel price, whereas typical nickel sulfide producers selling to third-party smelters typically only yield about 75% of the LME nickel price. So that tremendous revenue line uplift for this type of product is very important. We have a path here to agglomerate the product into a briquette to sell it directly to the stainless steel producers out there. This is a very suitable feed for the electric arc furnace. We also have a clear path to go through hydrometallurgical process of pressure oxidation to recover the nickel units to ultimately produce battery-grade nickel sulfate. Nickel sulfate, which is shown here in the upper right hand, based on test work that we've previously done on this mineralization. Producing nickel sulfate is the sort of the holy grail of the nickel business. That's the chemical form that's required of nickel before it goes into the cathode. And our test work that we've done at the bench scale and now upcoming at the pilot scale demonstrates the advantage that we have here to reduce the number of processing steps to produce NiSO4 as opposed to the sulfide path, which requires that smelting stage, or the laterite path that typically goes through the HPAL process. So lower cost, lower transport, lower carbon emissions associated with nickel production to that battery grade in our case. We last year received some funding from the Federal Government of Canada, a photo here of myself with Minister Wilkinson of Natural Resources Canada, to scale up that test work. So we recently completed a pilot plant that demonstrates the mineral process flow sheet, continues to validate our bench scale results. So we put out a news release recently to that effect. That has provided us the ability to produce quite a lot of concentrate, which we're now putting through a pilot for the production of additional units of nickel sulfate. As a relatively small company, really, we think that the path to ultimately advancing this project is fundamentally runs through partnership. Very happy to note the investment earlier this year by Sumitomo Metal Mining, Japan's largest mining and metal processing company, who invested at a very significant premium to market, indeed at a 70% premium to market, earlier this year in a private placement with us to become a 9.9% shareholder. Sumitomo has stated publicly a very ambitious goal that they have to almost double their nickel production over the course of the next decade, and we think that our project could potentially fit very well into that strategy for them. Last year, we also announced an investment from Outokumpu, not a household name in North America, but Outokumpu is Europe's largest stainless steel producer. And so they also own 9.9% of us and are going to be, we know, a very supportive long-term shareholder here. It really demonstrates an aspect of upstream investment by downstream players who are very, very keen to secure low-carbon units of metal going forward for their supply chain. Last year, we also announced a joint venture partnership with JOGMEC. This is the Japanese government's agency for mineral exploration. They are very interested by this type of Awera White nickel mineralization. They think it can be a disruptive new source of nickel units to the EV battery supply chain, which is obviously fundamental to the Japanese economy. So they are funding a 2-year program whereby our geologists are going around the world looking for other deposits of this type, and those deposits we would then joint venture with the Japanese. So we will have news to come there on potential discoveries that we would love to be able to make with the Japanese. Finally, another aspect of our involvement with the Japanese ecosystem is we signed an MOU agreement with Prime Planet Energy and Solutions last year. Prime Planet is Toyota's battery company. This is a joint venture between Toyota and Panasonic, who are the leading leading Japanese EV battery company. This framework agreement sets the stage for a potential collaboration, joint venture partnership, and investment to allow us to continue to move our project forward. So very happy to be working with Toyota and their subsidiary there on the project. I mentioned we completed our pre-feasibility study last year. This is a large project. The capital here is in excess of $2 billion, but the returns here justify that investment. 29-year mine life generating 132 million pounds or 59,000 tons of nickel per annum. Again, one of the 10 largest nickel operations in the world when in production. And at a relatively modest long-term nickel price assumption of $8.75 a pound, the project generates an after-tax NPV of $2 billion US. And that's really driven by very low operating costs. $3.70 per pound is squarely within the bottom quartile of the current nickel cost curve. Just as important as where you sit on the cost curve is where you sit on the carbon curve, and I can't emphasize this enough. This is part of the reason, a main driving force why we have this interest from these corporate groups. Outokumpu, for example, they are very focused on producing the lowest carbon stainless steel in the world. A critical input into that is where the nickel comes from. They've been traditionally reliant on Russian nickel as part of their feedstock. That's problematic for obvious reasons now, and so they're needing to diversify their supply chain to allied sources that can guarantee production of low carbon nickel units to come. You know, one of the dirty secrets of EVs currently is that a lot of the nickel going into EVs is coming out of the Chinese and Indonesian axis of nickel production. A lot of those operations can emit upwards of 69 tons of CO2 for every ton of nickel produced. It somewhat defeats the purpose really of building an EV if we're having to emit that much carbon dioxide to build the car in the first place. We will be at the other end of the spectrum. We can leverage our access to effectively zero carbon hydroelectricity in British Columbia, and this is a key differentiator of Canadian production. It's important for our project, it's important for other projects globally. It's the reason why we've seen the investment that we have from those corporates that I mentioned earlier. It's very important to their long-term strategy to differentiate their cars or their stainless steel products from the Chinese equivalent. Despite all of the positive progress that we've made, we still find that we trade at a deep discount to our peer group. Current market capitalization of the company is about 80 million US. That's versus a project NPV, as mentioned, in excess of 2 billion US. So we trade at a multiple of about 0.04. This is on the basis of our market cap of around 100 million Canadian or so as of today. Questions, always arises. Why is that? Ultimately, I think it's down to the novelty of the type of mineralization that we're working with here. I think as we continue to de-risk and move into the feasibility stage, as we continue to demonstrate the permittability of the project in collaboration with our First Nations partners, we can see the opportunity here for a re-rating of the stock as we go forward. Finally here, just on the capital structure of the company, as mentioned, about 100 million Canadian market cap. We have strategic investment from Sumitomo, from Outokumpu. We also have another large public company investor who holds 9.9% of us, though we're not at liberty to disclose their identity, but it is a well-known group. Management owns about 14% of the stock, and so that's one of the statistics in this presentation I'm proudest of is for a company that's been in the public markets since the 1990s, it's rare to see this high degree of insider ownership. I think ultimately it shows that we're aligned with shareholders, and given the value proposition that I've outlined here earlier, I think the opportunity to look at FPX and to ride along in our future success to me should be apparent. Thanks again for your time.
All right, thank you, Martin. Martin, we should have you on the panel, by the way, for next year, securing the critical minerals supply chain, because there's an example. We can do it in-house. We can do it, in country, in terms of upgrading these material. Next up, we have Terry Lynch. I saw him walk in. Terry's here. He's the president and CEO of Power Nickel. Power Nickel is a Canadian mining company advancing its high-grade nickel sulfide project in Quebec with a focus on supplying nickel for the growing battery metals market. Terry's also an advocate for pre-revenue junior exploration mining companies working with Sprott, trying to help the value of these shares not fall prey to short sellers. I don't think you're talking about that here, but I want to thank you for that.
All right, cool. Thank you.
Let's all give him a great warm welcome. Thank you.
Thanks again. Good afternoon, everyone. It's always a pleasure to come to Quebec City. It's one of my favorite cities in the country, so it's always such a beautiful spot. I could definitely see myself living here. We'll walk you through the Power Nickel story. It's a pretty interesting one. It's evolving. Obviously, with a name like Power Nickel, we obviously had something to do with nickel. And we still have a lot to do with nickel, but it's now becoming more of a polymetallic story, and that evolution is very exciting. We're not going to tell you anything we don't believe is true, but as with all investing, it's always important to do your own due diligence. Standard cap structure, I think, for most junior mining companies. The one thing that's maybe different about Power Nickel here is our key shareholders own significant chunks of the company. We've invested significant capital, our own capital. Our top 5 or 6 shareholders own over 50%. The Lynch family is the biggest one there at 20. We've put in a fresh $4 million over the last 24 months, going from 10% to 20% because of the NISC project. We really believe in it. And so I think it's, as an investor, I'm always comforted by seeing management and the people that know the project best writing their own checks. I'm going to walk you through sort of 5 reasons why we think it's sort of a compelling investment for Power Nickel. I'll walk you through them one by one. Give you a little perspective. When we started the project, we acquired a historic nickel resource, a nickel sulfide. 1% nickel is a very interesting sort of project. 3.1 million tons, and we've ramped that up to, now it's probably north of 8. And it's sort of in that bottom left-hand quartile. That is what we call NISC main. So that project is associated with ultramafic rock, and that's where the nickel sulfide ore body exists. So when we got the project, we have 46 square kilometers here, about a 14-kilometer strike length, property package. We mapped it, and one of the things we noted was about 5.5 kilometers to the northeast. We identified what we called at that point the Wildcat target, where it was ultramafic expression at surface, and it was correlated with some old EM anomalies that we had identified. And we thought to ourselves, okay, someday we're going to test that, and we did. We tested it about a year ago in April, and it was a winter target, meaning at that time it's sort of marshy, and you have to drill it when it's frozen. So we drilled it, and we're, of course, looking for more nickel sulfides, and lo and behold, we found this crazy PGM hole where we had almost 1 ounce of PGMs over almost 8 meters, pretty much close to surface, like at 60 meters. So it was like a shocking sort of discovery for us. And of course, unfortunately, we had to wait because it was a winter target. So we had to wait until January of this year to get back in there. So in January, we started drilling, and we just started hitting these crazy rocks. I published this picture, I think in sort of mid-March or something, and at the time we had no assays back on these 6 sets of drill assays, but we just knew they were super rich because it's all chalcopyrite, and of course, these became legendary holes. And by legends, I mean legends, like holes that nobody's ever seen, not in Canada, not anywhere. So we're getting recovery, 24% copper equivalent, over 14 meters. I mean, it's just insane. So these holes, there's a whole raft of them now, have basically happened in a chute. And this chute is sort of trapped, structurally controlled through 2 plates from surface. We've drilled it down to about 275 meters now. The width is about 225, but the true width of the real meat of the zone is about 100 meters. There's a bit of a mineable halo of 50, 75 meters on either side. Within that 100 meters, though, we're getting these epic results. We've had like 6 holes of more than 10 meters of 10% copper equivalent. So, that's, if you think about it in terms of, 1 gram gold being, $60 rock, this is, again, with all the disclaimers and stuff, would be $1,200 rock, so like 20 times more theoretical value. So that's very interesting from a exploration discovery perspective. It's certainly not anything anybody's ever seen really anywhere in the world, especially the copper, high-grade copper with high-grade PGMs. It's just an anomaly. It's interesting, when we made the initial discovery, my son, who's a CFA and a smart mining investor. He's actually in MinTwits on Twitter, and he's one of those guys. And he sends me a video. He said, "Dad, you got to watch this video. It's this very famous Australian geologist, Dr. Steve Beresford." And he said, he's got this thing. He's on a quest to find the next big polymetallic mine. And he's found a bunch of them already. And he said, it's like he's talking about NIST, but of course he doesn't know about us. He said, you should try and get a hold of him. So I reached out, I watched the video, and sure enough, it was, it's not like watching Laverne and Shirley, but if you've got a lot of money in a deal and it's talking about stuff that you're getting educated on, it was entertaining to me. So I reached out to Dr. Beresford through LinkedIn, and I sent him, some nickel assays that we had, and obviously the PGM hole that we had. And I said, look, I watched your video. I'm sure you're busy as hell, and you have never heard of power nickel, but I said, I think we got one of these things. So he gets back to me in a couple of days. He says, well, you might, so we started chatting, and then basically he said, what's your plans? And I said, well, unfortunately, it was a winter target. So I said, we're going to try and get back in this fall if it gets dry, but most likely we won't be able to get in until January. So that's what turned out to happen. We couldn't get back in until January. But then in January, obviously, we started to drill, and it was like shooting fish in the barrel. I mean, we drill a hole, bang, we hit it. Drill another one, bang, we hit it. So it was like that. 15 of 16 holes hit. So obviously, as we were generating these great recoveries in terms of the assays and whatnot, we contacted Steve again and said, hey, take a look at these pictures, take a look at the assays. And he said, we better hop on a phone. We did a technical review with our VP of Exploration. And I said, look, Steve, I don't have an analogy for you. I mean, it's not like Voisey's Bay because we've got the precious metals, and it's not like this gold deal because we've got the nickel and the copper. And he said, you know what, I know what it's like. I said, okay, what's that? He says, it's like Norilsk. Norilsk, for the people that don't know, is the world's most valuable mine. It's the big Russian mine. So, and I said, wow. He said, yeah. He said, look, I'm not saying you got the next Norilsk, but he said, if you did, it would start like this. So in his view, if you look at that picture on the screen, that 5.5 kilometer corridor, he believes better than 50% chance that nickel sulfide ore body is connected to the line zone. Second possible theory is that somewhere between the NISC main and the line zone, there's a second nickel sulfide ore body that's unconnected to NISC, but it's providing the oven to provide the fluids that have flown up here. There's interesting, in the recoveries of our assays in the line zone, we're getting a lot of high-grade nickel as well. So that's why he believes this is sort of fundamentally, like in a lot of polymetallic deposits, the nickel sulfide acts as the oven, and some sort of hydrothermal activity, they're not really quite sure, comes up, and it basically gathers up the copper and the gold and the PGMs, and almost like in a geyser, it just pulses full of energy and releases these fluids and creates these very high-grade zones. And he said, look, in his experience in all the polymetallics he's done, you'll find these zones, and they'll be super rich copper ones, they'll be super rich PGM ones, they'll be super rich precious metals ones. He predicts there'll even be a super rich zinc one. He asked me, he said, how many ounces of gold does Norilsk have? And I said, I had no clue. I didn't know they had any gold. He said, 20 million ounces. So he said these polymetallic discoveries, can be amazingly rich. So for us, obviously in the last 6 weeks, our stock's tripled, which is great in this marketplace. But honestly, we're cheaper now than we ever were because, if you look at the potential value of this polymetallic discovery, you look at what's happening for Bravo Mining as an example, they're 400 million market cap, we're 100 now. I think we're very, very early on this Lassonde curve on the discovery age. And there's a lot more to us than even this. So let's learn a bit about that. Obviously, the nickel sulfide package that we started with, we had 7.1 million tons of almost 1.13% nickel EQ. A nice number, getting better at depth. We think we've added more to that, and there's a lot more to be found. Within the nickel sulfide world in Canada, high-grade nickel sulfides, Voisey's Bay, 22 million tons, Lynn Lake, 22 million tons, Voisey's Bay, 140. We always saw ourselves being somewhere in between there. Obviously, if that 5.5 kilometer strike length is true, we could blow by 100 million tons. We'll see. We have to obviously do the work and discover that. One of the things that we did a little bit differently is we got approached by these guys, CVMR, and CVMR is a nickel refiner. They're the largest private nickel refiner in the world. 18 plants around the world. They're building another 3. They make nickel powders, among other things, but that's what they're most famous for. and their client list is literally the who's who of the Fortune 100. They have 2 joint ventures with the Department of Defense. The American $100 bill is made with their nickel nanopowders. So it's a pretty impressive company. So they're in doing a feasibility study right now on the nickel sulfide project. We're advanced quite a bit. In fact, I'm going to Korea with them on Thursday, or Friday actually, this Friday, for a week's worth of meetings with the Korean Battery Metal Complex, the third set. And we're going with nickel powder that we've made from NISC. So the interesting thing about nickel powder is, you know, nickel concentrate, you get $20,000 a ton. Nickel powder, you get $60,000 to $80,000 a ton. So that's the business you want to be in. You know, nickel, for a lot of people, is a 4-letter word. I think it's a 6-letter word. I think, you know, this is proof. You know, I think, you know, Mark and his team did a great job of getting Samsung to invest in Canada Nickel. And for sure, Samsung had cheaper alternatives for nickel. But they invested because they believe that they need to have North American nickel to be compliant with the Inflation Reduction Act. And we believe that too. We think, you know, people are going to look at this as sort of, I compared nickel to uranium in January 2020. Nobody wanted it. By December, everyone wanted it. So I think nickel's one of those unsung heroes that you should be watching in your portfolio. Obviously, we're here in Quebec, and it's a tremendous province. They've done some amazing things, you know, that make it attractive for mining. We think it's the world's best spot to be an explorer. We like it for 3 big reasons. The infrastructure. In our case, we're located just south and a bit east of James Bay, just outside the town of Namaska. We're located off of Route North. Hydro-Quebec's literally across the street. There's a regional airport in the city, and of course, it's the home of the Cree government. I was just up there this week meeting with the Chief Jolly and the council and the community. Tremendous people to work with. The Quebec government's done a great job of working with the First Nations and getting them to understand mining and how they can benefit the community. And then, of course, the fiscal terms. We've done several deals where we've gotten more than double our money. Like last one I think we did was around Christmas time, where Rob McEwen and the Lynch family each put $500,000 in, and we got $2 million in funding. Stock was 23 cents with the funding at 50 cents. So that's tremendous from a shareholder dilution perspective. It also works on the development side. So you got 30% tax credit from the feds, up to 25% from the province. So if you find a mine here, you can develop it as well. This is one of the slides I like to sort of show. It's a little out of date, but you know, not so much. I mean, basically shows us against other high-grade nickel sulfides around the world, and shows that we're the cheapest. Yet, and that was before the Lion discovery. Whereas if you look at like Bravo Mining with 400 million market cap, you can see when I say we're still super cheap, it's by relative comparison. Obviously, you know, the environment's a big part of things. We think we're going to deliver the world's first carbon-neutral nickel mine, thanks in large part to Hydro-Quebec and the fact that we have an ultramafic deposit. We're using some pretty cutting-edge technology. This is the ambient noise. It's basically super-sensitive seismic. This is what it looks like. It allows you to create a 3D visualization at depth, and it's helped us find both you know, the advanced Line zone and to find more at NISC Main. We're also doing a spin-off. My introducer talked about the short problems. One of the ways to maybe deal with the naked shorters, and we've got a lot of naked shorters in Power Nickel stock. We think, you know, it could be 60 million plus shares short, is to do a private spin-off. So we're doing a private spin-off that'll be announced at our annual meeting in July. Last thing to talk about is we got a royalty that we have with Teck. We're in the process of selling that. It's just another, you know, probably chip in $5 million, which is less dilution for NISC. And if you believe in what we've got at NISC, you want to do that. How we got here, great team with GeoVector has helped us along, our board as well. And I'm running out of time, but I think, you know, that's a pretty compelling wrap on why Power Nickel's one of the, you know, I think compelling investment stories out there on the market today. Thanks very much for your time. Have a great day.
Well done, Terry. So we have a panel coming up here. Are we ready to go with the panel? Yeah. It's the title of the panel is Geopolitics and Mining: More Uncertainty or a Clear Path for Opportunities. The moderator for this panel is Terence Ortslen, and he's of TSO Associates. So I welcome the panel to the stage.
Here, no?
Thanks, Michael. From IBK, where are you? Welcome to the geopolitics session with 4 insightful members of this panel. We want you to leave this room in 30 minutes with opinions and conclusions and some suggestions. So, from left to right, John Price, based in Florida, working South America, Central America. Gary Stanley, based in Virginia, essentially managing director of critical metals. Next is Matthew Zemisky from Washington area, and Jose, who actually lives in Toronto, for O3. The geopolitics has been kind of misunderstood a lot of times. Everybody thinks it's a negative connotation. Well, it isn't. There are opportunities with geopolitics. There are opportunities with the pricing, the supply, with the capital markets and all. And the only thing changed over the last 50, 60 years in geopolitics is that we had China to become half the world consumer and producer of metals pretty well, so they dominate the demand and the supply pattern to the extent whereby others have to adjust to it. I'm going to leave it at that, and I will ask each speaker to introduce themselves and what they think about the geopolitics, the way we see it today, about the supply of the metals for the future, for the demand of the metals in the forward-looking path, the pricing of the metals, will they be volatile, will they be steady, will they be responsive to the supply demand, or will they be more like the geopolitics issues which we can't control? And finally, the capital investments that we expect to happen in this industry, which is not taking place, and we have to spend the capital on the projects, and we know that, and we have the projects to spend money on, and what their opinions on this are. So with this, I'll start with the far away, Jose from O3, but talk about South America, Peru specifically, and his experience and his views. Introduce yourself first. Thank you.
So I'm Jose Vizquerra. Thank you very much for introduction. I'm President and CEO for O3 Mining. I am Peruvian by birth, so I guess I know a little bit of what has been happening in Latin America, specifically in Peru. From a geopolitical standpoint of view, of course, the first thing that you alluded to is supply and demand, and certainly supply and demand specifically for those metals that are right now being very precious, such as silver and copper, especially for what we have been seeing in the new electrical / energetical revolution. We have seen copper and silver more and more used towards those ends. And certainly we will see supply and demand, and I am a firm believer that those two commodities, at the very least those two, will continue to rise just on the back of supply and demand. On another note, talking about capital, which ended up being a very important piece of the story, capital will continue to be deployed to those areas that are safer, where the rule of law will continue to exist. And in that regard, I had the privilege to see, specifically in Peru, that while we had an extreme left government in Peru with a very weak democracy and very weak institutions, we managed to have at least a constitution that had 3 main pillars. The first one, the central bank was independent. The second one was the respect of the private property. And the third one, by constitution, the government cannot do business. That avoided that this extreme left group took over the mining industry. And a couple months after, or a couple years after, these individual ended up being sent to jail. And in Peru, we can say that since 1968, we have not had any nationalization, which has allowed us to keep growing at a 5–6%. However, to attract capital, we will not be in the same position as the United States or Canada. So that has something to be said. Supply and demand will continue to grow and will depend on investors if they want to take more risk and go to places where things are easier to be extracted or where the balance is.
What are the major projects in Peru expecting capital attraction?
Pardon?
Major projects lined up in Peru requiring capital, which are essentially ready to go. Lack of capital holding their timing off the scale.
Well, the last project that was built in Peru was Quellaveco. I think it was around $6 billion. That was Anglo-American. Previous one to that was Cerro Verde, where my family out of Buenaventura was invested. It was $4.2 billion. It is today the largest concentrator that exists in Latin America, and it's very profitable. A project that has been delayed for years. Finally, it seems that the line or the light is at the end of the tunnel, which is Tia Maria, which will be between $2.5 and $3 billion, and that's under Grupo Mexico. You know, if we see where copper is, we have Chile as the first producer, Peru as the second producer. I think El Congo now, or the DRC is up there, like I don't know if second or first or third, but those are the three that are constantly fighting for that first, second, and third place, no? Which, you know, would be great if we can have more copper in Australia, Peru, and Mexico, where we will, you know, have constant supply. But that provides opportunity as well. But if Chile has issues with the extreme left and, you know, that is reduced, which they were not successful, by the way, their constitution was stable enough to avoid them to come into power, which was very, very interesting to see. But if they do reduce their production, we will see an increase in price immediately.
Matthew, you're combing the world, looking for opportunities. How would you rate the markets with respect to, with your opinion about the supply side or the capital markets?
Sure. So, short background about myself. I've spent, you know, probably the past, you know, decade plus in the Washington, D.C. critical minerals plus defense supply chain world, both in a consulting government affairs role, working at the Department of Defense's stockpile program, buying and selling commodities for them, and then finally working at their Defense Production Act group, actually vetting and selecting projects for investment. Taking a step back from that, I mean, really what I'd offer is that this is, you know, very much an environment that, you know, from my perspective, is very much kind of back to the future. If you think about most markets, you know, it doesn't matter if you're in Europe, Asia, you know, North America, it's very, very normal for countries to have a very direct role in managing their defense industrial base, both in terms of the amount of companies that participate in projects, how contracts are allotted at the subcontract level, and then in many cases having very tight controls on from where and from whom you can buy critical inputs to manufacture those products. And it doesn't matter if it's something that goes into ammunition or particular types of steel that are used in constructing ships. And again, if you can go all the way back to Adam Smith, and he'll have a few lines about, you know, restricting sources of British sailcloth. And so in that sense, you know, the kind of 1992 to, we'll say, 2022 hiatus of globalization is very much kind of an aberration from the norm of how, you know, supply chains tend to function, where if we think about it, there used to be some very, very significant controls on the distribution of, you know, with whom you could do business in the Warsaw Pact and then certainly in the West. And then at the same time, there was a very, very strong non-aligned movement that indicated, no, we still want to do business with both sides. And so in that sense, when I take a look at, you know, how supply chains are functioning, or alternatively not functioning today, really it's this jarring effect of how do we move from this system that was, you know, relatively open and transparent to something that's a little bit more closed and a little bit more bifurcated.
Thanks, Matthew. John, world exploration spending between Canada, US, and Australia, the South America is the second biggest chunk of exploration spending. And there have been discoveries, a lot of discoveries, a lot of projects. Argentina, in Ecuador, Panama, we had a little setback on that. And Chile, Codelco needs a lot of money. And Peru needs capital and recognition as well to get the system going. How would you look at the Central America after all these discoveries, with the policies that they consider, which are volatile, incidentally, that they will be able to path forward to bring the capital in and the technology and the international corporations to get the projects underway?
Sure. Well, thank you for those of you who stuck around in the room for this session. A little bit of background of mine. I've lived in and worked in Latin America for the last 32 years. Like Jose, born in Peru, strangely enough. And so my point of view is really through the eyes of the projects that we've worked on in Latin America. And of all the different things that Terrence defined under the umbrella of geopolitics, I'm going to try to tackle the notion of project risk. I think a lot of mining companies spend a lot of effort trying to predict their future revenue streams and pay a lot of money to do that. And in the reality, a much more mitigatable area of finance of their projects is the risks and the costs associated with that, whether it's project delays or cancellations or expropriations or nationalizations. Those things are all mitigatable risks. And what I've seen that's really, I think, telling, and again, my perspective is Latin America, but I think you'll find it's applicable in many other parts of the world. 30 years ago when I got started, almost every mining company that went into Latin America, they focused all their efforts, all their charm offense on the ministries of mining and or the president's office of a given country, because in that very tight circle was all the decision-making power around how a project is permitted and how it is taxed. And that remained the case for a long time, but about 15 years ago, maybe a little bit less, with actually the advent of the cell phone, believe it or not, today 80% of adults in Latin America have cell phones. Even people with living on incredibly humble means in the Sierra areas of very remote parts of countries, they'll have a cell phone. And that has also coincided with a weakening generally of national governments. And in the past, if you partnered with a national government and you got any trouble at the mine, the national government was in their interest and in your interest that the military or some sort of physical force would move in and clear away the problem and use sometimes pretty unsavory means. That is no longer and has not been a viable option for mines for about 12, 15 years in Latin America. Again, because anything that goes on in those remote areas is no longer kept from the world. It's on full display thanks to cell phones, thanks to websites, thanks to the help of NGOs, etc. And with the weakening of national governments, it's local communities that became the most important stakeholders that miners had to work with and convince of the viability of a project. And at one point about 5 years ago, there was as much as 300 major mining projects around Latin America that were on hold or canceled due to local community opposition. What has happened more recently is, and I just wrote a piece about this last week, is you have two issues now, and it's not even about local communities, it's about the general voting public. Mining companies have to accept the fact that most people in the countries where they extract have never seen a mine up close, have no idea about the economics of mining, and the only way they're informed about mining is generally from anti-mining sources of information or a generally ignorant business media who, focuses on things that are a very incomplete picture of mining. And so what you have is a differentiation. there are countries where the structure of a government, like the Dominican Republic, puts a lot of power in the president's office, or the dictatorial nature of a government, like a Nicaragua or a Venezuela, puts a lot of authority in the president's office, or they also have a high level of popularity. In those cases, you still need to partner with those executive branches. Now, you may face reputational risk if they're an unsavory government. But for most jurisdictions today in Latin America, the executive branch is not powerful, does not control the legislation, and probably has pretty weak support of voters. And so then it comes down to whether it is a mining nation or not. Peru, Chile, Suriname, Guyana, and Argentina, because it is a federalized system and therefore it's at the state or province level, those 5 jurisdictions are mining nations that, in spite of left-wing politics or in despite of other interruptions, there's enough awareness amongst people and the political class that the economic benefits of mining are greater than the social and environmental cost, as long as the other 2 are well mitigated. In every other country in Latin America, that is not the case. And this is what happened in Panama. This is what happens in Colombia all the time. This is what happened at one point in the DR. And Brazil. It's happened in lots of countries where if you put together an anti-mining campaign amongst the general public, the political class, it not being a mining nation, will fold its support for your project very quickly. I see this all the time in Colombia. In the Department of Antioquia, big mining department, they support mining, but in Bogota, they do not understand mining, and if there is a popular determination to close a mine or to stop a mine, all political support, whether it's left-wing or right-wing, will die because they don't understand mining. When Barrick was in the DR and had to negotiate with the Danilo administration about 12 years ago, what happened? It's not a mining nation, but it was a highly concentrated political power in Santo Domingo. So what ended up happening? That government spent money with the media to convince the voters of the Dominican Republic that Barrick should renegotiate with the DR, and they did. It cost them $1 billion to renegotiate. So are you a mining nation or are you not a mining nation? Is power concentrated in the executive, or do you have a weak executive government? Those are the things that you have to understand before you determine your strategy, whether mine is viable or how you're going to make it viable. Because the mining industry is well behind the energy industry at shaping voter opinion. The energy industry, I mean conventional energy, is just as dirty and negative an image globally, but you don't see energy projects canceled. They are accepted because they are a necessary evil. Mining is not there yet. They have not invested in PR the way that energy has, and that's the next frontier for making your projects, big projects, function in these countries.
Let's look at the tourists that go to Dominican Republic as an example from Canada or USA. There are 60 or 70 flights a week going to DR. And as a test, I asked them, I used to work in DR, by the way, that have you seen any mines, or do you know it's a mining nation? They go like, you gotta be kidding me. You go to Puerto, whatever, to Santo Domingo and so on and so forth. The thing is that central of Dominican Republic, I think they got the biggest gold mine operation right now in the Americas.
Yeah.
Falconbridge nickel used to be there from early 70s onwards. There are other small mines, and central of Dominican Republic actually is a mining area. So education starts with us and with them. Talking about the education, Gary, you're very experienced on this issue about the Commerce Department, talking about the ideas and the concepts and the policies, and you see people's understanding, appreciation, and reacting to the issues of mining and the metals. And one thing that we all agree here, I'm sure, is that the proficiency on mining and literacy on mining around the world is declining instead of steady state or improving, by the way, which is the issue we're going to tackle before we're over. But Gary, I'll leave it to you to introduce yourself and talk about your challenges.
Sure. First of all, it's an honor to be on such a distinguished panel, and Terrence, thank you for your moderation this afternoon.
So for the audience, my prior experience up until January 1st of this year is I served from 1983 to 2023. I served 40 years at the U.S. Department of Commerce in Washington, D.C., and worked over the course of my career with extraction-based industries. So I came in first with forestry, and then transitioned to chemicals, and then eventually through the previous administration that carried over to this administration was the area of critical minerals and metals. And the charge for the Commerce Department that really thrust it into the public arena was an executive order 13817, which compelled the Secretary of Commerce to coordinate for the first time in the history of the United States a federal critical mineral strategy. Now, one of the things that, as the lead coordinating author of that report, was that gave me an incredible exposure to a whole host of stakeholders in this place. Not just public stakeholders, which my friend Matt and I can certainly talk to you about. As a Defense Department representative, I was a Commerce Department representative, but there was also energy, and there was interior, and there was state. There was a total of 15 U.S. federal agencies that had equities in the critical mineral space. It took months just to figure that out. And so you understood the challenges among all of those federal agencies, but oh, by the way, we're now transitioning into the private sector and into the international sector in trying to deal with a whole host of issues. One of the great experiences of my career was working with incredible people like Matt and the interagency on recognizing that the theory of the case, as we called it, which is what's the basic approach to addressing this issue, came down to 3 areas. It came down to working with your domestic industry in terms of enhancing their capabilities in either the mining, the processing, or finishing sectors. There was also the second group, which was working with allies and partners. And then thirdly, well, one that I am so thrilled about this conference is the third area of the case is investment. You need all 3 of those working in tandem, because to deal with the kinds of issues like geopolitics, there has to be a recognition, not just locally, not just regionally, but globally, of the challenges and how to accomplish them together. Let's be very candid here, that because of the unsustainable practices that too many industries bought into, we have isolated ourselves to a almost drug dependency on one country. Now, sadly, we should have learned this lesson years ago. We fell asleep right after 2009, 10, and 11 when China was making it clear, not just to Japan, but to the rest of the world, we will punish you if you don't do it our way. Sadly, that 2009, 10, and 11 period quickly lapsed into our short-term memories, and we forgot. And then all of a sudden we find ourselves yet again thrust into the deep end of the pool, realizing we still have the same problem. We have not addressed those basic fundamentals, and what you and I would not do as public companies or even private companies where you are so dependent on one supplier, you would say that is poor business practices and that is unsustainable, and yet that's where we find ourselves. So I think the key to this is, number one, not taking our eye off the ball like we did in 2009, 10, 11, but it's also recognizing the geopolitical atmosphere is the one that we have the least control over, because these are certainly not folks that we're going to be dealing with that are going to be seen more as allies, but really as competitors and, in their view, conquerors.
These are great input, and I must say that we shouldn't take our eye off from the panel because it will be back next year. Joe?
I have a quick comment, because you referred initially to where the capital goes, and I would agree completely that jurisdiction will matter, but we should go to the very basics. Capital will be allocated to those industries that makes money. And as of today, copper companies are having essentially margins of 22 to 24%. Gold companies are having margins, like one of the better ones is Agnico with 23%. or 33%. We're not seeing big margins. So regardless of the jurisdiction, if we're not making like 50% margins, 60% margins, 100% margins, we're not going to attract investors. It will happen that the only people that will be investing are going to be the countries in order to secure certain elements that are going to be important. The United States will be investing in copper, in nickel, in lead, in zinc, whatever will be important for them, as China has been doing very effectively. But investors like us, if there is no margins, why would I invest a company that has 20% with a lot of risk if I can invest in a bank or real estate? That's our job, to have a low cost and generate margins. As mining people, that's our job.
You're right, Jose, because one thing, this conference, in fact, even one before, a big one in Toronto, we even discussed was the cost curves, okay? People forget how much the cost curves has steepened. And the margins are very difficult to define for against the risk analysis for the returns. So in that context, you travel the world, Matthew. Do you see these concepts a bit more in the places you go to, or they just want to be focused on the asset themselves, the financial risks, for instance?
Yeah, again, the point that I can speak to is how the government review process, for lack of a better way of putting it. And that is, first and foremost, certainly there are published policy goals, some percent of zero-emission vehicles or some percentage of clean technology penetration by some date in the future. There's a tremendous amount of commercial tailwind to those targets, and so the government role in that sense is really not to sit in the driver's seat, because, for lack of a way of putting it, regulation is going to do that anyways. Or another way of putting it, I had a very good friend who was working for an automotive company, and they traveled to some very, very deep red states, and they decided to put them into an electric vehicle. And of course, the first half of that conversation is about how much they'll never drive an electric vehicle. And then as soon as they step on the pedal and they take off like a rocket ship, they start giggling and they never want to go back to an ICE again. And so I think to some extent the pure excitement factor of those markets will, in the long run, carry themselves. And so the government is in more of a facilitation type role in setting the conditions to be successful. On the other hand, there are a slew of other commodities where maybe it's a byproduct of a base metal, or alternatively, we'll say the core metal like copper moves in one direction, but the co-product like cobalt moves in the opposite. And that's one where I think you would expect to see a lot more government intervention into that space, precisely because they see some additional value in a stable, predictable supply of the material that's not explicitly tied to whatever kind of, extra market manipulation may be occurring.
Thanks on that, Matthew. I gotta finish it off, but by saying that, asking you, if you all agree, any case study or debate should first identify the problems before we look at the solutions. Do you think we identified the problems of the industry today? John?
I think we scratched the surface. One of the things that we haven't talked about is we've just exited a 30-year period of very low inflation and low interest rates that we will never see again.
Yes.
Because of labor and capital and material availability. And therefore, the whole idea of high margins, subsidizing an industry, I think those things are a thing of the past. I think that the aspirations, the nationalization aspirations of certain countries in Latin America and other parts of the world that could be afforded when they had reasonable debt levels are a thing of the past. The debt levels of countries are too high today. So that's another factor that we haven't even talked about that's going to shape the industry.
Correct. Those margins are going to disappear very fast with the demands by the stakeholders. Dividends on this side, governments on the other side, and the local stakeholders. And the other issue is that the tax collection in many countries do not go where the mines are. They normally stay in the capital, typically. Gary, last words?
Yeah. I think the thing that, again, a panel like this that goes by so quickly doesn't give us a chance to explore kind of like the unknown discovered country of the future, and that is, how does geopolitics drive future trade pacts and future trade agreements. We've seen a lot of international collaboration and cooperation, but where does trade policy and the engagement of government-to-government engagements that drive so much of what the private sector does, how does that help to take the hard edges off of many of these critical minerals? We see it in some examples in like an IPEF, the Indo-Pacific Economic Framework, that the Biden administration has sought to engage the world. The challenge with that is it's not a traditional trade agreement that would have the kind of enforcement mechanisms. I believe that one area that governments will begin to need to explore is how to formalize these negotiations so that labor, environment, ESG becomes a part of the conversation, not a tag along just to throw into a trade agreement. That's where I think geopolitics of the future are going to really compel the trading pacts and trade agreements of the future.
Thank you, Gary. Matthew, last word?
Sure, just one very brief comment, and that is the one thing that I suppose is certainly reassuring for this sector is that if we were to compare Obama to Trump, Trump to Biden, there's been a remarkable consistency in, at the very minimum, critical minerals policy, which again is not something that you really would expect considering that on considerable other political issues, they are very, very far apart. And so that is something that, again, even as I look at other jurisdictions, the European Union, Japan, South Korea, that consistency of policy about the need for more resilient supply chains is consistent across the board. The open question, which is the principal open question with any kind of democratic form of government, is does the resourcing continue to follow the policy talk, and is that maintained year over year, knowing that we have elections every 2 to 4?
Thank you for that. Jose, last word.
Well, thank you so much, everyone, for attending. Right now, we're really running out of time, so I really appreciate your time, and I think that geopolitics will keep being driven by where the people makes money.
On my part, I'm very privileged to host you guys. Fantastic, great views, great insights, and we want to be back next year with the same panel, with your permission. Thank you very much.
Yeah. Thank you.
That was great.
Thank you, Terrence. All right, next up we have Stephen Stewart, CEO of QC Copper and Gold, Inc. QC Copper and Gold is a Canadian exploration company focused on developing its flagship Opimiska copper-gold project in Quebec's Abitibi region. Please welcome to the stage, Stephen.
Thanks, Mike. How you doing? Good. Hey, everyone. Nice to be here yet again, another year in this conference. I want to thank Joanne for putting together such an amazing conference in a city that's very close to us, in a province that's very close to us. Of course, I'm here talking about QC Copper and Gold. As we say here, it's Canada's highest grade open pit copper project, and that's true. We're located in the heart of Quebec, and that's why we come here every year to fly our flag and tell the world how important that copper is, as all these gentlemen here were talking about, and they talked about geopolitics, and that's why we're in Quebec. My group, which I'll talk about in just a minute, a broader group, is made a bet, a 10-year bet on Canada, and specifically buying copper and gold projects. And our flagship that we have developed over that period is, as I said, a company called QC Copper and Gold, which owns the Opimiska. The Opimiska itself was operated by Falconbridge, which is now, of course, Glencore, and it produced a significant amount of the copper and gold that came out of Eastern Canada in the 20th century, came out of this mine, came out of this jurisdiction, which we're in the process of trying to give new life and reinterpret it and reinvigorate the community, the province, and Eastern Canada in terms of producing copper and gold again in a new format in terms of open pit. Before I get into the specifics of copper and talk more about the Opimiska and why you should buy shares of QC Copper and Gold, I'll talk a little bit about who we are. We are a part of the OR Group, which is a Toronto-based group. OR Group itself is private. I'm the sole shareholder. and have been the key driver behind it. You see 7 publicly traded companies there and 1 private company there and a whole other private opportunities that we have acquired over the years. We're a very entrepreneurial group that started with 3 people and have grown to a team of probably close to 20 people now who work for us, but there's a lot more people that work for us on the project level. But we're a group, we're a vertically integrated group of entrepreneurs who acquire, develop, raise capital for projects. We identify an asset like the Opemiska. We identify an individual like a James Sykes, and we get behind them and we develop them. We build a company. We've got uranium in the Saskatchewan basin with baseload energy. We've got nickel, which is very unpopular right now in Manitoba, but we're going to double down on nickel. We've got gold in Ontario with Mustango River. American Eagle Gold has been a high flyer of late. We're a $100 million company there. We got Teck as a 20% shareholder. QC Copper, again, incredibly high-grade project. ORCAP, which is our public company expression of what the OR Group is. It holds equity positions in many of these companies here and others. We build positions in arm's length companies. It just gives us another tool in our tool bag to come at different challenges. And challenges I mean by acquiring and developing projects. And then Cuprum is analogous to QC Copper in the sense that it's the largest copper resource, but it's in Ontario. There are a lot of similarities, analogs to what Cuprum is relative to QC Copper, except it's a little earlier stage, but it's very, very large, nearly 2 billion pounds of copper on the rail, on the road, etc. We love good infrastructure. And then last but not least, although this is an outlier in our group, it's a Wally. And those following the gold space probably saw recently a drill to 45 gram per ton gold intersection over 35 meters. Not too bad. In fact, that's world class. So those are our group, and why I am talking about that group, because one of the themes that I've heard time and time again here is your ability to finance your activities. And that's something that we have shown time and time again. We've raised nearly, in fact, over $200 million in equity in the last 3 years. We've done $200 million in joint ventures with companies like Teck, Newmont, Agnico Eagle, etc. So we're a group that I think is credible, reputable, hardworking, honest, long-term shareholders, meaning we haven't sold a share in any. I'm the largest shareholder in virtually every single one of these companies. I've never sold a single share. I really hope that changes one day, but the point I'm trying to make is we are aligned with shareholders in what we do. We don't take on projects that don't have the ability to go to the end, and that means be a part of something that goes into production. We don't need to put it into production ourselves. We just need to be a part of it. So that's who we are. We raise capital. We develop projects. And I have to note that one of the common themes here across all of the talkers here is copper. Last year it was lithium. A year before that it was uranium. But now copper is back. But I have a little question mark there, because 30 days ago it was certainly back, maybe even less than that. It hit $5, and then it became the commodity du jour. We had Jeff Curry from Goldman Sachs sort of top-ticking his calls. Jeff's a smart guy, but has had some bad luck on his calls lately. Nonetheless, the why I put this up there, and I hate talking about the commodity because really you got to get involved in the details of the project, but what I think from a retail investor standpoint, which is absolutely critical, is you have to have the narrative behind you. It's hard to make money in a $2 copper environment when, even if you have a world-class project. So I think what investors need to know is that even though copper has pulled back in these last 2 weeks, which is totally healthy and normal because it ran too fast, too hard, the narrative around copper, and it's not just a story, but what people are talking about on Bloomberg and CNN and BNN and all that sort of stuff is that the supply and demand fundamentals of copper are real. And so the more they talk about it on those big outlets, the more that your average general investor, whether that's retail or sophisticated institutional investors, start thinking about it. And they should think about it, because the industry has literally destroyed capital for the past 13 years. There's exceptions to the rule, quite a few, but as a whole, on the aggregate, that's what happens, to the point where we are so cheap we can't be ignored. And I think the realities of how much metal we need to meet the demands, not just of our everyday life, but of these new themes, whether it's electrification, whether it's the power generation and supply to AI, whether it's, unfortunately, war. But we need metal. When we find it, it's deeper. it's lower grade and it's more expensive. So there's going to be a price run in metal. The question is, can we keep up with the margins? Where I think you should pay attention to QC, I use it as an example here, even though, and others like us, the only people in the junior space that have moved on a share price perspective in the last little bit have been the high flyers. Companies like Awale, and I said hit that drill hole, or companies like American Eagle, which are drilling phenomenal drill holes, but everybody else who's in the sort of unsexy part of the Lassonde curve or doing infill drilling have just remained flat. So today you can buy a share of QC Copper at the same price as you could have before we published the highest grade copper resource in Canada, before copper ran north of $5. So the junior sector lag is still there, while I do think the indicators indicate that these prices are going to catch up. So there is an opportunity for people to buy value. And again, what is value? I think, again, I'll emphasize, this is the Opemiska relative to big company operations. And you can see there, we are at 0.8% copper, okay? If I were to cheat and use copper equivalent, which would include silver and gold, which are metallurgically sound in our calculations, because this was a former producing mine, we're up at 1%. Now, how many deposits in Canada that are open pit are 1%? Well, the answer is there are none. They used to mine that 15, 20 years ago in Chile, but now those mines have been degraded. So to have a 1% open pit copper deposit with access to infrastructure, base metal is so important to have access to infrastructure. We are on the rail. We are on the road. We have an airport right next to us. We are in a mature mining camp. This project is unique. It's overlooked, and it's undervalued. There's a reason it's undervalued here. I'm going to be the first to tell you, and I'm going to explain why. But the reason it is discounted is overcomable, and that's something that we're working very hard on to come through this year. But I just wanted to indicate, this is what the resource, we published this highest grade resource out in January of this year. It's 2.2 billion pounds, and it's going to grow. It's going to get bigger as we evaluate the underground scenario. Everything you see in blue is an underground scenario that has been excluded from our resource calculation, so that's not included in those numbers, but we know it's there. Why do we know it's there? Because it was mined in a previous generation. The mine shut down in 1991 when it was operated by Falconbridge. But it's a very high quality resource based on a significant, 1 million meters of knowledge have gone into the construction of this resource. 100,000 meters of it was done by us. Go to this slide here, because I think what we need to point out here is why are we a $30 million company? Why is QC Copper a $30 million company when it has a 2 billion pound 1% copper deposit in the middle of Quebec? It's very simple. It's social license, okay? And that's a critical aspect in any project one is going to develop in Canada or frankly anywhere these days. But because we are in a brownfields environment, because this was a world-class mine, there's a town. There's a town right next to the deposit. And the question is, can QC Copper develop this mine? And the answer is yes, we can. But we have to do it very carefully. We have to do it in consideration with the local people. And the local people are primarily those who live in Chapet. And Chapet is a very beautiful town, a long history. Anybody who lived in Chapet, their uncles and their fathers and their mothers, all are associated with the mine. It's a mining culture. When the mine shut down in 1991, there was 5,000 people. Today, there's about 1,300 people. And without any injection of economic activity, I expect those numbers to continue to decline. However, they're fortunate enough to have this deposit, sizable high-grade deposit at their doorstep. Are we going to have impacts on the town of Chapet? Absolutely. There's going to be noise, dust, traffic. The minimum wage is going to go up. The bakeries are going to have to pay the bakers more money, et cetera. So there are all sorts of impacts that need to be considered. But at the end of the day, the net is going to be an extreme positive. We're going to give the townspeople a reason for their children to stay. I think that's the most important thing, is that they see a future. If we can give them a multi-decade potential, multi-generation operation at their doorstep, that reinvigorates the town of Chapet. most people will know an analog. Everybody says, you know, who's done this before? And I've seen at least two out of the three OTCQX guys, and obviously a fourth, Brian Coates. So we got Brian, we got John, we got Bob, and who am I missing? Sean. All those guys I mentioned, if you follow this industry, you'll know the Malarctic, which is a perfect analog of what this project is and what we point to. Now, how are we going to overcome these challenges? Well, obviously, that's getting the town on side. Now, first of all, I can tell you anecdotally, they are on side, because if they didn't want us there, it would be over. You know, we have been invited into their community to build this mine. Now, we don't take that invitation for granted. We pay very close attention and we listen, and we're there at least twice a year on a town hall basis, and every month we're in the mayor's office giving them an update. So they want us there. This year, part of our core focus is going to be officially getting them there, getting an agreement, a formal agreement in place with the town. That's something that I'm very interested in achieving. I think that will help to mitigate the perceived risk of whether these guys can build that mine. And if we do overcome that hump, I don't think the days of us being a $30 million market cap company should be behind us. Then, of course, we need to move forward to the engineering. We've done this resource, and the resource is just a function of the geology. We have to show that we can extract this resource in an economic basin at a good margin. But I always say that the highest grade open pit copper deposit in the middle of Quebec, on the road, if that doesn't work, what does? It's a simplistic statement, but it's a good place to start. And we'd honestly, I don't think there's a project anywhere, certainly not in Canada, that has this access to infrastructure. What else are we doing? Growth, okay? So aside from the engineering, we need to grow this deposit. The good news is 2.2 billion pounds is only 2 out of the 4 mines that Falconbridge operated. There is the Cook and the Robitaille. And if I go back to this slide here, if you squint, you can see on the west side, those are the two deposits where all the copper resources are located. On mines 3 and 4 just to the east of them. They're very proximate. Those are the 3rd and 4th mine. We are rinsing and repeating the data process in terms of understanding the geology, validating the historic geology. Then we're going to introduce a drill program which is going to expand and get bigger. Bigger is usually better in the mining industry, certainly in this instance it is. And then I'll note beyond that, in this district, in Chibougamau is a district there. You can see those are all other mines. You know, they're not necessarily our mines, but there's other deposits there. Deposits which we believe are not standalone, but certainly become accretive to us if we can define that we've got one of the highest grade deposits there that justifies a mill, and that changes everything. So, as my time is done, I'll quickly note, I'm going to steal an extra 30 seconds, and I'm just going to tell you that one of our private companies is a company called Cuprum. Okay, Cuprum means copper in Latin, and Cuprum is analogous to the Opimiska. So everything that I told you in a nutshell there about Opimiska, brownfields, access to infrastructure, railroad, power, etc. We acquired Cuprum out of a distressed situation at the end of last year. QC Copper owns 10% of it. And we're evaluating our options. It's something that shareholders should keep their eye on in terms of mergers and acquisitions for QC Copper. That's something that I've said in the past, that we may very well look to roll that into QC Copper. We have some drill results coming out for Thierry, but it would be awfully nice to have 4.5 billion pounds of copper within one company in Eastern Canada. So that's, again, something speaking to the ore group, speaking to what we do. We're acquirer of good assets. We solve problems. We raise capital, we put good people in charge of our projects, and then we put ourselves in front of the wave, the changing paradigm, what's coming to the mining and metals industry. I don't know if it's going to happen this year, but I know it's going to happen in the next few years. Maybe I'll be surprised, maybe it's this year, but when it does, our group, QC Copper, Ore Group, and all of our companies will be owning great assets, well-financed in the best mining jurisdiction in the world, which is Canada. And this is a forward-looking statement at the very end, and if anybody wants to reach out to me and ask me any more questions, again, my name is Stephen Stewart, and I'm the CEO of QC Copper and Gold. Thank you.
Thank you, Stephen. All right, next up we have Yves Rougerie, President and CEO of Vision Lithium. Vision Lithium Inc. is a junior exploration company focused on exploring and developing high-quality battery mineral assets in Canada. Please welcome Yves.
That's way too much walking for an old guy like me. Bonjour à tous. Hello, everyone. I'm here to present the information on Vision Lithium. We were here last year, and it was a pretty heady year last year where we had a project that had a very high short-term potential, which with a tremendous profit windfall potentially. What a year, or what a difference a year makes, where the price of lithium went from $7,000 and $8,000 a ton down to below 1,000, excuse me, which basically changed all of our makeup and changed everything that we want to do going forward now. The forward-looking statement that everyone knows, and I would be the qualified person as a geologist. Our board of directors is made up of myself, Victor Cantori, that many people know is a well-known promoter and mining executive with Amex Exploration in particular. We have Mr. Bryce, who's a long-time senior executive in the mining business in Quebec as the founder, the original founder and board member, and Scott Bevins, who is a past president of the PDAC. The capital structure of the company at 260 million shares and a low market cap at this point of just $11 million. So a lot of upside to be considered. We're going to look at the properties that we have. We're going to talk about two of our lithium properties. We have a series of base metal type properties in eastern Canada, in Quebec and New Brunswick, but our focus is on the lithium properties. The two that I will talk about are the Searmac lithium property principally, as well as the Godslift property in northern Manitoba. In the James Bay area, we all know, we've heard many of the talks today about these monster deposits being discovered, and there's three main areas, as we can see on the map. To the north is the Corvette trend, I guess we could call, and in the center is the James Bay lithium along with the Nemaska lithium and critical elements, and to the south, just north of Chibougamau, is where Sayona's Moblan deposit is, and we are located just 40 kilometers west of Moblan in the same rock units. A close-up map showing the infrastructure or the road access. Chibougamau is in the bottom right of the map, and Chapet, that the talk before me was just showing, are both, we can access our property from both of them, and makes transportation of ore out of the property or towards other milling or whatever very easy. We're only 150 kilometers from the Nemaska lithium properties as well. So from an infrastructure standpoint, we consider the location quite good, and we're so much further south than most of those other projects. As we can see, within 10 kilometers or 15 kilometers of the property, we have existing lodging, hydro, and road access. This Searmac property is dominated by one dike, one pegmatite dike. It's called number 5, and it's been known for 50, 60 years. It's been worked on 2 or 3 different occasions during that time. The most significant one being by Nemaska Lithium about between 10 and 15 years ago. It was one of their 2-star properties along with the Nemaska Lithium property, and they advanced it to the point of establishing resources and actually preparing it for possible bulk sampling and extraction. At the time, and when we redid the resource this year, based on most of the information from 2013 and 2018, the dike itself is a very significant structure, but the mineralization is limited to a small area of only 200 meters. And we had, based on the geological model of the time, as you can see, approximately 300,000 tons of close to 1.4% lithium. Last year, when the prices of lithium were sky high from late 22, early 23, we decided to try to extract a bulk sample and go towards a mining permit for a quick extraction program, because the dike is already prepped for mining. It's basically an open pit or a quarry operation, and there are very few other programs or projects that are available for that. And so we had a PEA done, and I'll just show you here the physical location of the deposit and what the PEA program proposed. I won't bother showing you the numbers because based on the crash in lithium prices, they don't fit what is the reality of today. Excuse me. The property itself is 7,500 hectares in about 155 claims. As you can see, most of the known occurrences of lithium are all these red dots on the western side, so the number 5 dike zone, as well as the east zone a little further to the northeast, which is, that trend is about 5 kilometers long, and we believe that there's potential for spodumene pegmatite dikes over that entire course. Recently, we've been trying to review the historical information to ascertain favorability and other parameters for the occurrence of fertile dikes. And so we've looked at the structural model and had a PhD guy looking at that. And his conclusion is that the dikes are following a Riddell type system where they're reactive to the compression, north-south compression on the entire Frotette to Evans belt. And so that is almost north-south, and so the Riddells would be in a northwesterly to northeasterly 20-degree or so system. And that seems to fit the pattern of the dikes that we have. In this case, you can see over about almost 2 kilometers the extent of the dike occurrences. This is a shot where the main dike, dike number 5, has been extensively drilled, but the numerous dikes that we can see further to the east and actually to the west have seen very little drilling. So everybody always, and we were guilty of the same thing, we're always interested in trying to advance the number 5 dike because it sits well above ground and is a perfect candidate for early and easy extraction. So that's what we were doing last year. This year, because of the lower prices, that program has been put on ice. And what we're looking at doing now is actually going back to basics and expanding the resources that we have by trying to define the better targets within all the other dikes that we have and drill testing a number of them. And there's a great resemblance between the geology that we have with many of the major deposits that we see right now, be they Moblan, Galaxy, and others, where they're dealing with stacked dike systems. So they're, in many cases, low-angle dikes that are stacked one above another. And this is what we see on our property. And we have at least 12 known, but we believe there's many more. And there's likely swarms of dikes in between these dikes. And so it's just that there's been very little work done on those things. So we believe that we're in a position now to move the company and the property ahead in a very striking fashion by drilling many of those targets. 5 kilometers east of our main zone, we have what we call it is the east zone. That one was pretty easy to name. And it also is an occurrence of multiple stacked low-angle dikes running between 1 and 1.5% lithium. These dikes are smaller. They're only in 3 to 5 or 6 meters thickness, but they're closer together. They're only 20 and 40 meters apart. So when you get a stacked system like that, you can end up with a potentially pitable occurrence. So this has been drilled not extensively at all, and this is another place where we could do a lot of work to expand the resource on the property. This is the east zone. On the left side is these channel samples on the zones. There's some pretty good widths there, but because the veins or the dikes, I'm sorry, are very low angle, the lengths that have been sampled are not representative of the true width. They're just representative of the apparent width on surface. But still, the assays are of great interest. And they demonstrate, again, for us, that we have a system where over 5 and 6 kilometers, we have very significant lithium mineralization. So when we put that next to, say, Mobilan, which 5 years ago had 15 million tons, and today has 70 going on 100, we believe that the geology supports our assertion that we can discover significant mineralization going forward. Finally here, for the Sirmac property, we've done a lot of metallurgical work on the property, and as part of that, we were able to easily produce 99.99 lithium carbonate through the metallurgical work, which indicates that it's a very high quality ore, which can be processed to produce excellent quality finished product for the battery industry. Our second major lithium property is the Godslith property in northern Manitoba. It's a bit of a weird name. It sounds like a German rock band or something, but it's actually the lake is named God's Lake, and somebody just took lithium and put it on and made Godslith out of it. The property is located east of Lake Winnipeg. It's about 300 kilometers or so from Snow Lake Lithium. We're north of Frontier Lithium on the Ontario side, excuse me, and the occurrence is right on the edge of a lake. So as you can see, there's a winter road system that goes to it, which is 230 kilometers long, which is operated yearly by the government to provide for all of the First Nation communities that are found on the east part of the Manitoba province, east of Lake Winnipeg. There's a huge amount of people that live in that wilderness that have no full-time road access, and they basically all live along lakes and have to do fly in and fly out for all of their needs, health and otherwise. The property was, excuse me, worked by Inco 60 years ago. This is the interesting part. And Inco, back in those days, Inco used to do a lot of wildcatting. They would just fly around and drop down and pull a drill out and drill holes. In this case, they drilled over 2 years, 25 holes, and defined a deposit, or a dike, which was mineralized over 2 kilometers in length. And the dike, in general, is about 10 to 15 meters wide, but the continuity of the mineralization is quite striking, as you can see from the results on the right-hand side of the screen. On a longitudinal section, most of the holes were drilled mainly to a depth of about 400 feet. Only a few holes were drilled deeper than that, and the best hole that they had was drilled down to 800 feet, and it ran 12 meters 12 meters true width of 1.48% lithium. So we believe that the potential for this deposit to continue down economically down to 1,000 or 1,200 or even more feet is quite good. Back in the day, a resource was compiled which came out to 9.5 million short tons at an average grade of about 1.2, using a slightly higher cutoff grade. We think that it's a property that could go to 15 and maybe even 20 million tons. It's a very interesting property. We have an issue with the property, which is that the First Nation village of Mantosibi, Cree Nation, is basically blocking all mining development in its area. So over 100 kilometers or so surrounding the village, no one has been able to advance any exploration programs to date. We've had the property now for 4 or 5 years, and we've had several meetings with the band, but have not been able to start an exploration program on the property yet. Obviously, if and when we can get that exploration permit agreed to with the Mantosibi tribe, we would quickly go in and repeat the drilling and try to repeat the resource from 60 years ago, which is just waiting around for someone to advance it. It's a very interesting project. It's probably the second or third best pegmatite dike, spod pegmatite dike in Manitoba. And at some point, someone told me they thought it was in the top 10 or 15 projects in the country. Of course, that was before Patriot started finding stuff, and Winsome, and things like that. So this year, we're trying to reboot the company and get ourselves back into a good place. We think lithium, of course, is probably the best investment this year in the mining industry, because it's gone down so much that even the large, high-quality companies have dropped by 50% plus, and the juniors have gone the same way. So we think that the upside, when lithium will come back, and it will come back, and it won't be that long, will be quite significant. So in our case, this year we're concentrating obviously on the Sirmac project, where we want to work. We have a field team on the ground right now, working on the structural geology and the morphology of the dikes and their attitudes. We're doing handheld XRF evaluations of all these dikes in comparison with the main dike, and basically looking to vector the spodumene, or vector our work towards spodumene fertile dikes amongst the large batch of dikes that we have. Then we would drill some of these targets starting by the late summer, early fall this year. We're also doing baseline environmental work, and we will continue to do so. The Godslift project, we would continue to work on the potential to negotiate an agreement to access the property, and if we do, we would clearly work on that. I thank you very much. I've passed my time.
All right, that wraps up the individual presentations for this afternoon, and we will conclude this afternoon's session with a panel. And the panel is entitled Uranium Future Superstar, and it's moderated by Matt Gordon of Crux Investor. Please welcome the panel to the stage.
Hello, everyone. We are going to talk about uranium on this little panel of ours. And I think feedback from you guys is that you spend a lot of time actually having to explain the macro thematic around supply, demand, and all the geopolitics. So, and that's most of the meetings that you're attending. Is that fair to say, right? So why don't we follow that lead and assume that not everyone here is a uranium buff or knows what's going on out there, and maybe start with some of those questions. Okay, first of all, let's get you to introduce yourselves. Why don't we start over there with Chris?
Sure, I'm Chris Frostad, President and CEO of Pierpoint Uranium. We're an exploration company operating in northern Saskatchewan, Canada.
Troy Beaujolais, CEO of Atha Energy. Similar to Chris, we're a uranium exploration company operating in the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador.
Hi, Jeff Smith, VP Corporate Development and Commercial at Denison Mines. Denison Mines has a diversified portfolio of assets within the Athabasca Basin and advancing towards initial production next year, and our flagship Phoenix asset targeting a 27-28 production.
Brilliant. Okay, so if those not aware of what's going on in the uranium, super exciting time at the moment. It seems like great price recovery in the market caused by a number of different factors. So I'm going to get each of you to maybe tackle some of those topics. So I'm going to start with on the demand side, Chris. What are you seeing out there? Why is it so exciting in the uranium space at the moment?
You know, I'm going to ask you to repeat that because I remember we were having some trouble with this yesterday. I'm having trouble hearing you with the echo.
Again?
Yeah.
I could, yeah, okay. Demand. Explain the demand drivers for
the demand side on uranium. Well, what we're seeing in the reactor space, by all means, over the last 10, 15 years, we've seen a lot of shift in terms of the attitude towards nuclear power. 10, 15 years ago, back when Fukushima got taken out and Japan lost 10% of the world's nuclear fleet, the world was still pretty cautious around nuclear. And what we're seeing now, the big shift we've seen over the last 10, 15 years is that the world is really seeing it more as now a solution to the green green energy issue and its as a truly sustainable energy source. So we're seeing countries all around the world starting to put reactors into place that they haven't before. We've seen countries like Australia now, who's never been allowed to turn on a reactor, now turning around in terms of their attitude towards nuclear, and it's become a real issue now with more types of reactors, small modular reactors, micro reactors, and the like. So that as we look out over the next 10 years, 15 years, what we now see is that the demand for nuclear is growing exponentially. The supply of uranium and fuel that's needed to fuel these reactors hasn't been keeping up, and which is the other half of the equation. And so we're in the business of trying to fill that void. There's definitely going to be a supply gap over the next few years.
Okay, so the hardware is being built out, but we need to feed that. So we want to talk about the supply side. I'm going to go to Jeff on this one if that's okay. Supply side.
Yeah, so I mean, it's not easy to build a uranium mine, and we know because we've been at it for a long time, and Denison's been in the industry for 70 years, but our flagship Phoenix project, we've really been advancing it, for close to a decade now. I mean, it was discovered a long time ago. Supply is constrained, and really this is an industry where there's been significant underinvestment. I mean, following the Fukushima incident in 2011, the industry really saw one, shutdowns of existing supply, but very limited investment in building out that next leg of supply to feed the new generation of reactors that are all coming into market, as mentioned. And I think one thing that's unique about uranium, when you think about other commodities here, a lot of the new supply is in the hands of the majors, established producers, massive balance sheets that are building out the next in line. And uranium's not the case. I mean, the existing producers that are the largest producers do not have a pipeline. Cameco, they have not developed a new mine in years. The sources of new supply that the market needs to meet that demand is in the hands of developers, and doing it, for the first time, or really kind of greenfield projects, which certainly should be a little scary for an industry. And I can tell you, in speaking to the utilities who we're ultimately selling our uranium to, they've identified that as a key risk in the market, and they're certainly willing to find ways to help support and bring new supply to the market.
Right, okay, so that's some of the supply issues out there. Going to go to you, Troy. I'm confident that you'll be able to answer this, which is around the sort of where the supply comes geographically, because it's not just, believe it or not, it's not just the Athabasca Basin we're focused on. Talk about some of the other jurisdictions and some of the issues they're facing.
Yeah, I think what we're seeing and what we've been talking about in the uranium space for a while, and what's really materializing right now, is the emergence of a bifurcated uranium market. You look at the imbalance on the supply-demand side, not only globally but then jurisdictionally. About 70% of the demand comes within OECD nations. Okay, only about 24% of that supply comes from those same nations. Okay, so you have the dominant production center in the uranium space that's emerged over the last cycle being Kazakhstan. And what we're seeing in Kazakhstan is that we're seeing Rosatom-Prom, we're seeing CNNC move closer into Kazakhstan. We're seeing recent issues in Niger with the geopolitical uncertainty and unrest there. Niger produces about 6% of the global supply, sells into Europe and into the EU, which provides about 27% of that demand profile. Right? And so what we're seeing right now is the true emergence of a bifurcated uranium market. And what that leads us to understand and believe is that the need for a continental supply of uranium to feed the North American market is extremely important. And I think all three of us on the stage here are all focused on North American assets because the U.S. currently is still the largest uranium market globally.
Right, okay. And we are going to focus on some of these topics here, and I promise they're important. We're not going to get into too much detail, but this is where you're going to make money by some understanding the background to the marketplace at the moment. So bifurcated market is important because we're seeing the split between East and West. We're seeing a lot of well, the Russian sanction of Steve, we can perhaps get into in a second, but in terms of where the production's coming from and where it's going, seems to be heading east, and in the west, where we need a lot of it, we're not seemingly capable of producing enough within the correct time frame, right? So can you maybe kind of expand on what maybe the geopolitics of all of this, Chris?
Sorry, again,
oh my
I'm having
goodness.
trouble here.
Yeah. Geopolitics, Chris, like an old people's home.
I come down to sit by you, yeah.
Okay, can you talk about the geopolitics of the space at the moment?
It says to where the geopolitics.
Yeah.
Right. So I mean, you know, definitely when we've got half of the uranium on the planet is going through Russia right now to be conversion and the enrichment side, and with the sanctions that are currently underway out of the U.S. That's caused a bit of a problem in the movement of uranium. It's definitely been, I think, to this point, rather fluid globally, because the countries that have uranium aren't necessarily the countries that are using uranium, and vice versa. So where you've got the United States that has 25% of the world's nuclear fleet, they really don't produce much, if any, of any uranium. And it's same with China. China doesn't produce a whole lot of uranium, but they're building reactors like mad people. On the other hand, Canada, Australia, Niger, you know, we don't use all the uranium that we produce, and it's been able to move around fairly fluidly. But certainly with the military issues going on in Niger, with the sanctions against Russia, half of the United States uranium right now comes from Russia and Uzbekistan and Kazakhstan. Kazakhstan is currently, who's the largest producer in the world, is now contracting most of their uranium to Russia and China. So it's really causing barriers now where the supply really can't flow the way it used to. And I think most of the traders and most of the utilities, as we're looking at, are more concerned about the availability of fuel as opposed to even the price of fuel, which is why we see you know, these sharp increases in the price of uranium, or at least those prices that we are witness to.
Right, and maybe, Jeff, come back to you on this one. There's been a real shift mentally with politicians, with the general public, and you know, in terms of the role of nuclear going forward. So maybe can we talk about what it was like up until only 2-3 years ago, and compared to now?
Yeah, absolutely. I mean, I think that's the biggest sentiment. I mean, I can tell you at many conferences now that have uranium panels. 5 years ago, there were not uranium panels, and that's part of the interest. And really, you know, post-Fukushima, there was a cloud over the industry, and frankly, that was not a nuclear disaster. That was a tidal wave that happened to hit a nuclear facility. But regardless, it really set the industry back and created this narrative that nuclear is not where we should be investing in our electricity grid. And I think now, obviously, there's been an awakening where climate change is a real risk. We need to manage it. And if we think about the options for clean energy, solar and wind are great, but they also are not necessarily suitable for baseload power. They are dependent on weather. So if we're trying to get off fossil fuels, which are a baseload source, uranium really is the only reliable 24/7 decarbonized energy source. And so with that awakening, and certainly, you know, following COP26 a few years ago in Glasgow, which was a seminal moment for the energy transition, it's really went from a situation where the nuclear industry has faced political headwinds to now it's benefiting from tailwinds, and it's no longer a political issue. It actually has bipartisan support. Like the U.S. Senate just unanimously passed, you know, a pro-nuclear bill. And how many things can the U.S. Politicians actually unanimously agree upon? So it's come a long way, all for good reason, and because of that, I really don't see it reversing. It's been endorsed as a key piece globally, and I think, you know, you say politics. This year's COP, there's a commitment to triple nuclear production by 2050, a goal signed by, you know, over 20 countries around the world. So it's not a North American phenomenon, it's a global phenomenon where nuclear is a key piece of the future energy mix.
Absolutely, and even if you take out the climate change factor and just focus on baseload energy, the ability to supply cheap, relatively cheap
it's competitive.
energy to the markets. That is, I think, is what people are looking at as well. Certainly, we saw that in Europe last 2 years for sure. North American market, given that we've worked out a lot of uranium's heading east, got relationships between Kazakhstan, China, Russia, etc., being established and routes to market being established, the West going to have to sort itself out pretty quickly. Troy, North American market, USA, Canada, your neighbors, you get on mostly. So how do you guys insert yourself into that kind of big US market?
Yeah, as an explorer, it's that robust kind of demand profile in the North American continent that we're looking at to the future, right? You look at the existing production that is coming out of North America, very minimal production coming out of the US. Even in the last cycle, you look at peak production, maybe 6 million pounds-ish at peak within the last cycle with every asset in the US that could be turned on. Right now they're under 1 million pounds. You know, on average, let's use round numbers, on average they consume 50 million pounds per annum. You look at the producing assets across the basin, you've got 18 million pounds out of McArthur, you have 18 million pounds out of Cigar Lake. Denison obviously is an emerging producer, NextGen is an emerging producer. It's still not enough. It's still not enough with the demand profile that's out there. And you know, it goes back to the overall picture, you know, we've went from having a perpetually oversupplied uranium market, perpetually, and within the last 18, 24 months that has shifted to now we're in a demand-driven market, and the likelihood of a supply disruption rather than a demand disruption is much higher. There's asymmetry there, and the asymmetry right now is putting risk on the supply side as opposed to the demand side. So it is, in our view, in my view, it is an unprecedented time in the uranium space right now, which is why, you know, ATH as a company and the companies up here today are so strongly focused on investing and bringing production forward in the uranium
you know,
space.
I think what's happened, though, we've seen, you know, and as we're in the development and the exploration side of the thing, is the machine went cold over the last 10, 15 years. And we're talking about a very small market anyways, in general, the uranium market in general. The price of uranium after Fukushima dropped to well below what it costs to produce uranium. So we saw mines shut down. We saw no exploration. We saw no development because the money wasn't there, the price wasn't there. And now as we come out of that cycle and the balance shifts and we now are looking for uranium, there isn't any. And you can't just turn a mine back on like that. It takes a couple of years. You can't just find uranium overnight. That takes a little while. Can't turn a mine on. So we're into this, we've come very quickly into this stage where on the demand side, people are freaking out. They're going, well, okay, now we need these contracts. We need to sign up for this stuff. I've turned my reactor on. I'm not allowed to shut it off or run out of fuel. And the likes of us are now trying to catch up and turn back on a machine that was allowed to go cold for 10 years. Yep. That's kind of where we're at right now.
Yeah, there's a lot of reasons to believe, well, in fact, those are all kind of good things in a way if you're investing in uranium. Let's say that selfishly, but not so good for society at large if we're trying to actually, you know, get to the point where we can provide cheaper electricity and energy for the market as a whole. So might be worth sort of talking about each of your companies and how you're kind of responding to this environment that we're in. So lots of reasons to be excited about investing into uranium, but it's still hard to get and access money. Maybe not for you, but for you, so when you look at the marketplace, the money's not flowing down into the exploration readily, like most exploration companies. I mean, Chris, given your
I mean, I think there's money is available, and I mean, and especially in Canada because we have a flow-through system that makes it easier for us to get money. But what's enough money? You know, and I've used the number with you. I think over the last 10 years in Saskatchewan, there's been about $3 billion spent on exploration for uranium, and during that time, we've found about 700 million pounds of uranium. Good for us. But that $3 billion was spent by hundreds of companies, and that 700 million pounds was found by 7 or 8. So it's very difficult to to continue that investment thesis. How do you attract money into that sort of an environment where it does require a lot of money, to find this stuff. It's not cheap by any means, and it's not quick. The rewards are huge, but the risks are fairly high as well, and it makes it very difficult for for all of us to get that serious money, the large money that it requires to do that. I know Troy's been flying planes over the basin for the last year, and the checks are huge, and that's just to get to that point where you can figure out where that next stage is. It's an expensive endeavor, and yes, there's been money there, but it doesn't come forever, and attention span is short, and people are looking for results that that aren't going to show up overnight.
So what do companies do? I mean, you guys have been quite, I call it cute now, I mean that in a good way, right? Where you've gone and bought pounds in the market, you've raised money to go and buy actual physical pounds in the market. Was that a couple of years ago, maybe 2.5 years ago?
2021.
Right, okay. So I thought that was a great move. You're one of the first movers of groups to do that. You've gone and done M&A. All of the things to kind of stay relevant while the spot price wasn't doing it for you, it kind of kept interest in the market, and you've grown. Certainly from when I first started talking to you guys, you were maybe 500 million. What do you know?
Probably less. I mean, we were threatening 3 billion, so just shy of 3 billion Canadian market cap.
So you've stayed relevant, but you've had to work hard at that. Now we're kind of in the last yards. What's the kind of next move for a company like yourself?
Well, I mean, executing on Phoenix is where we're focused. I mean, certainly we have a portfolio beyond that we're actively de-risking. We had an announcement yesterday about our Midwest deposit, but the focus it really is on Phoenix, and for those that aren't familiar, that's an ISR in situ recovery project in the Athabasca Basin on the eastern portion with road power. Really, we're advancing that project this year. So, I mean, last year we started long lead procurement. We're into detailed design, advancing project financing, though there's not much left to do there. But really this year is about furthering IBA-type agreements. We have a landmark one in place, but also trying to add that, and really finalizing the permitting. So we've been given kind of the green light by the province late last year that if we request it, we'd have our EAIS approved. We've kept it coupled with the federal process. We're working through our third iteration of information requests with the feds on the EIS, and then in parallel also working on licensing. So there's kind of an environmental aspect and then a licensing aspect, which the Canadian Nuclear Safety Commission oversees, and those are progressing along the timelines we've kind of charted it from the beginning, and that is to have that completed by mid-25, at which point we're looking to make a final investment decision.
Right, so and how much more difficult is it being a uranium company, because radioactive associations, than conventional mining? Are you under tighter scrutiny?
Maybe to some degree. I mean, it's a robust regulatory process regardless, and while the CNSC is an independent, call it, body from other arms of the government, it certainly draws upon expertise, especially with relation to Indigenous and environmental matters. So it is drawing upon really the full governmental review. I can tell you, it's detailed, it's rigorous. Yeah. But I mean, it's the path forward, so that's the one you choose.
But it's a clear path. It may be rigorous.
There's a clear path.
Right.
Yeah, and there's an open dialogue. We wish it moved faster, but no, there's an open dialogue, and that's how we've approached things.
Right.
Yeah.
Okay. And I'm just conscious of time. I want to give everyone a fair go here. Make sure you kind of came in slightly later to the party compared to these two, anyway. Ex-Cameco, is that right? You are?
Ex-Cameco, ex-NextGen.
Right, okay. But you sort of were able to kind of look at the landscape before you decided what to do. And as a consequence, you've raised a lot of money out of the gate, got a big land package, and you're getting after it. And how would you, do you think you timed it right?
Yeah, yes. That's a simple answer.
Yeah.
I think the timing, it was not coincidental. We picked the timing. The land package that we started with came together over the course of about a decade, through two guys that have had significant successes in the basin, got together with the capital markets team, and the timing was intentional. You know, and to the point, you know, the dollars were hard to come by in the uranium space for a lot of years. And, you know, there is certainly a renewed interest in uranium exploration. And we're seeing that, you know, over the course of about 18 months, we've been able to raise about $60 million into the deal. We've built up a land package that's 8.4 million acres. We've matured ourselves through acquisition. We acquired 2 uranium companies, Latitude Uranium, 92 Energy. As a function of that, brought in assets that are more mature than we started off with, which was the intention. And now we're at a stage where, you know, we benefit from, you know, you look at the timing of the asset that we're working on right now. That's Angulac, the Angulac project. 2011, Fukushima, maiden resource. The next year, doubled the resource. The year after that, doubled it again to 43 million pounds. And then, you know, the long night in uranium started. And so we're, you know, you can look at it 2 ways. We look at it from an opportunistic perspective, that we now get to benefit from that work that was done in the past. We got to acquire a uranium asset that we like, that we feel has significant scale, at a time when the uranium market is, in our view, starting to really run and get traction. So yeah, we really like the timing, and we think that it's a great time to be not only a developer, but an explorer in the uranium space.
Right, and obviously money's not trickling through down. I've said that a few times, and I think it's important to recognize that, because when you've got money, you think you're invincible, everything's going to work out just fine. Nothing ever goes wrong, but it does, right? So you've got Anglac, you've got Gemini with the NYSE energy asset. Where are you going to expend your time, energy, money? What's going to give you the kind of best return in the capital markets?
Yeah, best return. So we're taking an approach where we're investing proportionally along that build-up of an asset curve. Okay, so the most of our time and energy is going to be spent at Angulac. Angulac, 43 million pound deposit, building, expanding on that, about 40% of our budget. Okay, 30% is going to be spent at Gemini. We like Gemini. It's a new discovery corridor within the eastern edge of the Athabasca Basin, for which there are very few. We like that. We like the upside that we see there. And then what we're also doing is backfilling our pipeline of exploration targets through continuing to invest in our greenfields projects and build up targets out of a substantially large exploration portfolio, which we also like. You know, being able to pick the best targets out of a substantial land package is something we like. But in addition to that, we're leveraging exposure to discovery through farm-out agreements. We've got about $30 million in farm-out agreements on the books right now, where we retain exposure to the upside through those agreements. And so we're managing kind of our balance sheet and our risk through that process. Fantastic.
And then, Chris, you're quite similar with your portfolio. You've got partnerships with Cameco and Orano, haven't you?
Yeah, we've got 2 joint ventures with Cameco and Orano. And we've relied on them quite heavily over the years. They're quite important projects to those 2 companies, so they've continued to support them financially. But what that's also allowed us to do, because we've been around a little longer than the average bear, probably, well, at least as long as Denison anyways, but we have all of our projects, for the most part, were secured over a decade ago. And we did a significant amount of work on them early on. And when the price fell out from uranium, we were in a good position to be able to set them aside and kind of keep them at abeyance. So, you know, as we come back into this market now that's a little more flush, and we've got capital to deploy on them, we're able to bring them out. And they were projects we were able to get our hands on when we weren't being crowded out there. We were able to take our time. We took a few years before we even staked anything, looking at old data. And now we still hold those projects. They're in great situations. And we've also got a lot of data now that's happened around us in the meantime. There's been significant work done in the area around us that we're able to lean on. And our projects look a lot different than they did when we first picked them up because of that. So our focus right now is taking all the money that we have as we raise it and focus it purely on kind of the last stage of exploration, and that is get the drill out there and start lining up and hammering our best prospects and finding that next deposit.
Right. So I think what was explained today is that hopefully a little bit about the market and the market drivers, why this is just the beginning of quite an exciting run for uranium. Certainly for investors, it's something I think you should be looking at still. Some Rothschild fund manager said to me last Friday, said, uranium and copper, that's all we're interested in. So I think that's pretty good advice. Lots of different strategies as to how to come at it, different sized companies, all very, very good companies. I quite like them. So appreciate your time today, gentlemen. Thank you very much.
Thank you.
Cheers.
Thank you.
Thank you, Matt. That was fantastic. Another great panel. And Matt, I really want to thank you once again for your support of the event from the very beginning. You've been a fantastic ally, and we really appreciate it. Well, what an amazing day we've had. And thank you to everyone for your presentations, your time, and your attention. I'd like to thank all of our sponsors for the event, in particular, Kinterra Capital, our first ever green sponsor for the Battery and Critical Metals Day. Now, before signing off for today, I would just like to remind everyone who came to our fabulous party last night that we do have a cocktail party from 6 o'clock to 7:30 back in the Diamante Lounge, and then we'll see you later on this evening at 9 p.m. to midnight in the Connect Lounge for the After Dark event. Thank you, everybody, for a great day.